Nearly 6 months ago, when for the first time I decided to invest in Canada stock market, I never thought that I could turn my $50,000 saving, which I had spent 3 to 4 years to gather it, into $300,000. I always thought that for entering the stock market, one should be a businessman having like offices in high-rise buildings, always going with, official attire. It's not like that. You don't even need to buy any course or any, take part in any classes. So I decided to make this video and put everything that I learned in the last 6 months in it. Now, I know that the video is long, so that's why I'm gonna put sections for each chapter underneath the video in the descriptions. So you can click on the section that you'd like if you feel like the video is long, or you can watch it with XX speed. But I highly recommend you watch if you're a newbie or newcomer or a beginner like me. Also, something else here is please don't forget to leave comments if you have any criticizes, if you have any questions. I'm more than happy to answer any question that I can as much as I can. And that's it. So without further killing time, let's jump right into the video and see what I've prepared for you. So I'm just making this video in this windy night. Anyways, welcome again to my video. In this video, I have tried to put everything I've learned since 6 months ago when I started to invest in stock market. It is going to be a long video, sorry for that, but because I want it to be as comprehensive as possible. Also, as you can see, I have included the logo of Questrade because that is my preferred broker, and I'm going to tell you the reasons why. And also, as you can see, I have put the flag of Canada. It's because this video is actually Canadian based, meaning that it is based it is actually meant for the Canadian market. However, there are some good general information, particularly when I'm talking about the terms and frequently used words in stock market. Okay, so let's go and see what I have prepared for you. Before actually starting, let me give you an abstract of what you're going to see in this video. So very first, prerequisites, which could be physical and non-physical, which I'm going to talk about. Then you're going to see, as I said, you're going to we're going to review most frequently used terms and words in stock market. Then we're going to have some of the words or some of the definitions require more explanations. So that's why I decided to explain them in more detail and with examples. After that, we're going to get familiar with stock exchange markets in Canada and brokers also. And I'm going to talk about reasons why I chose Questrade. Then we're going to see how you can open an account in Questrade and transfer money from your bank to it. I have chosen Tangerine, and I'm going to explain the reason in the video, but you can transfer from any other bank. Then we're going to see how it is to transfer, if you have any account in another broker, how it is to transfer it from that broker to Questrade. After that, we're going to see some stocks in my watch list and the sources used for this video. Actually, I have created three other videos about the watch list, my watch list, penny stocks, and anything that I have in my watch list. So I'm going to put the link in the description. Then this part is going to be the most, I think the most interesting one, because we're going to see my account live in Questrade and how you can put large orders in it without paying any ECN fees. Okay, and also the iPhone app of Questrade. And last but not least, we're gonna have a live view of Yahoo Finance and iPhone Stocks app, which I use mostly to monitor the stock market. Okay, so that's it for this introduction. In the next section, we're gonna talk about the prerequisites of entering stock market here in Canada. Okay, so as I mentioned, prerequisites could be physical and non-physical. So let's first talk about the physical ones. In Canada, you need something called a social insurance number or SIN card, which is something like that. It usually has nine digits, 3 by 3, and it is not an insurance like a health insurance type of thing, and it is also not an ID card. It is just a card that shows that you can do some certain stuff, such as opening a bank account or getting a job, and it is in a sense it is an ID card, but it's not treated as normal ID cards. Okay, it is an ID card that shows to the government of Canada that you basically exist in the system. Okay, so yeah, you can call it an ID card, but not a normal ID card. Okay, so ID cards in Canada, you can use your driver's license, you can use your PR card, you can use your Ontario photo card, which I'm gonna give you an example of each. So here's the PR card, and by the way, if you lose your PR card, they're gonna give you a paper, so make sure to guard it safely. Here's an Ontario photo card, which is a new way of identification that Ontario has come up with. Because before, people could just use their driver's license, but some people may not be able to obtain a driver's license for whatever reason. So Ontario has come up with this solution so that you can get this photo ID if you don't have one. And the last one is this actually driver's license, which looks like something like this. Okay, so the next prerequisite, which is very important, is for you to have your own PC or laptop, actually your own computer. You can use your cell phone to open an account, but to be honest, I'm not comfortable doing that. However, Questrade allows you to open an account through their app. Okay, so and also something to mention here is do not use public networks, or when you're in a library, do not use, even if you have your own laptop or PC or phone with you, do not use them to be connected to any public network such as Teams or library, whatever. It's because of your own safety. Any public Wi-Fi can be monitored by the admins, which is a good thing. Admins are not that bad, but it also can be monitored with people who may have found some vulnerabilities in that network and are connected to that network. So that's why I say, if you have a private network and if it's your own laptop, it is far better than going to a library or using a public Wi-Fi. So be sure that you have your own. Definitely you need to have a bank account. Usually it's better for you to have a checking account, because you're going to just transfer money. If it is a savings account, some banks allow you only one transaction, and the other ones are going to be charged with $1.50 or whatever. And before making this video, when I was just preparing the PowerPoint slides, Questrade mandated you to have $1,000 or more to be able to invest in the stock market, but now that is not mandatory anymore. So you can start with anything. Okay. Hopefully recently they have changed. And as I mentioned, I bank with Tangerine, so that's why I chose it for this educational video. And I'll be also going through the reasons why I like Tangerine. Okay, the next thing, now we're gonna see the non-physical prerequisites. The next thing, which is very important here, is time for searching. I don't believe in any sort of course or educational packages or whatever. If they are free, you can use them, like what you're doing now, right? But you don't need any course. Also, I'm against day trading or swing trading, which I'm going to explain later what they are. So for now, just know that, and I'm going to make videos, 80%, 70%, 80%, according to statistics of day traders and swing traders will quit after 3 to 4 years of, day trading. And also, they don't have any consistent income. They have some income, but it's not consistent. If you see a person who is day trading on YouTube and they show you their trades, probably they don't out of every 10 trades that they do, 8 of them which is loss, they don't show you the losses, they just show you the gains. That's why. Always, again, it's my opinion, anyone can have their own opinion and it's respected, but always try to be a long investor, which we're going to see what long investor means, meaning to just buy the stock and wait for the company to thrive. Okay, the next thing is kind of like funny, but like in Persian we call it liver, in English they call it heart. So you have to have a risk-taking heart. This stock market is built for people who can tolerate risks. The very first move that you do in stock market, you accept some risks. And by risks, I don't mean that you have to take any risk. No, there should be some red lines, which again, as I said, I'm going to make a separate video about this. But for now, just know that these two are the most important ones. I don't know why I didn't bring them in the first place, actually. Because so many people are not tolerant. I'm not sure if you have heard about it or not. There's something called economics or behavioral economics, in which psychologists like study how people behave financially, okay, how they make their investment decisions. And this becomes important when you see that, for example, a stock goes down and everybody panics and will sell their equity. So this is not how you should be. If you don't have if you cannot tolerate risk, then entering stock market is not an option for you. Okay, so this section is finished, and in the next section we're gonna go over the most frequent terms and words used in stock market. Okay, so in this part of the video, we're going to go over the most frequent words used in stock market. I don't want you to stress out and just memorize all of them, but the ones that I have made in green are very important. I want you to, if you can, take a screenshot, or if you have like a pen and paper handy, you can just write them down because we're going to need them, okay? So the very first word, online brokerage, is something between you, is a company between you and the stock market that allows you to buy and sell stocks, such as Questrade. Okay, before it used to be by telephone, but hopefully after the advent of internet, there are so many of them, which we're going to go over later in the video, but that's what it means. Bourse is another term for stock market. This word is used mostly in France and Germany, but also in Persian we call it bourse. Okay, bullish market and bearish market. So you may have heard about it. As the picture suggests, if you can take a look at the picture, a bullish market is the one that you feel the stock price or the market in general goes up in price, and the bearish market is the one that you feel goes down. Okay, and the way you use it is like, for example, they say I'm bullish on this stock or I'm bearish in this stock. There's another word, I think I have it, which is called neutral. Neutral means neither bullish nor bearish, okay? Over-the-counter, OTC market, a market in which investors trade, so I don't have this, without a centralized exchange authority, meaning that they trade with each other, so there's no, there's no body that there is actually a body of governing, but the first of all, the risks are higher. Second, the criteria of being listed as an OTC stock for companies are less hard, are very easier. Okay, so that's why most companies that they want to start, they use this type of listing before they go to the main markets. Okay, now it doesn't necessarily mean that just because it's riskier and the criteria are easier, it doesn't mean that there are no big companies listed under OTC. There are some big companies listed under OTC, and the reason that I made it green was because although it carries risks, but if you know which stocks to choose, the potential of you gaining a lot more is much higher than the normal market, because you are paying, let's say you have $100, so the stock prices are far less. Okay, you're paying, by your $100, you can, I don't know, buy, if the stock price is 1 cent, you can buy far more shares of a company than if it was just $5. Okay. Ticker symbol, which is also very important, because if you don't match the ticker symbol with the name of the company, you might buy something else, something that's not what you're intending. Let me give an example. Just recently, Elon Musk tweeted about the messenger Signal, and people thought that he's actually talking about a company called Signal. So they went ahead and bought the stocks of the company Signal with the ticker symbol SIGL, I think, if I'm not mistaken. And the stock price, rocketed from $5 to $35. And so actually after a day, the price was corrected because people sold. But so that's why I say ticker symbol is very important. And what it is before, if you can take a look at the picture, you can see that there is a tape, a paper tape coming out of this device. Before, when there was no internet or computer, they used to use these machines with very narrow paper tapes to actually release to know the stock prices. And because there was no space and they wanted to save some space, they allocated shortened form of the name of the company to each company so that they can easily recognize the name of the company. For example, Apple becomes APPL, or my stock that I'm really happy with, Very.cn, the Very Good Food Company. They shorten it to just VERY.cn, which shows that the company is listed under Canadian Securities Exchange, which I'm going to explain a little bit. And by the way, usually the last letters after dot show where, for example, or in which stock market the stock is listed. So for example, if it is .to, it means that it's listed under Toronto Stock Exchange. If it is .cn, it means that it's listed under Canadian Securities Exchange. Okay. Tax shelter, a means to avoid paying taxes. Yeah, as simple as that. Tax shelters usually are accounts that the government has put forth to help Canadians invest more. Okay. Let's go to the next. Okay. Share, unit of equity ownership. So basically, a share is one unit of a stock of a company. Checking account, an account ideal for everyday use. So an account that you can have multiple. So usually we have savings account as well in Canada. So these are the two main common forms of accounts, bank accounts. What a checking account allows you to do is to do more transactions than in a savings account. However, you must know that you should pay a monthly fee to keep your account open. I don't know, maybe in TD it is just $4.99. I don't know, some banks even charge up to $30-$40 to just keep the account open. If you want to waive this fee, you have to keep an amount of dollars in it. I don't know how much. For example, for Scotia, when I had it, it was $3,000. So if you could keep $3,000 over the course of a month, you wouldn't be paying that fee. Okay, for the checking account, so your transactions would be unlimited. But for savings account, it as the name suggests, it's mostly for savings. So some banks pay you a good amount of interest on their savings account, like for example Tangerine. And the good thing about Tangerine is that its checking account is free, so you have unlimited transactions and everything's just free. So I'm going to explain more in the further in the video. Tax-free savings account, this is the one that we're going to work with, because it's a tax shelter that allows you to buy and sell stocks, and whatever you gain, you don't need to pay any taxes on. Because as you know, in Canada, you have to pay taxes to the money that you gain through interest or any sort of monetary gain that you have to pay taxes on. But if you do it under TFSA, you're not going to be paying any taxes. It has some limitations and some good shortcomings and some I would say negative and positive aspects. So I'm going to go over them later in the video. Registered retirement savings plan, RRSP, a tax shelter suitable for growing investment for when a person becomes old. Okay, so this particularly it is also a good option. You can also open a RRSP with, I think, Questrade, but again, I only work with TFSA, so that's why I don't explain it later. A registered education savings plan, or RESP, a tax shelter for you can invest in it, and the government also contributes for the child. I don't know, every year I think it's up to $7,000 that the government pays, depending on how much you put. And so by the time your child reaches 18, there will be some money collected for your child's education. And it doesn't really matter how much is your income. Even if you're a millionaire, the government still pays that amount in your RESP. And by the way, something that I have to mention here is the name for RESP and RRSP has chosen better than TFSA, because TFSA, they call it tax-free savings account, which many people treat it as a savings account, which they actually shouldn't do that. It is a program that is meant for investing. Like I would say 80% of people use it just as a normal bank account, savings account. Okay, so let's go to the next word, margin account. An account in which the brokerage lends money to the investor. Okay, but that doesn't mean that it's just that. If you want to do active trading, day trading, which I am against absolutely, you need to open a margin account, because TFSA, as I said, has its own limitations, and this is one of them. So that's why I mentioned it here. Yeah, that's pretty much. So, and what does it mean by borrowing, like by lending money? It means that if, let's say you have, I don't know, $1,000 and you want to just buy stocks of a company that is going to cost you $2,000, so you can borrow $1,000 from another $1,000 from the brokerage itself, but you have to pay interest on. So remember that if your balance falls zero, the brokerage still pays for that $1,000 and your transaction goes through, but you have to pay interest for that $1,000. Arbitrage, simultaneous buy or sell same asset from different markets. Let's say, for example, the stock of, I don't know, XYZ is being traded in the US and Canada, okay, and XYZ produces metal stuff. So let's say that the stock price in Canada is cheaper than America. So what you do is to buy the stock here and sell it in the American market. So you gain something, right? The difference is going to stay for you. So this is called arbitrage. Quarter, every 3 months is called quarter. Lot means the number of shares that the investor buys or sells. So this is important. That's why I made it green. If you want to waive fees in Questrade, your lot should be a multiple of 100. Remember this. Quote means the last price of an asset. So if you hear that, that also is important, because in Questrade we have 2 levels of quotes. The first level, which is free, is the one that everybody gets, which you have to refresh the quotes every time you want to just buy. So you have to refresh it manually to get the latest quote. But if you pay a little extra, I think I don't know how much is it for per month, if you're an active trader, sorry, and you request them to give you level 2 quotes, then it gets updated automatically. So you don't need to refresh manually. Ask price. Okay, ask and bid price, these are important. These I want you to pay attention. Ask price is the lowest price that a seller is willing to accept to sell their stock to you, and bid price is the highest price that a buyer is willing to pay to buy an equity. Okay, so, and this is usually the system that determines who has the lowest price in the queue and who has the highest price in the queue for bid and ask. So the system itself will create the queue, and based on that, people do trade. Spread is the difference between ask and bid. So spread, when it becomes important, when if the spread is high, let's say for example the bid and ask prices is the difference is big. So let's say for example a stock price is $1. The bid is right now $1, but the ask is, let's say, I don't know, $10. It means that people want to actually sell more than they want to buy. Okay, so this shows that the volume could be low. Okay, this shows that the volume could be low, and there's not enough buyers. Liquidity means how fast an asset can be bought and sold. This also is important because if the stock is not liquid, you're kind of stuck in it. You know what I mean? So you have to choose a stock that the volume or the number of shares being traded is good. If it is like, I don't know, 10,000 per day or 20,000, and you want to buy, I don't know, 50K, 100K of it, then that's not a good idea, okay? Fill. When an order is partially done. Remember, fill, there's a difference between fill and execution. Execution means when an order is completely done. So usually that's what I'm understanding from, the difference of the two. Market order. Oh, okay. So these 4 types of orders are very, very, very important. So I want you to please screenshot this, or I don't know, write them down. A market order is the one that gets executed almost immediately on the price of the market. So whatever the price is, it gets executed on the spot. Remember that it always, all the time, carries ECN fee. So you have to pay ECN fee on it, apart from the commission. Okay. There's a lot to be said about the market order. I really don't like market order because I'm a long investor. As I said, I don't want to do day trading, but day traders usually go with this order. Okay, so okay, for now I think it's enough. Maybe later we go over it more. The next one is limit order, an order that you can specify the time and the price limitation, okay? And this could execute immediately or not, depending on how you put this order, okay? So basically, okay, something that I have to say about market order is you can also specify the time, but you can only specify the ending time. So for example, you can say, okay, I want market order, but I want it to be done only during this day, during this trading day. If it's not done, then cancel it. You can ask the system to do so. Okay, so let me explain how these two work. Let's say you want to buy 100 shares of XYZ. If you place a market order, the stock price, the stock price is right now $1. Okay, so let's say you want to buy 100 of it. So if you place a market order, you cannot decide about the price. So the system may fill 20 of your order in this second, the next second another 20, the next second another 20, and the next second another 20. So, and each second the price might go up or down. Okay, I'm going to give you extreme numbers just for this example, but just so that you know, it's not going to be that extreme like this. But let's say this second the stock price is $1, next second is $2, the next second is $3 and $4 and so forth. Okay, so what happens is your first 20 shares is going to be bought by the price of $1, the next one $2, the next one $3, and so on. Okay, and you only have $100, so you may not get as much shares as you wanted. Okay, so you cannot determine how many shares you want. The system will determine that for you. Okay, the price and everything. It has its own benefits, as I said. The benefit of a market order is that it gets executed almost immediately, but the the drawback is that there's no way for you to determine how many you can get. So the system will determine for you. However, a limit order, depending on how you put it, you can ask the system, okay, I want to buy 100 shares of XYZ only at $1. So the system will say, okay, I will only execute your order or fill your order with the price that you mentioned. I will buy 100 shares for you with the price of $100. The drawback for this is it may take a couple of days or even weeks, depending on the stock and the volume, for your order to be filled, okay, or executed fully. So just have some water. Okay. Yeah, so that's the difference. Now I'm going to talk about two other important concepts which are related: marketable limit order, non-marketable limit order. For now, remember that what I want you to do is non-marketable limit order. So let me explain what it means. A marketable limit order is a limit order that executes immediately, that is treated like a market order. Now how? For example, imagine that the XYZ stock price is $1 and you put a limit order, but you put the price, the bid price as $1. So you choose the price of the market that is right now. In this second is $1 and you choose it. You say, okay, I want to buy 100 stocks, but on the same price that the market is. This is called marketable limit order. So it may gets executed immediately. A non-marketable limit order is a limit order that doesn't execute immediately. And what should you do to make it not execute immediately? I'm telling you, remember this. When you want to buy, at the time of buying, you need to put an order that is 2 to 5 cents less than the bid price. And at the time of selling, you need to put the order 2 to 5 cents more than the ask price. Okay? And why? Why should you do that? Because you don't want to pay ECN fees. Okay? So remember how I said you have to pay ECN fees on ECN fee on market order? Remember, any order that gets executed immediately, you have to pay ECN fee on it. We're going to talk about it later. So that is why I want you to be familiar with only of course I want you to know about all of them, because it's up to you to choose. But if you want to waive the ECN fee, so this is for your non-marketable limit order. And I'm repeating again, a non-marketable limit order is the one that at the time of buying is 2 to 5 cents less than the bid price, and at the time of selling it is 2 to 5 cents more than the ask price. Later we're going to go over it more, so no worries. Sorry, have more water. Okay, commission is the money that you pay to the broker to buy or sell assets. This is not waivable, so you cannot waive it. And some brokerages such as Wealth Simple do not charge any commission, but they have so many other problems, and that's why I have chosen Questrade. Later I will talk about it more. Fee is the money that you pay to the brokerage for maintenance purposes. It's not just for buy and sell. Okay, and as I said, you can waive this. So that's the difference between fee and commission. You can waive fee, but you cannot waive commission. Electronics Communication Networks fee. This is a type of fee that you're going to be paying in Questrade if you don't know how to put your order. Okay, this is what they charge. It's a minuscule amount for stocks. I don't know if you want to buy 1,000 or 2,000, but when you want to buy, large orders, then that's different. It's gonna pile up even up to $100 or $200. So you need to learn how to waive this, which I'm going to talk about it. Dividend, money from profit that a company pays to its shareholders, as simple as that. Dividend is actually paid usually. So the difference between dividend and the normal profit that you get is, the normal profit is like when you buy a stock and leave it there and the price increases over time and you gain some money. So that is how it is. But dividend is the one that the money that the company pays you either monthly or quarterly. Okay. Sorry, dividend yield, amount of dividends paid to shareholders in percentage. So that's the same thing, but with a percentage. There are two ways that you can calculate dividend. So either dividend per share or the percentage of the dividend that the company pays. which we're going to go over, so no worries of that. Profit or loss, this is the first thing you want to see, P&L, okay? The money that you gain or lose. And usually in Questrade, if you, like in other, I don't know about others, some apps are different in color, but if you gain something, Questrade shows it in green. If you lose, it shows it in red. Volatile means unstable price changes, okay? So let's say, for example, today XYZ is $1, tomorrow it's $2, the next day is $3, so that's how volatile it is. That is, you know, the amount of volatility. Earnings per share or EPS, it is actually, so you don't need to, basically, as I said, I'm not a fan of technical analysis or whatever, so if you've heard about it, I'm just telling you so that your ear is familiar with these things. I don't want you to like stress out and think about it, and you know, so this is something that shows the profitability of a company, okay? And the way they calculate it is they take the profit of a company, divide by its outstanding shares. Now, one of the reasons that I really don't care about these things is that, for example, if you go, I am a fan of IPOs. IPOs are the companies that have just been listed in a stock market. So companies like those, or penny stocks, companies that have, their stock price is very less, under $5. So a company that starts, just recently, like within the last year or last 2 years or whatever, they may have negative earnings per share. They may have negative in it, and this could cause people thinking that, okay, it's less profitable. But that's not true. So that's why I don't really care about these numbers. Dividend per share, DPS, which we talked about, which means the amount of dividends paid to shareholders on a share basis. We're going to see how it's calculated, but it's called DPS. Beta, a measure of stock's volatility in relation to the overall market, a stock risk actually in relation to the overall market. And it has we have 5 different values for it. If, and again, I'm just telling you so that you hear them. I don't want you to know and stress out yourself for this. Beta, if beta is above 1, so let's say 1.45 or 2 or whatever, the stock is called aggressive because the risk is higher in comparison with the whole market. If the stock price is 1, it means that the price that ups and downs of the stock price, or the moves of the stock price, is similar to the moves of the whole market. If it is between 1 to 0, or let's say between 0 to 1, it is called defensive stock because the risk is less than the whole market. So let's say that, I don't know, if the market moves 1 value, this could be, for example, 0.45, so that's how it is calculated. If it is 0, then it means that the stock price of this particular company does not follow the overall market. So if the market is up today, it could be down. If the market is up tomorrow, it could be up too, right? So it doesn't follow the movement of the stock market. And if it is the 5th one, if it is under 0, if it is sub-0, negative, it means that the stock market the stock goes the opposite way in comparison with the whole stock market. So if the stock market goes up, this particular stock goes down. If the stock goes down, this particular stock goes up, right? So these are the 5 stages of beta, but that's not that important. Book value is the value of shares at the time when you buy. It's called book value. It has a further, these words have, further meanings, but for now, just know this. Okay, market value, price of an asset right now, right? The current price of an asset in the market, it's the current. It's where you look at it. Okay, so it's called market value. How how much your asset is worth right now. Balance sheet, a statement of assets or capitals of a company. Usually they release balance sheet, I think every year or sometimes quarterly, so that's balance sheet. And this is a good thing because people know how much of the expenditure was, how much the company gained, It's a comprehensive report of the company. Initial public offering, I think I talked about it, when a company is listed in a stock market for the first time. That's called IPO, initial public offering. And the reason I made it in green is because these stocks usually carry higher risks, but they carry more gains too, right? Like for example, if I want to give an example, it was Shopify. 5 years ago when it came to the market, it was very cheap, but within 5 years, every $5,000 that you would invest into it would gain you $95,000 now. So if 5 years ago you would invest $5,000, by now you would have $100,000. That's how an IPO could be good. But again, it requires time for you to find a good IPO. Bond. Usually these are debt certificates that companies issue that you can buy and sell, and they pay interest, to the investors. I'm not a fan of them, but this is some sort of an investment too. Options is also, honestly, I don't know what it is. It's a means by which the trader is given the right to buy or sell a stock in the future of an agreed price and a date. So it's something that's related to the future. Again, I'm not a fan of this. I just trade stocks, but it's up to you. Warrants are actually long-term options. I'm just bringing them here so that you know about them, and if you're interested, you can just search more. Position, the amount of assets that you have. Usually, the way they use the word is, for example, opening position and closing position. And by opening position, they mean buying. Closing position means selling. That's it. Long position, buying and owning the assets. That's called, when you have, so let's say you buy a stock of XYZ, you keep it for 1 year and you sell it and you gain something. That's long position. But we have something called short position, borrowing the assets. And we have something called short selling, which we are going to go through in the future, further in the video. So, which means to borrow the shares and sell with the hope that the stock price goes down and you gain something. I will explain how it works. It's a very interesting thing. I don't recommend people do that, but just because it's interesting to me, I'm going to explain it later. Short selling. Yeah, see, taking advantage of a losing stock. It's a very interesting thing. Pre-market trading. Trading before the market opens officially. Usually in Canadian stocks, we don't have this, neither pre-market nor after-market, which is trading after the market closes officially. But US stocks have this. In Canada, I cannot say about the whole stock markets, but as far as I know, the stock market opens 9:30 Toronto time and closes at 4 p.m. So if it is pre-market, I think pre-market US in Toronto time starts at 7:30 or maybe 8. Not sure exactly. And the aftermarket is up to 5:30 p.m. Okay. Volume, the number of traded shares, as I mentioned it before. This volume is very important because if you don't choose a stock that has good volume, chances are you're going to stuck with that price, and it's very hard for you to liquidate it. Average volume, the average number of shares traded on a specific time. For example, say average volume today was 300k. It was not like up to 300. It's an average price. Average amount, which means that 300k shares were bought and sold, or even more. Market capitalization, which you can see it as market cap. value of all outstanding shares. So basically the shares that a company have in the stock market, if you calculate how many shares and divide it by the current price, you're going to reach a market cap. Market cap is important because it has different, actually you have different types of it: nano cap, micro cap, large cap. So I'm going to explain a little bit about them, but I'm a fan of small cap companies because, as I said, the risk is high but the gains are high too. Small cap, a company that has a market cap between $300 million to $2 billion. Okay, so that's the official kind of explanation of small cap. Mid cap, a company that has a market cap between 2 billion and 10 billion. Large cap, a company that has a market cap over 10 billion. Okay, mega cap, I think mega cap is something that is, over $1 trillion, like Apple. Okay. Penny stock. This is also, I made it in green because again, the risk is higher but the gains are higher too. A company that its shares are valued under $5. This is one definition. So many people don't agree on this definition, but I like it. Okay, so basically anything under $5 is called penny stock. It doesn't mean that anything. So for example, my there's no, how can I say, there's no set definition for this, but so right now, for example, my stock Very.cn, yesterday it was more than I think $6, but it's still considered a penny stock. So basically, if I want to put it in words, it would be anything that's lower than $5 is called penny stock. There are different definitions of it. You can search depending on how people define it. So pink sheets, PK, sorry, which I think in Questrade the symbol is PINX. So if you see in front of a ticker symbol, if you see PINX in Questrade, it means that it is traded in pink sheets. A stock that is traded over the counter. Okay, that's called pink sheet. And the reason that they call it pink sheet is because in the old days, they used the papers that these type of stocks were traded. The color was pink, so that's why the name comes from that. Price per earning. Price per earning is like EPS. So these things both show the profitability of a company, a ratio that indicates how much the market is willing to pay for the stock based on the company's past or future earnings. Okay, so this can also show the expectations of the investors. If the investors feel that the company is going to do good in the future, this number could rise. Okay, but for me, again, these things are not, I don't really care about these numbers. I'm just letting you know what they are. Average down is a very good strategy. Okay, imagine you have so let's say you have 100 shares of XYZ. You bought them when the price was $1. Okay, so you spend 100 and now you have 100 shares. So you are actually confident that this company is going to do well in the future. However, now, for whatever reason, the stock price has decreased to 50 cents. So what you tell yourself is, okay, I have another $100. So let me go ahead and buy more shares of this company to gain more in the future. So you put that 100 and you gain, I think, another $200. So another 200 shares. So right now you possess 300 shares of that company. So this is called averaging down. Okay. And there's another thing, averaging up, buying additional shares of the same company. So in this case, XYZ, when the prices increase. So let's say you bought the XYZ shares $1 each for $100. So you have 100 shares right now. Okay, you know that this company is going to do so well in the next 1 year, and the price is going to skyrocket to, I don't know, $30. So it is logical for you to invest more in the same company, right? These two strategies are the ones that I really like. So when the price reaches $5, you say, okay, I am sure that the stock goes to $30 within a year, so why not buying more? So you bring more money and buy more shares. That's called averaging up. Earnings date, usually this is important because it's a date on which a company releases its balance sheet. It is important when you want to receive your dividends. And that is why. Ex-dividend date, yeah. The date on which a company's dividend allocation have been determined, which is usually one business day before the earnings are out. Okay, so one business day before the earnings. Let's say today is 5th of March 2021, and let's say tomorrow is the ex-dividend date that the company announces, like, so which means that the company will announce its earnings the day after tomorrow. So if you can buy the stocks today, which is March 5th, you would still receive the dividends, even though you possess the shares only for one day. However, if you buy it tomorrow, which is the ex-dividend date, you're not going to receive any dividends, and the company collects the dividends for its own. Okay, so that's why it's important. I made it in green. Days range, difference between the highest and the lowest price in a given day. It's called days range. 52 weeks range, please let me know. It's the highest, and I just don't understand. 52 weeks is 1 year. Honestly, please, if you know, please let me know too, because 52 weeks range means the difference between the highest and lowest price of 1 year, and yet they still call it 52 weeks. So why don't they say last year? I don't get it. Please let me know in the comments. Thank you. Okay, 1 year target estimate. You see it in Yahoo Finance, which is one of the best websites to monitor stock market. That's the one that I use. So this 1 year estimate, they do an estimation based on analysis. They do an estimation of the stock price 1 year from now. So that is 1 year target estimate. Technical analysis using chart to predict future stock price. This is silly to me. So I really don't like it. They believe that usually these people who do technical analysis, which are day traders and swing traders, they believe that no matter what happens around the company in the environment, the price says it all. The stock price says it all. So they all care about chart. They don't really. I'm not saying all day traders don't care about fundamental analysis. Fundamental analysis is analyzing environmental factors that could affect the stock price in the future. Okay. So fundamental has two variants, tangible and non-tangible. Some of the things that are some of them are actually the ones that you can give them numbers. For example, earnings, how much earnings they had, how much losses, stuff like these can be numerical and non-numerical. Let's say numerical and non-numerical. Non-numerical are the ones that, for example, who is the manager? What is his background of does he know about this company or not? So these are all the things that are environmental factors that can play a very important role. I am a fan of fundamental analysis. I'm not a fan of technical analysis, because usually what you do in technical analysis is caring about charts, and I may make a video about why I'm against it, but for now I just want to say that fundamental analysis is my own choice. Day trader, as I talked about, a trader that executes orders with large volumes in a short period of time. Okay. To benefit from short-term price fluctuations, I'm against this. If I want to give an example, if you've ever used a solid but not liquid soap, you know that the more you use that soap, it gets lesser and lesser. Okay, so basically the money that you give to these day traders over time decreases. So that's what I think about it. Exchange traded fund, or ETF, basket of securities that is traded like a stock. So basically ETFs and mutual funds are kind of like managed couple of stocks together, okay, that are managed. I think I have mutual funds. Yeah, mutual funds, collection of money from different investors to invest in a particular security. Okay, so usually mutual funds have a person or a body of people that manages that manage how the allocations take place, how much of investment goes to which company. But ETF is not like that. ETF is a set amount. So let's say they choose 100 companies, and if you buy one stock of this ETF, this particular ETF, it's as though you own a fraction of each one of those 100 companies shares that are being traded in this ETF. Okay, so that's the difference between ETF and mutual fund. Norbert's Gambit, this is the cheapest way that you can convert your currency. Imagine you want to buy American stocks in Canada. So you would have to have American money, you have to have US dollars, right? So you have three options: either to go to a currency exchanger or use your own broker, because usually brokers do that for you, or use this method. This is the cheapest method. I'm going to explain a little bit about it too. Journaling is a process of converting currency in Norbert's Gambit. This is important also too, to know that so I'm going to explain how it is, but now for now just be aware of it. K from the word kilo, meaning 1,000. So for example, 50K or 100K means 100,000. Guaranteed Investment Certificate, or GIC. It is low risk. Yeah, it's a low risk way of investment that they pay you an interest in a set amount of time, let's say monthly or quarterly, and your money also is guaranteed to be returned to you, whatever you invest. However, I am against it because the gain is very less. So I don't really care about it. I'm only a fan of stocks. Security, a financial investment with monetary value. So these are base security, and these are basically the same things. Equity, shareholders' stake. Maybe these are the meanings that I found, and I just want you to get familiar with these words. But realize means selling or converting your equity into cash. So when you buy a stock, let's say you have 100 stocks of XYZ. If the prices go up, Questrade will show you in your P&L section, will show you your gains in green. But they are not your gains because you still haven't turned them into cash. So it could be good and bad, because it could be actually good because you may lose. Let's say it happens. It actually happened to me. When I just bought my stocks in Very, I bought the first purchase, I think it was for 27K. And the next 2 days, I was seeing, every day I saw a 5K, 7K loss in my P&L section. And it showed me in green. But I was happy because it was unrealized. I didn't sell them. So realizing means to sell and turn your assets into cash. Up until the moment that you haven't sold, you have not lost or gained anything. Microcap, I don't know why I didn't put these words besides each other, microcap and nano. When I was talking about a microcap, is a company that has a market cap between 5 million to 300 million. Sorry. So small cap was 300 million to a billion, right? So it's microcap. Nano cap is also a company that has less than 50 million, okay? 50 million or less. Oh, these two are very important: adding liquidity, removing liquidity. Remember that adding liquidity means placing an order that doesn't get filled immediately, and removing liquidity, placing an order that gets filled immediately. So this comes into play when we want to talk about non-marketable limit order, because a non-marketable limit order is basically the one that adds liquidity to the market. Basically, your order is going to be staying in the queue, whether for a couple of seconds or couple of days or whatever, so it doesn't get executed immediately. So what we want is adding liquidity, because anytime you remove liquidity, you have to pay ECN fee. Rally, short term, extensive, fast price increase. That's called rally. You hear it in Yahoo Finance forums. Okay. When the stock price goes up unexpectedly for a short time. So my stock, which was very.cn, the very good food, I experienced these a lot, 3 or 4 times, and it's because people buy, in maybe institutions come into play and buy a lot of shares, so that's why the stock goes up. Market crash is actually, I think, the opposite. It's unpredicted and fast price decrease, like the one that we had for Corona. Okay, it started in March, I think. And it could be a good potential, very good opportunity for people to invest. Most stocks decreased by even half or even more. For example, a company such as Ryokan, which has been in the business of real estate investment for 25 years or even more, the stock price before the Corona hits was $25, $27 per share. But on March, you can see that it decreased to even $12. So it was a very great opportunity for people who wanted to buy the stock, because Ryokan pays good dividend. If you're interested in dividend, in getting cash for your money instead of putting your money in a bank account, in a savings account, which pays you less. I think now it is 5%. I'm not sure, but it pays very good dividend, consistent dividend. So that's why. Okay, correction. Correction means a 10% or more decrease in the price relative to its peak. This word is also something that you hear a lot, okay? So let's say a stock price of XYZ goes up. That last night, for example, it went up to, $1, and then it decreases to $90. Let's say in the last 2 weeks, it was being traded 80 to 90 cents. But just during the last day, it went up to $1.10. And then after it decreases back to $90 cents, then we say that there's a correction, because the price was increased without a reason, right? That's why they call it correction. Anonymous order, type of order in which only a small fraction of the lot is visible to the market. I really like this order. If you're a millionaire, let's say you want to buy, a million shares of a company with a volume of 100K, you want to buy, let's say, a million shares. So this could cause prices to go up, because people see that a person wants to buy 1 million shares. So they think that, okay, let me just sell my stock. That's why there is something in the system that hides the big portion of your lot, so that people don't see how much your lot is, how much you're buying. So let's say if you determine, you can say, okay, only show to the market that I'm buying 50,000 shares at a time. So that's how the order gets executed. It's for a very complicated situation. It's not actually for me and you average investors, but I'm just letting you know that this exists. Portfolio, basket of securities. We have 5 different portfolios, which I'm going to go over. Yield, percentage of earnings over a period of time. If you remember, we talked about dividend yield, so that's that. Okay, good till cancelled, GTC order. An order that lasts until completed or cancelled. It doesn't last forever. Usually in Questrade, it lasts for 90 days. I think in CIBC, it lasts for 30 days. Not sure though. But that's the meaning. It means that either the order gets completed or it gets cancelled after a set amount of time. That's called GTC. That is what I like. Good till date, GTD, means an order that lasts until it's specified. You can say, for example, I put this order if it doesn't get if it doesn't get filled within a week, just cancel it. Or whatever that's filled. Let's say you put an order for 100 shares of XYZ. You put a buy order. So the system fills 20 of those. So you buy 20, and the other 80 is not executed. So you say, I don't care whether it's executed or not. I want you to cancel this within a week. So the amount, so you're left only with 20 shares of that company, okay? So that's how good till date is. Day order, an order that lasts only up to the moment that the market closes. So immediately on the spot where the market closes, this order gets cancelled, no matter how much of it is filled. Moving average, price average over a period of time. It's called moving average. So they just consider take the average of a price during a setup. So let's say moving average for this week, moving average for the last week, Trading halt, temporary stop of trades. Usually trading halt, the company can ask for a trading halt from the stock market that the company is listed under, or the stock market itself halts the trading for reasons. Maybe there's a big news that the company wants to release and they don't want to shock the market. So let me give you an interesting example. My stock, Veri.cn, when the prices reached a YouTuber called Jeremy, released a video on Veri and how many shares he bought. So he's got more than a 500k subscribers. So people jumped in to buy, and the stock price rocketed from 4.5 to 5.5. So $1 is a lot. $1 is so much, and so the company understood about this, and they released the news exactly 30 minutes before the market closes. So the stock crashed. The stock price crashed and went back to 430 from 550 or 560, went back to 430. So people were actually asking why the manager did not do any trading halt. So because the manager was kind of new to these things, so he didn't ask for a trading halt. It was a good idea if he could do that, or maybe he could wait before releasing the news till the next day, but whatever it was, so he didn't ask for a trading halt. But later, in different occasions, he did. So that's what a trading halt is. Standard & Poor's S&P index of a market based on market cap. You may have heard about S&P 500 in the United States, which follows and indexes the stock price of top 500 companies in US. So it's basically an index. It's a number that shows how good or bad they've done. Real Estate Investment Trust, REIT, which I think I talked about one of them, RioCan, company that operates, owns and finances income-producing properties such as residential properties or industrial properties. Usually REITs are mandated by the government of Canada to pay dividends monthly. Okay, usually. So that's why. The ones that, so your dividend. So there are companies, I think like Enbridge. Enbridge is a company that invests and manages infrastructures of energy, such as gas. Okay, so this company pays, I think, in a 3-month or quarterly intervals, but REITs, as far as I know, are mandated to pay monthly. Dividend reinvestment plan. Automatic repurchase of shares of the same company by its dividend cash. So let's say you buy stocks of RioCan. You're entitled to receive dividends. But if you want, you can ask Questrade to buy back shares of the same company again and again, every month with your dividend money. Okay? If you want to do it on your own, you have to pay commissions. Because as I said, any order that you place, you have to pay commissions and ECN fees. But if you ask the Questrade to do this for you automatically, it is actually free. So that's the good part about drip. Dilution, issuing new shares by a company. This could be good. So many people think that it's not, but I think it's good. It depends on how the management uses the money gained through this. Because let's say, so the manager of the company that I have, Very Good Food, Mr. Mitchell Scott, he actually diluted once, I think. He issued some new shares, and it was for him to be able to clear his debt. This is a good strategy, particularly for new companies, okay, for IPOs. But if they don't know what they are doing, they can decrease the price of the price per share. Stop loss, an order that's filled once the stock reaches a specific price. So you can say, for example, if the price of XYZ right now is 50 cents, but if it reaches $1, buy for me, and if it reaches $1.50, just stop buying. So that's how a stop loss works. Pump and dump. This is also something you hear a lot in Yahoo forums. Fraudulent practice of encouraging investors to buy shares in order to inflate the price, then selling one's own shares while the price is high. This is basically a type of a scam, because you can see people, any time that a person talks about a share of a company without reasons, without analogy, without ground reasoning, I think that is called pump and dump. Usually people do this, even the company owners, to scam people sometimes. They talk about, for example, there was a company back in the days, I think 10 years ago, 20 years ago, there was a company in Canada. It was a mining company that claimed that they have found a mine in, a gold mine in Africa, that they can extract so many gold or whatever. So the price rocketed to 250 or even more. But they found out that the whole managing system and everything, it was just a scam. So they tried to release false news in order to increase the stock price and then sell their own shares, which in this way they were able to gain, I think, $5 billion from people's money. So that's what's called a pump and dump. Insider person, usually from the management. It could be from or not from the management team of a company that owns more than 10% of voting shares. Voting shares are the shares that if you possess, you are allowed to vote about the operations of the company. It's called an insider. Support, temporary resistance against price decrease caused by excessive demand, excessive buying, right? The opposite is exactly resistance, temporary resistance against price increase caused by excessive supply. So when there's more shares, when there are more sellers than buyers, resistance happens, and when there's more buyers than sellers, support happens. All in kind means as is. We're going to see this when we want to transfer account to Questrade. So there's an option that you can choose, which is I think the best option is all in kind, which means that you ask Questrade to transfer your account from other broker or other bank with the same stocks or ETFs or anything that you have. You can also ask Questrade to cash everything, to liquidate everything before transferring. But I find this option to be the best. Consolidation, price stabilization. Yeah. I don't know, it could be similar to correction. Okay. But the idea is when the price fluctuates so much, and at the time when it reaches a stable point, it's called consolidation. Trailing 12 months. Please let me know this, of course. I myself don't know why they call it TTM. Last 12 months. Okay, last 12 months is 1 year, buddy. But I don't know why they call it, trailing 12 months. So please let me know if you know. If you're a pro, let me know. why is the name like this? Why don't they call it last year? Yeah, CAD and USD, CAD and USD, Canadian dollar, US dollar. And let me tell you something interesting. Maybe you're wondering what that line is on S. So you know that the first colonizers of America were Spanish people, and their currency was pesos at the time. So when they wanted to mention pesos, they would write the traders at the time, they mentioned P, they would write P and S. Over time, lazy traders, they would put P and S on each other. And over more time, when the time passed, the round part of P was omitted, and they used to just write S with one line on it. Okay, so that is the history of dollar sign. And also, I've heard that when we're talking about a million or more, there's 2 lines on the S. So if it is more than a million, there's 2 lines. I'm not sure, but that's what I heard. Non-sufficient fund, NSFE, basically, you know, the status of a checking account that does not have enough money to cover transactions. Let's say you pre-authorize your bill company to take money from your account every month. This month your bill is 100 for, I don't know, for your internet or whatever, and you have 0 in your checking account. So the company comes to take money, but there's nothing. So the bank will charge you a fee. That's called non-sufficient fee, which I think in Tangerine it is $40. In other banks it's 45 or even more. Stock split is dividing the existing shares into multiple shares by a company, and that's done because of making it possible for, you know, lower income population or people with, you know, limited budget to invest in the company. Apple, for example, is the one that did so. Tesla also did so. So if I want to give an example, let's say XYZ a stock reaches $2,000 per share. So this is difficult for average investors like me and you to invest in this company. So what happens is the company divides that 2,000 into, I don't know, 10, for example. Okay, so the stock price will be decreased to $20. Now you might be asking me, okay, what about my stocks? If I already have one stock of that XYZ company, and I bought it for $2,000, what would happen to, so right now it is worth $20. I say no. You are going to get, if you do the math, so 20,000 divided by 20, it's going to be, so divided by 10, I think it's going to be $200. So your one stock is going to be 10. So they're going to give you 10 stocks. Okay, so let me give you a good example that I can calculate. Let's say you buy XYZ stock and it is $100 now, and the company decides to do a stock split, and they do a stock split, and the price per share right now is $50. So for you, instead of having one stock, they give you another one stock as well. So your stocks are 2. So you now, instead of having one share which is worth $100, right now you would have 2 shares that worth $50 each. So you won't lose anything. Basically, it is good for, as I said, for people with limited budget. Okay, so these were the frequent words and terminologies. Next, in the next section, I'm going to go over different portfolios. We have 5 different types of portfolios. We have 5 different different sorts of portfolios. Portfolio is not a physical thing. It's basically the list of the type of the stocks you hold in your account. Okay, So we're going to go over 5 of them. The first one is aggressive portfolio, which includes stocks with high beta, stocks that carry more risk, okay? Companies that basically are in their primary stage of growth, okay? Usually tech-based companies or the ones that are not still that popular are suitable for this type of portfolio. So let me tell you that these type of portfolios all have overlapping. So it's not like one type. So for example, this could also be tech-based companies can also be in income portfolios or other types, okay, depending on their usage. But aggressive, and the reason it is aggressive because it carries more risks. And remember that the more risk you tolerate, the more gains you will gain, okay? The second part is defensive portfolio, which I don't know why I typed it like that. It's a typo, so apologize for that. It's defensive portfolio, so which is the least risky of the 5. It contains stocks that people use, the products that people have everyday use for them. So whether the market is up or down, people still need those products, such as bread, okay, such as anything food related, such as, I don't know, soap. If a company produces, for example, soap, it's stock, or things that people use on an everyday basis, things that people need, whether the market goes up or down. For example, iPhone, you can postpone buying an iPhone or a phone. You just buy it for, I don't know, 2 years, 3 years, 5 years, whatever. But bread is something that you need on a daily basis, okay? So that's why it is the least type of risk in terms of risk, okay? The third one is called income portfolio. You can actually put the stocks of companies that are giving dividends to their investors. The best of them are REITs, or real estate investment trusts, which, as I said, in Canada are mandated to pay the dividends per month, okay? Basically any stock that pays dividends. So you basically choose those, you put your money in with the hope of receiving a steady income. Let's say you have 100,000 and you don't want to put it in a savings account because it gives you the most that it can give you, I don't know, 1.7 or I don't know, 0.7, whatever. But if you choose stocks that can give you 8%, sometimes 10% dividend yield, it is far better. You can get far more money every month, okay? So that's income portfolio. Let's go to the next. The next one is my interest, a speculative portfolio, the one that contains IPOs, okay? So it has high level of risk. It's like the aggressive one, but it could be also the most profitable. Again, the more risk you take, the more profit you can get. As I said, tech-based companies, or the ones that they have just one product, can be suitable for this type. But be aware that creating such portfolio requires time. Yeah, it requires time because you need to know which stock you're choosing. My portfolio, for example, includes only one stock, and that is Very Good Food. And I didn't buy it when it was IPO'd exactly. I bought, I think, a month or 2 months after it was IPO'd, but it was pretty much new, and it was a penny stock. So that's why the risks are always higher, but the gains are always higher too, okay? The last one is called hybrid portfolio, which could be a combination of all of the aboves, okay? You can have a mixture of all types of portfolios you need, from, any basically you can have an IPO in it. For example, you can allocate and say, okay, 20%, 20% of my investment can go to an IPO, the other 20% can go to a REIT, the other 20% I can buy stocks with it, the other 20% I don't know, bonds with it. So this is a hybrid portfolio, okay? So that's it for this section. In the next section, we're gonna review 12 tips on TFSA, and we're going to see what it is. Okay, in this section, we're going to see what TFSA is. Actually, as I mentioned, TFSA is a tax shelter. Any type of income that you have in Canada, you have to pay taxes on, particularly if you gain money. But the Canadian government, since I think 2009, has put forth this great means for investment, which helps you and the society to invest without the fear of, paying tax, because taxes are going to be much more the more you gain. Okay, so let's see what actually. Oh, and before that, you can also open a margin account in Questrade. It's not just TFSA. You're going to see for yourself further in the video. But the good news about TFSA is, as I said, you don't pay any tax on the gains. However, with regards to margin account, although you can do active trading, you can do everyday trading, buy and sell, which I'm against, but you have to pay tax on your gains. Okay. So as I mentioned, it's a tax-free savings account. TFSA is a tax shelter program for the government of Canada to put forth to encourage investment. Okay. The second thing is, unlike its name, this is very important because unfortunately many people use this as a normal savings account. It's a big mistake. Do not use it as a savings account to just put money in it and to deposit and withdraw money. It's meant for investment. Maybe, I'm assuming that maybe because of how they named it, people think that it's an account, whereas they should have named it a tax-free savings program, not an account. Okay, you can hold anything, basically any sort of investment, stocks, bonds, ETFs, mutual funds, GICs, things of this sort. Okay. As I said, most Canadians treat it as a typical savings account. Okay, so this is so bad. TFSA has a contribution limit, okay, which is increased by the government each year. The good news is that if you don't use your limit, it's not going to vanish. So it's going to add to your next contribution limit next year. Okay. Which means that I think we have in the next. Okay, the first year. So you might be asking, okay, when does my contribution limit start? So the first year in which you turn 18 or you get your PR card. Okay, whichever is first. Okay, but remember, if you are 18 years of age but you don't have a PR card, or you're a newcomer and you still don't have a PR card, you cannot open a TFSA. Okay, so you need to become a permanent resident. It's going to be okay. So for example, if in 2020 you turn 18 or come to Canada and receive your PR card, your limit's going to be 6,000, because each year, as I mentioned, the government determines how much is your limit. Okay. Next thing, the sixth thing, if you'd like to find out, because you may want to see how much is your contribution limit, you can use this link. You can screenshot. I will also put it in the descriptions if I can. You can also Google. You can Google calculator, TFSA contribution calculator. So the website, usually the first site should be this one. Okay. So what you want to do is to first determine the year that you turned 18 or that you came to Canada. So the first field, when you see in the website, of course, when you bring up the website, you have to scroll a little bit down. So you're going to determine the first year that you turned 18 or came to Canada, which for this example, I just put 2020. The second field, you have to say how much you have contributed, if any, to your TFSA, how much you have deposited. And the third one, you have to mention how much you've withdrawn from each of your from your TFSA. Okay, and then after you click on calculate, it also gives you the current year and also the next year. But let me tell you something, this next year is not reliable because it just calculates based on previous years. So if you want to make sure how much is the contribution limit for the next year, you have to wait till I think February, to the end of or mid February each year to find out how much is going to be the contribution limit for the next year. And usually the contribution starts, so you can contribute from the 1st of January of each year, okay? Based on how much the contribution is. Okay, the 7th. As I said, each year by depositing into your TFSA, your limit gets decreased equal to the amount you deposited. Let's say, for example, this year, your, contribution limit is 6,000 and you put 3,000 in it. So you have already used that contribution limit. Okay, if you withdraw, it's not going to come back. It's just one time. So when you deposit 3,000, you have used that limit for the year. So you're not going to be able to get it back. Also, you're not allowed to deposit the same amount you withdraw, as I mentioned, unless you have a room left. Let's say, for example, your contribution limit is 6,000 and you already deposited 3,000. So you are left with another 3,000. So if you put another 3,000, then you have used your contribution limit for this year. Anything you put more than that, you're going to pay fine for it. You're going to be fined, okay? Until the moment that you withdraw the excessive amount. The good news is on January 1st, each year, as I said, the amount you withdraw will be added to your contribution limit. Let's say, for example, your contribution limit is 6,000. You have withdrawn, you have deposited and withdrawn 6,000. So although you've used this, but because you've withdrawn everything, the next year, this contribution is going to be added to your next year contribution, okay? What did I write here? Note that unlike withdraw amount, which will be added back to your limit in the next year, if the stocks you bought in your TFSA lose value or fail, in addition to your money, you will also lose your total contribution limit. Okay, so I'm going to give you an example. This is very important. Let's say you deposit $6,000 into your TFSA and you buy the stock of XYZ. Okay, so and you're very unlucky and XYZ company fails and they just file for bankruptcy. So a couple of things will happen. First of all of your stocks that you bought, whatever they are, their value is 0. So you have to contact Questrade to just remove them from your account. You have to email them and ask them to remove them from your account. This is the first thing. The second thing that's going to happen is you will lose your contribution limit. Okay? But apart from the contribution limit that you lose, you will also lose your money. Okay? So 6,000 will be gone. And so this is, for 6,000, it's nothing, but imagine you've been in Canada for 10 years, you have never used your contribution limit, and just imagine for this example that each year the government has determined 6,000 to be the contribution room for each year, okay? So if you multiply 10 years by 6,000, $60,000 you can contribute. Let's say you have contributed all that amount. Sorry, let's say you have contributed all that amount, you have deposited all that amount, and the stock you buy fails for whatever reason. So next year, your contribution is not going to start from 60,000. The government does not care whether you've lost anything in it or not. It's going to be so-called burned. It's going to be burned. So you have to, again, wait another 10 years so that you can reach the same contribution limit. Okay, so this is very important. On the opposite, there's good news. On the opposite, let's say if you've been in Canada for 10 years, okay, and each year the government has determined 6,000 to be the contribution limit of that year. So you can contribute $60,000 into your TFSA, and you do, and the stock of XYZ explodes, and it's going to become like, $6 million. So what happens is, if you sell that $6 million this year, then next year, your contribution limit is going to be 6 million plus whatever the government determines for the next year. So any gain that you have will increase your contribution limit. Okay, remember that. Your gains, of course, should be realized gains, which means that you have to turn into cash. Let's say, for example, you contribute that 60,000, you buy the stocks of XYZ, and your P&L shows in Questrade, your profit and loss shows that you, if you sell your stocks right now, you're going to be given like $6 million you can sell your stocks for 6 million, okay, but you don't sell your stocks, and what happens is next month that price decreases to 3 million. So you decide to sell next week. So what happens is not only your gains are less, but also your contribution limit will be decreased because you didn't sell, you didn't realize. Your contribution limit will increase by your gains only if you turn your assets into cash. Okay, if you don't realize your stocks or turn them into cash, nothing's going to be added. So remember this. Okay, let me give you an example. Suppose in 2020 you turn 18 or get your PR card, thus you're allowed to deposit 6,000. If you do so, then your contribution limit for 2020 is going to become 0 because you already deposited, right? You already contributed. You would have to wait until January 1st next year for the government to announce your new contribution limit. Yeah, that's what I've explained. Now, suppose that the government announces the 2021 limit to be 6,000, and in 2020, which is this year, you deposited just 500. So your remaining limit for 2020 will be 5,500, and 2021 will be 11,500. Okay. Now, suppose you bought stocks with all that 12,000, and God forbid, all your companies that you bought their stocks file for bankruptcy. Then not only have you lost that 12,000, but also you have lost your limit and need to wait until January 1st, 2022 to start building your contribution. Yeah, I think I explained it in the example, okay? So this is very important. These are the basics of TFSA. What is this? Number 8. If you deposit more than your limit, as I mentioned, you're going to be fined 1% of the excess amount every month until you withdraw it. In our example, if in 2020 you deposit 7,000 instead of 6,000, which you were allowed to, then you need to pay $10 for that extra 1,000 each month until you withdraw it. Okay. And also there is another thing, I think I have put it in the slides, that you cannot buy and sell in TFSA. Although the government, the CRA or Canada Revenue Agency has not determined a specific amount of trades that you can do on TFSA, however, so they haven't determined. But if you do active trading like every day, and they deem it to be your job or they deem it to be your salary, then you gotta pay income tax on it. Remember, there's no limit on how many TFSAs you can have. You can open multiple TFSAs in different banks or brokers. However, the total amount of your deposit when you combine them all should not exceed your limit. So the government does not care even if you have 100 TFSAs, that's fine. But you got to make sure that you know each and every one of their transactions, okay? How much you deposited, how much you withdrawn. And if you remember, I said that when you withdraw, it's gonna actually decrease your limit. 10. Not only doesn't the government tax your gains in TFSA, yeah, but as I mentioned, yeah, but also your gains will increase your contribution limit. In our example, if your 6,000 turns into 60,000 in 2020, okay, and you withdraw all of it in that year, then in 2021 your limit will be 60,000 plus 6,000 that the government is going to announce for 2021. Okay, then you have like 66,000. Yeah, this is, I think I mentioned it in my example. 11. It's better for you to buy Canadians. Yeah, it's better to buy Canadians because US government does not consider this TFSA as a tax shelter, and thus if you buy stocks from US, you can buy stocks from US. You can hold US dollar in it, but to the same amount that you're allowed to. So you got the same amount of. It's not like if you're allowed to. For example, let's say your contribution is $40,000. I think it's just Canadian dollars. So if you want to know about the how much United States dollars you can keep in your TFSA, you need to you need to contact CRA. I'm not sure about it, like how much is the contribution calculated that way, or you may be able to chat with Questrade and ask them. But because I don't usually normally do that, I'm not a fan of buying stocks from America, so I really haven't gone to find out about it. Or if you know, please let me know. Okay, please let me know in the comment section. If you're aware, please let me know. If I want to hold like US dollar in my TFSA, is it going to be the same amount of dollars as if I was holding Canadian dollars or not? So as I said, TFSA is a tax shelter, and thus if you buy stocks from the US, you need to pay 15% tax to the government of America or Uncle Sam. Okay, remember this. My preference is not up here in Canada. Let's just support Canadian organizations. It's easier, it's far better. Okay, the last one, I highly recommend not to do any trading TFSA, any day trading. Okay, you can buy as much as you want, but if you start to buy and sell, and if the government deems if they find out that you're doing so, and if, as I said, they deem it to be your income, it's going to be bad for you because you're going to pay tax on it. CRA does not clearly mention how many trades are allowed in TFSA, but if they deem your day trading to be a job, then you need to pay huge income tax gains. Okay, in general, as a rule of thumb, it's better for you to do only long-term investment in any given account. So yeah, as I said, I am a fan of long-term investment. I may make a video about why I'm so much against day trading and swing trading and stuff like that. Again, it's just my personal preference, so anyone has their own opinion. Okay, so that's it for now. In the next section, we're gonna see what Norbert's Gambit is. It's actually a method that you can exchange your currency. If you'd like to buy American stocks, you have to exchange your Canadian dollars into American dollars. The cheapest method is Norbert's Gambit, so we're gonna talk about that. As I mentioned, there are 3 ways that you can exchange your Canadian dollars into American dollars. The fastest one, and probably the most expensive one, is to do it through your broker, whatever it is. So for example, Wealthsimple, I know it does, but the rate is ridiculously high. The other one is you can bring your money to a currency exchanger and they can do it for you, but also that is also expensive. And the third method is this Norbert's Gambit, which was invented by a Norbert's name type of person. I forgot his first name. So basically it is the cheapest one. It takes, I would say, 5 business days or maybe a week, but it does worth the effort. Okay, it is basically very simple. It just has 3 steps, which I'm going to explain with an example, and anyone can do this. Like if you're like me, if you want to do long investment, so for you time is not a big issue. Okay, you can wait that much month. So let's go and see how it is. Let me give you an example. Suppose you have $100,000 and you want to buy stocks from US market. You have 3 options, as I said. Yeah, you can exchange your money through your broker, which is the custodian, as I said. Yeah, usually brokers charge a commission of 1.5% of the amount in addition to the exchange rate. So if each $1 Canadian or $1 Canadian dollar in the market equals 0.78, for example, just as an example, okay, then we have 100,000 Canadian dollars minus 1.5% commission equals $98,000 multiplied by 0.78 US dollars. Then you'd get 76,830 dollars, 76,830 US dollars. Okay, so that's what you get with a currency exchanger. That's what you get with it from your broker. So if you go to a currency exchange, they will buy remember that they will buy less and sell more than the market value. So if each Canadian dollar in the market equals 0.78 US dollars, then they sell it to you for 77 cents. Okay, so then we have 100,000 Canadian dollars multiplied by 0.77 US dollars or 77 US cents. Then you would get 77,000 US dollars. So it's a little bit more, but again, it's still expensive. And the third one is the Norbert's Gambit, which is the least costly. So in this method, you buy a stock or ETF that is traded in both the origin and the destination market. In this case, for example, you buy an ETF called Horizon US Dollar Currency ETF in the Canadian market. The ticker symbol is DLR.TO, which follows the Canadian dollar price, and then exchange it with the US version of the same ETF, DLR-U.TO. So remember that DLR.TO is the one that follows Canadian dollars, and DLR-U.TO is the one that follows US dollar. Okay, which follows USD price. There are 3 steps. Yeah, 3 very simple steps that you should take. First, you have to find the current price of DLR.TO and buy 100,000 of it. Okay, so in our example, it's just for the example. Okay, so the good thing is Questrade does not charge fees when you buy ETFs. So, and this is an ETF, so you won't pay any. You won't pay any extra fees or anything. Only you pay only a very small commission when you want to sell the ETFs. Okay. So let's go and see how it is. Okay, the second step after you found out about the price and you've bought DLR.TO, now you need to actually contact and ask Questrade to journal, okay, your DLR.TO that follows CAD price into DLR-U.TO that follows USD price. This does not cost anything, but may take 3 to 5 business days. Yeah, that's what I said. It takes, like, as I said, the whole process may take a week, but it definitely does worth it. So, and the last step is to sell your DLR-U.TO. This way, you have exchanged your CAD to USD, and the only cost that you pay is the selling commission to Questrade, as it only charges commission when you sell ETFs. Okay, that's very simple. So let's see how it is. If you've done everything correctly, then you have 100,000 Canadian dollars divided by, so the current price, when I was actually preparing these PowerPoint slides, the price for that time was $12.99. Okay, DLR.TO price, then you would get 7,699 DLR.TO shares. Okay, so B, you would have to contact Questrade and ask them to journal these 7,699 DLR.TO into DLR-U.TO. They know what they have to do. All you should say is, would you please journal my X amount of DLR.TO into DLR-U.TO, and they take it from there. So no worries. And then the last step for you is selling those 7,699 DLR.TO multiplied by $10.09 US dollar, the price of DLR-U.TO when I was preparing these slides. Then based on the example, you would have 77,683 US dollars, which, as you can see, is more than the other methods. Okay, so here it is. So basically, I have prepared a table that shows how much you would be getting, how many American dollars you would get with your 100,000 Canadian dollars. So if you do it with your broker, you would only get 76,830. If you do it through currency exchange, it might be a little bit better, but still it is expensive. So 77,000 US dollars. And with Norbert's Gambit, you would get 77 and 683, which is the highest. Okay. This is just an example. Yeah. So the real world price could be different. I just brought up this example to show you how you can save. Okay. Also, if you want to buy Canadian stocks from US, you can use Norbert's Gambit. That's not a problem. All you have to do is to go through the steps in reverse. Okay, from C to A. Okay, so that's it for Norbert's Gambit. The next section, we're going to see what short selling is, although I don't recommend it, but we're going to go over it and see basically what it is. If you remember, we talked about long investment and short selling. Okay, these are the opposite to each other. Long investment means when you buy a stock of a company and leave it there, and 6 months later, 1 month, 1 year later, 2 years later, you sell it and then you gain something. However, short selling is totally the opposite. In short selling, basically, it is opposite. It is actually different in two ways. The first thing is you first borrow the shares from the broker and then sell it, and then buy back those shares. Whereas with normal investment, you just buy and then later sell. Okay, so this is the first difference. And the second is the interval, the time. For that, you can wait, as I said, 1 year or two. But for short selling, you're basically looking at shorter amounts of time, 1 week, 1 month. It depends. So let's just see how it is with my example. Suppose the current price of XYZ share is $10 per share. Okay, you borrow 100 shares of XYZ from your broker, sell them in the market now, and commit to return them 1 month later. Then you would have 100 XYZ shares multiplied by $10, $1,000, what you have now. So right now, by borrowing those shares from the broker and selling them in the market, you can gain $1,000. Okay. Now you have $1,000. 1 month later, when the time comes for you to return those borrowed shares to the broker, 3 conditions may occur. Okay, let's go and see what will happen. The first condition is if the XYZ price increases to $15, from $10 to $15 per share, which will make you lose, because 100 XYZ shares multiplied by 15, 1,500. What you have to spend to buy 100 shares. Okay, so you had like 1,000, so you earned last month, you earned 1,000, and now you have to put another $500 out of your pocket to be able to buy back those 100 shares. Okay, this means that in addition, as I said, to the original 1,000 you gain by selling your borrowed shares a month ago, now you need to put $500 to be able to buy back those shares. So your losses, given that you have not spent that 1,000 elsewhere, is going to be $500. Okay. The second condition that might occur is price stays the same, neutral. Okay, in this case, you neither have gained nor lost anything, given that again you've not spent that $1,000. Because right now, if the price stays the same, $10, you can spend that $1,000 and buy back the shares and give it to the broker. Of course, I have to mention here, it's not that you don't lose anything, because nobody does anything for God's sake. The broker doesn't lend you the shares for God's sake. They will charge you an interest. Some brokers will even ask for a prepayment of money. Let's say, for example, you want to buy you want to borrow 100 shares worth of $1,000, so you have to pay 0.5% of the trade to the broker to be able to do that, right? So that is how they make money. So the XYZ price decreases If the XYZ price decreases to $5 per share, like from $10, this will make you gain because, 100 XYZ shares multiplied by 5 equals 500, what you have to spend to buy 100 shares. So you gained 1,000, right? You remember last month you gained 1,000. Now you have to spend 500 of that to buy 100 shares and give it back to the broker, and you can keep the remaining 500 shares. So one of the reasons I'm against it is because it is actually, the market tends to increase, tends to go upwards, unless something like a coronavirus or something like that hits and the market goes down, like what we had in 2008 or we had in corona pandemic. Usually the market goes up. So 90% of the time the market goes up. So this strategy won't work. But because it's kind of like interesting, I'm letting you know. Also, depending on your religion, some religions and some sects consider this to be, not like it's against that they prohibit doing so. Not sure why, but that's how it is. So, okay, that's it for this section. In the next section, we're going to talk briefly about the stock markets here in Canada. In this section, we're going to talk about stock markets very briefly, and the most important of them I have found. I have created a list so that we see a little bit of their history and how they took shape. So the most famous one, Toronto Stock Exchange, or TSX, and this is like their logo. So it is one of the biggest stock markets in Canada, the third in North America, and seventh in the world, with over $3.2 trillion in circulation, which was founded in 1981, nearly 160 years ago, when I was making these PowerPoints, okay? And usually the ticker symbol, when you see .to, refers to this stock, means that the company is listed under Toronto Stock Exchange. For example, TD.to, okay? Canadian Securities Exchange, this is the logo. This is the one that my favorite stock, the Very Good Food Company, Very.cn, is listed under. .cn is its actually symbol, okay? A stock market with over 37 billion in circulation, which was founded in 2001, and the purpose of making, the purpose of these newer stock markets is to make it easier for new companies and startups to list and be able to gather money in order to flourish their business, okay? So the other one, TSX Venture Exchange, the logo is like this, and usually .v is its symbol. So for example, I think Test.v, which is a company that produces marijuana related devices, such as a device that can, it's a portable device that can detect marijuana within minutes. Okay, that was just an example, okay? Like CSE, TSXV was also founded in nearly 20 years ago, 21 years ago, with the purpose of listing facilitation for startups. TSXV has over 60 billion in circulation, okay? Neo Exchange. I don't know what the ticker symbol is. I have not seen, or maybe I don't know, but I think it should be, I don't know, .n or something, but I'm not sure about this. So it's relatively newly founded market with easier conditions for listing. It also has some online data services for free, and was founded in 2015. So as you can see, it's pretty much new, okay, in comparison to the other ones. Montreal Exchange, or MX, the logo is something like this. which was founded in 1839, and now future trades are done there. Okay, I really have never understood what future trades are, and I don't recommend, but that's what it is. Okay, so a tip here: markets in Canada open 9, as I said before, I think once I mentioned it in the beginning of the video, 9:30 a.m. and close 4 p.m. Toronto time. And in my opinion, this is just my opinion, there's no like statistics or research for it, the best time for buying is from 10 a.m. to 12 p.m. The reason is the market settles down. If you start to buy, when you begin, you will understand what I'm talking about. 9:30 to 10 is kind of, the prices are kind of like extreme, so you would know for yourself when you take a look. And for selling, I think 2 p.m. to 4 p.m. Okay, that is just based on my experience. There's no research on it. Okay, so that's it for this section. In the next section, we're gonna talk about different brokers briefly, different brokers in Canada. I have prepared 10 brokers, 10 of the top brokers in Canada, which, as you can see in this table, I'm gonna talk briefly about them and anything that I know about them. And so as you can tell, my preference was with Questrade. Overall, I think Questrade, in spite of all of its shortcomings, overall it is the cheapest and also the best broker. However, so I'm going to talk about Questrade more in the next section, the reasons I chose it, but for now let's just talk about the other brokers that we have. The last 5 of them, as you can tell, BMO Investor Line, or RBC Direct Investing, Scotia iTrade, CIBC Investors Edge, and TD Direct Investing are all are for banks. Okay, the big banks. Usually these brokers that are owned by banks, they charge you an upfront fee for commission, and that's it. Okay, but what I find to be not that interesting is sometimes they don't tell you the whole thing. For example, about CIBC, as you can see, the commission is 6.95, and it's just a flat commission. So whether you buy one stock or whether you buy a million, you're going to pay only this one. But they don't tell you that if the order you put is not filled within the same day, the next day, no matter how many fillings the system will do for you, the commission is going to be recharged. So you're going to be paying another 6.95, and this is written in a very fine print in one of the PDFs that I had to dig in their website to find. Okay, or another issue with so you might, for example, think that Wealth Simple is free, it's zero commission or minus 0.5, so why not going with that? My answer is there are so many penny stocks or some other stocks that are not listed there. So you go there, you open your account happily, and then exactly the moment that you want to search for the name of your stock, you see that it's not listed there. Okay, and also they don't actually, I didn't find, but I'm assuming in their website that you have to pay 0.5% of your portfolio each year. Please correct me if I'm wrong, because I haven't been with them. I just gathered all this information from their website, but this is not fair. So it's kind of like it's more than what Questrade charges. So the other thing that they don't mention you, and you have to find it through experience, is the UI or user interface, and how slow or fast their network is. usually banks, unfortunately, are behind, as though they're behind the technology. Even when I was working with TD, their internal software is still with Windows 7, and the core software that they have is command line. So just because they don't want to invest on getting a better software, I don't know, but whatever it is, usually I prefer Questrade's UI. It is more up to date. It is faster. You don't want to. So for example, imagine you want to buy a stock, and you see that the system is down. This is something that when I was doing some research, I found in RBC's forums. Okay, people have said, people who have been with RBC, investors. What is that? RBC Direct Investing. This is what they mentioned in the forums. There's even a video of a lady who encountered this problem. So necessarily money or like the commission should not be the first thing that you decide about a broker. There's a reason that in North America, anyone who is a pro or anyone who is into this business of investing in stock market goes with Questrade. So let me briefly talk about although I'm gonna break it down, but briefly talk about the commission in Questrade. First of all, let me tell you that there's no hidden fee. So many people think that there's hidden fees, and they don't say no. There's everything clearly stated in their website. There are two types of charges: ECN fee, which is waivable, you can waive it, and commission, which is not waivable, so you have to pay commission. Okay. So the commission is, if you buy one share from 1 to 495, no matter how many shares you buy, you would still pay $495. So from one stock to 495. From 495 to 995, it depends on how many stocks you buy. So let's say you buy 600 stocks, you are going to divide it by 100, and you will reach the number that you have to pay. So let's say 600 divided by 100, you're going to pay $6. Okay, let's say you want to buy 821, so you're going to be paying $8.21. Up to 995. Anything above that, doesn't matter how many shares, 1,000, 10,000, 1 million, you would still be paying that $9.95. It doesn't go further than that. Okay, that's how it is. And in the next section, I'm going to be telling you how you can, about the ECN fees and how they are calculated and how you can waive them. Something to mention here is take a look at the websites that I have prepared for you, although you can Google, but make sure that the name of the website matches this one. After.com or .ca, doesn't matter what it is, but make sure that all of them, when you enter into your address bar of your browser, they should be the same, okay? Because there's something called phishing. Phishing is a hacking strategy in which the hacker copies the first page of a website, the login page or whatever, and the only thing that the hacker changes is just one letter in the address bar. So for example, for Questrade, you might see, I don't know, instead of QUESTRAD, you might see QUEASTRAD. So you're going to make sure that the name of the website is correct. And what happens is you go to the website, you enter all of your information, not knowing that that's just a fake website. Although Google, I don't want you to be afraid, Google is very secure, so it doesn't bring, hopefully it just filters those things, but I'm just letting you know so that this thing can occur. So make sure that your browser shows that the connection is secure and it starts with HTTPS. Okay, so about Wealthsimple I talked. The other ones I didn't honestly invest on, and I didn't investigate, but I necessarily didn't need to. I just looked at the big five banks and Wealthsimple. Wealthsimple, just recently they have introduced a web-based, so you can actually connect through your browser, but before that they were just an app. Okay, so maybe they're getting so all of them are getting better, and as I said, none of them are perfect. There's no perfect thing in the world. Okay, anything has its own drawbacks, and when we're going to see the Questrade live, I will tell you there are a couple of things that I really don't like about it, so I will cover those as well. Okay, so that's it for this section. The next section, I'm gonna talk with details about why I chose Questrade as my broker. In previous section, I mentioned why overall Questrade is the best and cheapest, and now here are my reasons, my detailed reasons as to why I chose Questrade. Okay, so Questrade is the oldest online broker. I'm not saying broker, online broker, which was founded in 1999 and currently has over $9 billion under its management. And just so you know, recently I heard that they have filed for becoming a bank since I think 2019. Not sure though. Okay. It's one of the cheapest brokers overall. Here's Questrade commission chart, which I think I explained a little bit, but so I want you to take a screenshot of this, or if you have a pen and paper handy, write them down, because it is going to be necessary when we want to see how you can calculate commissions. Okay, so as you can see, based on the type of commission, so stocks 1 cent per share, minimum $4.95, maximum $9.95. Although I explained in the previous section, but now let me just quickly go over. If you want to buy one stock, one up to 495, no matter how many you buy, you have to pay $4.95. So 1 or 100 or 200, 300, whatever, up to $4.95. From $4.95 to $9.95, 995 shares, you have to actually divide the number by 100, and you will then know how much is the commission. So for example, imagine you want to buy 700 shares, you divide it by 100, then you understand that you have to buy $7, or let's say $8.25 divided by 100, and it gives you $8.25. Okay, this is from 495 to 995. Anything above 995, whether it's 1,000 or 2,000 or a million, whatever, you're gonna still be paying $995. Okay, as simple as that. So that's how commission is calculated, and unfortunately it is not waivable. So commission for any trade that you do, commission is something that you have to pay. Okay, so this was for the stock. Buy and sell are the same. ETFs, the good news is ETFs buying is free. Okay, but when you want to sell, it's 1 cent per share, and like stocks, okay, the same thing. And options also I'm sorry, I really don't know what options are, to be honest, and I don't care, because all I want is to buy a stock and leave it there for a year or two and then sell it for gains. Okay, so I'm a long investor and I don't really care about these things, but just so you know, it's $9.95 for each trade plus $1 for each contract, both buy and sell. So that is the commission chart for Questrade. Okay, let's go and see how ECN fees are calculated. And as I said, ECN fees are electronics communication fees, which is something that other brokers may put into their prices already, so you don't even understand. But there's no hidden fees basically in Questrade. I notice people on the internet say there is hidden fees. No, there's no hidden fees, but so the good news is this ECN fee is waivable, so you can waive it, and it's very simple to do so. But let's first go and see how much it is depending on the stock price. So this also, I want you to, if you want, to take a screenshot, or if you have a pen and paper, write this down as well. So if the price of the stock is $1 or more, okay. I have to explain about two concepts here: adding liquidity to the queue and removing liquidity to the queue. Basically, to put it in a nutshell, when your order goes to the line and waits to be filled, you're adding liquidity to the queue. When your order is immediately filled, you're removing liquidity from the queue. Okay, so when you're adding liquidity to the queue, you're not paying any ECN fees, right? That's as simple as that. And I will let you know how you can do that. But when you're removing, so that's how it is calculated. $1 or more, you're going to be paying 0.0035. If it is 99 cents or less, you're going to be paying 0.0008 per share. And if the stock is listed under CSE, Canadian Securities Exchange, usually the ticker symbol shows .cn. Like for example, my own stock, Very Good Food, which the ticker symbol is very.cn. Then and if the price is 99 cents or less, you're going to be paying 0.0012. Okay, so remember this. If you're planning to buy, like, I don't know, a couple of hundred shares, you shouldn't be worried about these things. It's not going to cost you that much, $2, $3, whatever. But if you care about this, or you want to buy more stocks, like large stocks, let's say you want to put large orders more than 10,000, 20,000, 30,000, then or you want to buy multiple times, so then this fee becomes important to you. So you should know how you can waive it, okay? Which I'm going to explain. The other reason that I really like Questrade, as I said previously, has a very nice UI. It's a modern UI, good network. It's not slow when you want to trigger a trade. I have seen some videos, and in the forums I have read some people have mentioned about other brokers, such as the big banks brokers, that they are slow, particularly RBC. I don't know about the other ones, but I watched a video about a person who complained about RBC being slow and or even being down. This is the worst thing that could happen to any investor, being down. Although I'm a long investor, and for me, like, it's not that important that my order gets filled on the spot, but I don't want any slow network. I want the prices. Or for example, I heard, I forgot to mention in the previous section that I heard from somebody who was with TD Direct Investing that for buying penny stocks, you have to call them. It's ridiculous. To me, it's ridiculous. In this day and age that we're living in, an online world, that everything we do is through our mobile. You gotta call people to just be able to buy stocks. Anyway, this is just my opinion, okay? Also, it gives you, if you want to become a pro, it gives you good software such as IQ Edge, which is really professional and has everything that a professional needs for day trading. Although I'm not a fan of day trading, but if you're a person who want to become one, then Questrade is better. So, as I said, there are two conditions that if you meet, you can actually waive ECN fees. So this is not an or condition, it's an and condition, meaning that you have to meet both of them to be able to waive the fees. Okay, the first one, I mentioned it before. Any order that gets executed immediately, such as market order or marketable limit order, will trigger an ECN fee. So you have to pay, without a doubt. Okay, so your order should not be of these two types. Usually remember that for the sake of this video and just so you know, the best type of order is a non-marketable limit order, in my opinion, of course. Okay. And what is a non-marketable limit order? An order in which at the time of buying is 2 to 5 cents less than the bid price, and at the time of selling it is 2 to 5 cents more than the ask price. Okay. It allows the order to remain in the queue for a couple of seconds, or even sometimes hours, and this prevents those ECN fee from being triggered. Now there is so marketable limit order. So this was about the non-marketable limit order. Marketable limit order is the one that you put on the price. You put a limit order, however the way you put the price is exactly on the market price. So let's say XYZ bid price is now $1, and ask price is $1.05. So if you want to buy, if you put 100 shares for and you put the type of the order as limit order, and then you put $1, your order may get executed immediately, may or may not. So that's why you don't want that. If you remember, I talked about 4 types of orders: market order, which gets executed immediately on the market price; limit order, which you can determine how much shares you want, and it's not on the so you are the one who determine the price. A marketable limit order, which is a limit order but on the price of the market, okay, whatever the price is currently, and non-marketable limit order, which is the one I want you to learn. This last one is the one that you have to put if you want to just be sure that you're not going to pay any ECN fees. Non-marketable limit order. Okay. The first condition, as I said, you have to put non-marketable limit order. Now the second condition, the lot of your order, or the number of shares you're buying, should be a multiple of 100. Okay, there are 2 ways that you can make sure that the number is a multiple of 100. If you divide your order lot by 100, the answer should always be an integer number, not a decimal number. For example, here 200 divided by 100 equals 2, okay, which is an integer number. But 245 divided by 100 is 2.45. It's a decimal number, so actually I have written will trigger ECN fee, but let me tell you something. You cannot put 2.45 in your lot, okay, because you cannot buy a fraction of stocks. Okay, so it's a mistake. Sorry for that. Okay, I don't know what I was thinking when I was writing these PowerPoint slides. Anyways, so this is the first way. You can always divide the number of shares you want to buy, and if the number is integer, which means there's no decimal point, then you're good to go. Okay. The second way, which is easier, the integer number has 2 or more zeros as its last digits. For example, 2,500, okay, or 2,500, 2 zeros or more. I think this is much easier. So when we go to the Questrade Live, I will show you how you can do that. It's very easy. All you have to do is to always take the last 2 digits of your number, whatever shares that you have calculated, because we need to calculate how many shares we can buy. Okay, I will show you how. But for now, just know that you can take the last 2 digits and put zeros instead. Let's say, for example, you have calculated based on your money that you can buy 2,312 shares of XYZ. Okay, 2,312. So we take that 12 and we put 2 zeros instead. So now it is 2,300. So we reduce that to zeros. Okay. So I will explain more when we reach to that section of the video, but this is something important because I've noticed so many people have been charged ECN fees, and commissions, and they don't know how to, put the order. It's very, very easy. Okay. Yeah, this is the good one. Questrade has a referral program that pays some money to both the referrer and the referred person. Okay. When you become a customer, you can get a code that you can refer anyone, and based on, the people you refer, you get, some kind of a price. So if you like, this is my code, you can use my code. I'm also going to put it in the description. So if you want to open an account, all you have to do is to apply this code, and it will just give you the price. Also, Questrade covers up to $150 of transfer fees if you already are with another broker. So whatever I know that, for example, CIBC covers up to $130, but Questrade covers more than that. Okay. So here are the prices that I was talking about. What Questrade will pay you. So if you put 1,000, Questrade will give you $25. 10,000, $50, 25,000, $75, 50,000, $100, and $100,000, $250. So it pays the referred person, depending on how much they put, from $25 up to $250. Okay, it's some kind of a price for itself. And what it pays to the person who refers, like for example in this case, if you use my code, what it pays to me is the first person $25, the second person $25, and the third $25 plus another $50, like I think it is $75. So that is how the price structure is. And remember that you have up to 90 days after opening your account to increase deposit. Okay, so it's not just, so let's say you have, for example, you have you have transferred 1,000 the first month. The second month you can transfer another 10,000, so you can get the $50 price. So it's up to you to just increase it. There is a 90-day window for that. Okay. So this wraps it up, this section, and why I like Questrade. So in the next section, I'm going to talk about why I chose Tangerine. It takes like usually 2 to 3 business days from Tangerine to Questrade. I have never done vice versa. I haven't transferred from Questrade to Tangerine. But I'm just going to briefly talk about that because I used it. The reason that I talk about it in this video is because I used it to transfer money from Tangerine to my Questrade account. So that's why. Okay, so in this section of the video, I'm going to talk about why I have chosen Tangerine as my bank. I've been with 3 of the big banks, BMO, Scotia, and TD. But because I think the future is going to be everything through internet, and cash is going to be something that belongs to the past within 5 to 10 years, I think that internet banks will take over everything. So that's why I have chosen to go with Tangerine, which is, I think, one of the best one here in Canada. Okay, so let's see my first reason. The first reason is, as I said, it is an internet bank and a subsidiary of Scotiabank, which means that you can use its 3,500 ATMs all around Canada, as well as 50,000 other ATMs around the world, all for free. This is very good, given that and what I like about its ATMs is that you can do the most necessary stuff with it. So changing PIN, depositing and withdrawing, which is, in my opinion, like these are the most necessary things that an ATM should do. The other reason is because it is an internet bank without any physical locations, it makes it to be able to implement and give some services free of charge. Most of its services actually are free of charge, including checking accounts, all for free. This becomes a matter if you know that, for example, Canadians spend over $200 per year on average just to keep their accounts. So I think that this is not necessary. Why should you pay like money monthly to just keep your account, like to keep your account open, right? You can say that you can waive it, yeah, of course, but why is it? What do you want to do with your money? You don't physically touch it. Most of the things that you do is through internet, like your credit cards, your transactions, transferring money. So I don't see any necessity for opening an account or keeping my account in a physical bank. The other reason is the cashback MasterCard that Tangerine has, in my opinion, of course, overall is one of the best credit cards with no annual fee that you can get. You need to only, if you want to be eligible for that, you need to only have $12,000 of income per year. So, because in Canada, if you want to get a credit card, they're gonna, like, I think in most countries it's like that. If you want to get a credit card, they first see your income. So, if you have filed bankruptcy, you can start with other cards, but this is given that this is given to people with low income or moderate income. This could be the one of the best. It has 3 categories you can choose that it gives you 2% cashback. Of course, the thing is, they first give you 2 categories. If you open a savings account, you can choose another third category. So anything that you spend. So, for example, I have decided to go with recurring bill payments and groceries. So any grocery that I buy, anything that has the title grocery or any recurring bill payment will give me 2% cashback. Okay, so the other reason that I really like is because its savings account is amongst the highest interest paying accounts. Okay, and it also pays interest on checking, but the interest is less than the savings. Now, it is still low in comparison to what you can get from the stock market or what you can get from other investments. If you have, let's say, a lot of money, I don't know, 100K or more, but like, if you consider that the savings account that they provide is amongst the top interest paying, this could be an option that for some people who don't wish to invest their money. They just want to put their money for 6 months or whatever somewhere. So that again, that's low, but it is better than nothing. One of the good things that Tangerine has is that if you become the customer of Tangerine, you can refer your friends, and it will pay $50 to you and $50 to the person who you refer. However, you can only do this 3 times per year. You need to have, after you become a customer, you get what's called an orange key that you can share it with your friends or anyone, and they can open up an account. And but they need to keep like $250 for 90 days in their account, so they shouldn't touch it. And after that, they're going to be given $50, and you also are going to be given $50. So here I have my code. If you're interested, you can copy this code and open your account if you're willing to. I will also provide this in the descriptions of the video. The other reason is I really like the customer care. I mean, you're gonna, particularly these days in COVID era, I don't know before that, but because I've been their customer for, I would say, 9 months or so. It takes time. Like you're gonna be behind the line for, I don't know, 30 minutes, 40 minutes. It's not like TD. TD, I think, has the most, the fastest customer service. As soon as you call, somebody will pick up the phone and will answer you. But for me, it's not a big issue. I just call and do my thing at home, and then after someone picks up, I will talk to them. So it may be from 30 minutes, 40 minutes to even an hour, But again, their customer service is nice because it's 24/7 like TD, and also the mobile app that they have, which has earned a good level of satisfaction from customers, is also a very convenient way of doing your banking. I never, rarely I use the website because it's everything that I want is through the mobile app. Plus, it gives you some sort of extra functionality such as depositing a check, which is very great. Of course, all banks have these. It's nothing that just Tangerine has, but it's very simple. I mean, I like the UI. It is fast and nothing. I would say nothing less or more than others. But like, I like how the layout is. Okay. Some of its other advantages include unlimited free transactions, which something is that I mentioned. Free internet money transfer. I think for TD it used to be, if you want to do in-track e-transfer, it's $1.50. I don't remember exactly because I didn't do, but like I know that there's a fee for that. The first checks that you get, which is 2 decks of 25 checks, is for free, and then $20 afterward. $1 for non-Scotiabank ATMs in Canada, and $2 around the world for doing transactions in the ATM. And if you consider that, for example, I think in Scotia itself, non-Scotia ATMs, you would have to pay $3. I'm not sure exactly, but like it is less than other banks. $40 NSF fee. So non-sufficient fee, if you, I'm just explaining for the beginners, if for example your billing company wants to take money from your account for your bills, such as, I don't know, cell phone bill or hydro bill or whatever, and there's not enough money, the bank usually will charge you a fee. So in this fee is called non-sufficient fee. For TD it is, I think, $45. But at least the good thing is in Tangerine it is just $40. Okay, so that's it for this section of the video. In the next section, we're gonna see how you can open a TFSA account in Questrade. Opening an account in Questrade is really simple. You can do it on your cell phone as well. If you go and search for Questrade App in your Apple Store or in your App Store, or I don't know, Google Play, you can find it and do it that way. But I personally prefer PC. So let's go and see how it is. So this is the first page of Questrade, okay? And this is the address. Make sure that the address you type is exactly like this. After .com, it's not that important, but make sure that the address matches this one. Of course, if you Google, you can easily find it. Okay, it's usually the first option. So after you bring up the first page, you have to click on open an account. Okay. Then, as I said, there are different types of accounts you can open. You can open a margin account, which you require to pay tax on it, but you can do as many transactions as you want to do, as many buys and sells as you want to do. So it's good for active traders or day traders, which I highly recommend not to. TFSA is the one that I want you to choose for the sake of this video, but you can, as I said, you can do other ones as well. So for example, register with RRSP, or with regards to Forex and CFDs, I really don't have any experience, and I just buy and sell stocks, so that's why. Quest Wealth is, if you open that account, it will arrange a portfolio based on what the market is. So they have come up with a intelligent portfolio management system that they decide. The computer decides which stocks to be put in your portfolio. Okay, so just choose TFSA. When you choose TFSA, there's something that as you can see, says add offer code. So if you want to get the price I talked about, you need to click on this, and then you need to enter my code. As you can see, you can also enter any code. If a person has given you any code, you can also enter that, and then you're gonna click on agreeing with the terms, and when everything is fine, just click on open now. So please disregard this image, because I actually got these screenshots from a video, which I'm gonna tell you the source of this video later. But like just when you choose TFSA is going to be green for you. Okay, so don't look at this, just disregard this green thing that you see on margin. Okay, it actually shows you the offer code multiple times throughout the process, so all you have to do is to make sure that it's right, and then click on continue. So here you need to put your first name, last name, email address, and phone number. Remember to put your cell phone number, definitely, and then click on continue. So now you need to create a user ID. Sorry, I need to take some water. Okay. Remember that remember to save your password somewhere. If you have an Apple device, you can easily turn on keychain, iCloud keychain, and it will memorize your password for you. So next time you will use your Touch ID or Face ID to open the app, if you have it on your phone or in your website. Okay, you can also use services such as LastPass to to just save your password there, and then click on continue. Okay, so here you need to choose security questions, and as I said, make sure to safeguard them. 2 security questions and 2 answers. Usually, as I think the answer should not be the same. Okay, then click on continue. So now basically you're in, but you have to make sure that you go over and complete all the sections. So so you're in the website right now, so let's go and complete undone sections. After you click on personal, here's where you have to if you didn't there are a couple of things that you have to do. Your first name and last name is definitely given to them, but phone number, email address, your residential address, and street type and everything that you see in the image, unit, and then after you put your address, just click on done. So this section will be done, and there's going to be a green ticker just besides each square that shows you've done that step correctly. Okay, so let's go to the employment and click on start. So here's where you can determine your employment type. This question: are you employed with a securities dealer or stock exchange? If you work in a stock exchange, you gotta mention to them. Okay, is anyone associated with any of your accounts reporting an insider, or if you or anyone is an insider or shareholder of a company, you can mention yes here, depending on your condition. Are you a foreign or domestic politically exposed? So I hope you're not. I am not a politician anyway. After answering the questions, just click on done. So as you can see, a green ticker symbol will show, or check mark, let me say, a green check mark will show besides each square. Okay, you can then review. Now for your financial information, let's click on start. So in financial, you can tell them your annual income. Liquid assets means assets that are in cash. Sorry. Fixed assets such as, I don't know, your home or whatever, things that are difficult to turn into cash. And liabilities means whatever you owe to somebody, your debts. Okay. After that, click on done. So this section is done, and let's go to the citizenship. Okay. So country of citizenship, if you choose Canada, it will ask for your SIN. Remember, just because it's a picture, a screenshot, I cannot show it here, but if you choose Canada, it will ask for your SIN, so you have to enter your SIN there. Then were you born in US? If you choose no, then it will ask if you're an American person or not. Okay, which you can determine. Are you a permanent resident? Here you have to mention whether you're a permanent resident or not. Are you a tax resident of a jurisdiction other than Canada, meaning that, for example, do you have to pay taxes to the American government or not? And then after answering those questions, the last one is, I certify that all tax resident information is complete. So this is, you're giving them, you're confirming that all the information is right and true. Okay. Attention, make sure your info is correct. Yeah, all of the sections actually make sure that your information is entered correctly, and then click done. So citizenship is also done. Now let's go and finish the individual TFSA account that you opened. Okay, so click on set up your account. There are 4 steps that you have to take. Account details, consent and communication, person with financial interest, and agreements. So let's do one by one. So account details, do you want to trade in options? I chose yes, but you can choose whatever you want. What's your purpose of this account? Whatever. You can tell them your initial deposit and click done. So this section will be done, as simple as that. And then consent and communication. So usually this is not that important. You need to give them consent. Okay. So it says you're giving consent to Questrade to disclose your info with companies. For me, it's, if you want to give them consent, you can do. If you don't want, for me, these things are not important. I just gave them consent. So, and then you can click on done. Oh no, not done. Sorry. There's another section in this. So you have to scroll down where it says which security holder materials do you want to receive. So you can mention which information you want to receive. Okay, all security holder materials sent to beneficial owners of securities. So usually companies send some information to shareholders. So if you choose all, then all of the information that they sent will be reached to you. You can choose I want to receive only proxy related materials in connection. I don't know what it is, proxy related. I do not want to receive any security holder materials. I chose the first option, but it's up to you. And the language, English or French. And then the last thing, I understand the information is correct. And then you're confirming the information is correct and true. And click on done. So that section is also done. Persons with financial interest. So would you like a reminder delay to finish? Okay, so here, as the primary account holder, it's your responsibility to add all persons with a financial interest to your account. It means, is there anyone apart from you that is being benefited from this account? Okay, I said no, so it is up to you. And then after that, I confirmed. Again, the last option is to confirm. And then you can click done. So this section is also done. Let's go to agreements. So what did I say? You must check all 4 boxes, and after checking each, a new window will appear in which you will have to click accept. If you don't agree, your account will not be so, of course. So these agreements are necessary, and they're not like, I don't know, it may be a bad habit, but anytime I want to open an account in a bank, like if you don't, in a bank or somewhere else, let's say on the internet or whatever, if you don't accept their agreement, like they don't allow you to open the account. And remember that later you can always have a copy of all of these agreements and read them. Sorry. So yeah, after you click on each agreement, a new window will pop up ask you to accept. Okay, you can read it, and then after accepting all of those, then you can click on done. So let's go and see how they look like. So it's something like that. Okay, see, you're gonna click on accept, 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 and accept. Okay, so account agreements are done. Now you're gonna scroll down where it says e-sign the forms, statement of acceptance, whatever. Okay, to e-sign the forms, click on e-sign. In this section, it shows you, the form. You can fill it out. So definitely this is a personal information, so that's why it's blurred. After filling your information and initializing, you can click on finish. Okay, after clicking on finish, it asks you to agree with the terms of using e-sign, because it's not like a normal sign. Okay, that's why. And then you can click on continue. So after signing the paper, so it's gonna let you sign with your mouse, so no worries. After signing the paper, sorry, the whatever the agreement, it is time for you to upload your ID. Remember, there are always you can always do it through account management, which I'm gonna show you in Questrade when I'm doing it live. But for the sake of the first time, here's how you can upload. So click on upload. Okay, what did I say here? You can easily scan your ID card with a cell phone or tablet. Yeah, you can take a picture. Remember that the lighting condition should be good and it's legible. Okay, you can it gives you 3 options. You can either upload it right now, or you can email it to Questrade, or you can mail a copy of it. So definitely uploading is much easier, but if you don't have access to a scanned copy, you can always take it later, scan it later and email them, or you can use paper. It's up to you. Okay, so after that is done, here's where you can fund your account. Okay, you can always do it at a later time, but because you're opening an account, so let's do it just now that you're opening an account. Okay, when you click on fund, you're given some options. You can the first one is online banking, which is the one that you need to choose. After choosing that, you can determine your bank, and it will redirect you to the website of the bank. Okay, sorry. You can also use InTrack online. You can send them this way using InTrack. You can transfer. If you already have an account with another broker, you can transfer your account, so you can fund your Questrade account this way, or you can pre-authorize Questrade and let them take it themselves. Okay, so for the sake of just the first time opening an account, just choose online banking. After choosing online banking, here's okay. Remember, I just erased this account number, but remember that here is your account number. Here's where you have to copy your account number or write it down, because later we're gonna need it. Okay, then you have to choose your bank. Okay, after choosing your bank, which for the sake of this video I'm going to choose Tangerine. After choosing it, you're going to click on fund, not finish but fund. Okay, when you click on fund, you're going to be redirected to the website of your interest. Let's say, for example, you're banking with, I don't know, TD or BMO or whatever. You can choose from this list, and Questrade is going to redirect you to your bank. So that's it for this section. This is how you can easily open an account in Questrade. Something that I have to mention here is there might be some steps added to these steps, and usually it's the same, but I'm assuming that it's going to ask you to agree with each stock market rules, because you know why I'm saying this is because I took these screenshots from a video of another YouTuber. But when I was doing it myself a couple of weeks later, it asked me to agree with each of those stock market rules as well. So it's nothing that important. You're going to agree with those as well. For example, NASDAQ, I don't know, TSX. So there were a couple of them, okay? So that's it for this section. In the next section, we're going to see how you can transfer money from your bank to Questrade. Just for the sake of this video, I'm going to use Tangerine, and also it's my own bank. I also have done another separate video on why I chose Tangerine. And I have reviewed its website, ATM. I may put the link in the description below this video. But so for now, let's just see how we can transfer money from any bank to Questrade. As I said, I use the Tangerine website to show you, but you can do it from any other bank, okay? All you have to do is to log into your bank account and find a section that says pay bills or add a payee, okay? Because what we have to do is to add Questrade as a payee, and then that way we can transfer money, to Questrade TFSA. So as you can see, I've already added Questrade, but for the sake of this video, we're going to click on add a payee to see what happens. When you click on add a payee, you have to look for the payee name. Make sure that you type Questrade correctly. There are probably, I'm assuming that there are two, it gives you like two options. One of them is Questrade Exchange, the other is Questrade Inc. So you should choose Questrade Inc. Okay. Yeah, as you can see, it gives you Questrade Inc. Then you should paste the account number that I just asked you to copy in the last section. So anyway, your TFSA in Questrade, make sure that they match, okay? Double check or triple check just to make sure that they match. You can also give it a nickname. It's up to you. And then after that, just click on add. So when you click on add, you can see that Questrade is added. And just because I already transferred a couple of times to Questrade, so it shows you the last time you transferred any money to Questrade, okay, and the amount also. So you can, after adding Questrade, you're gonna check this checkbox besides its name, and then click on next. So here you need to determine the amount so you first have to determine from which account you would like to pay. So in this case, I have only a checking account with Tangerine, so it's already chosen for me. Then it shows payee Questrade, and it also shows the account number. Then you're gonna put the amount, how much you want to transfer to Questrade, and then it shows the date, okay, the date of the day you're doing the transaction pre-populate automatically, but you can also set a date, whatever date you want, okay? Now, if you click on recurring, okay, what will happen is it will give you some more options, okay? You can choose, recurring means repetitively, means to transfer multiple times. Okay, so if you choose weekly, it's gonna transfer this much amount of money weekly to your Questrade. Likewise, bi-weekly every 2 weeks, and monthly every month, okay? And if you click never ends, it doesn't show you the end date because it will never end, right? Until you cancel it. You can also, if you don't want, so if you just want, for example, to do this multiple times for 3 months, you can choose monthly, and then you can give it the end date, okay? Then whatever you choose, you're gonna click preview. After you click preview, make sure that all the information matches. Double check your Questrade account number, the amount you are trying to pay, make sure that it's from your checking account that you want to pay, and the date as well. And then after you click pay, it takes like 2 to 3 business days for your money to arrive in your Questrade account. Also, you can, I think it is possible for you to cancel at any time you want before it's transferred, okay? in Tangerine. So what happens is, if you remember the last section, we were in this page when we were trying to finish up creating an account in Questrade. So if you want, you can just go ahead back to Questrade and click on finish. So this would be actually the last step of your account opening. So you have to wait 2 to 3 business days for your money to arrive. Okay, so that's it for this section. In next section, we're gonna see how you can automatically transfer your account from another broker or another bank into Questrade. Let's say you have a TFSA in another bank and you want to transfer it to Questrade. So you can do it through Questrade and you don't need to do anything. It will also, as I mentioned before, cover up to $150 of transfer fees. If you have a TFSA account in another broker or another bank, Questrade has made it so easy for you to transfer that account into Questrade. So in this section, we're going to see how you can transfer your account from another broker into Questrade. So after you create your account in Questrade, all you have to do is to go under funding, and then you see the option that says transfer account to Questrade. And remember, as I said, Questrade will cover the fees up to $150. For CIBC, I know that they cover only $130. So this is a very good thing. This is a very, very nice feature from Questrade. So after you go to transfer account to Questrade, you can click on Start Request. After that, you're going to select the account that you have in Questrade. Okay, the account that you would like your transfer to come to it. Okay, then you're going to click on Next. So then you're going to click from which institution you would like to transfer. Okay, whether it's a bank or it's a broker. Okay, then you're gonna put the account number from the other broker or institution. So you remember, it's in this place, in this section, you're not gonna put your account number in Questrade. You're gonna put the account number from the other broker or bank. Okay, then after that, you're gonna click on Next. Okay, in this section, this is very important. These 3 options, all in cash, means Questrade will liquidate everything in that account, in the other broker account, and bring them all as cash to your Questrade account. Okay? Sorry. The second option will transfer everything as is. For example, let's say you have, 100 shares of Apple, you have 500 shares of an ETF, you have bonds, whatever that exists in your other account, Questrade will transfer them as they are. So it doesn't do anything, like it doesn't do any sort of liquidation. And the last option will let you choose which stocks you want to transfer or how. Okay, so for the sake of this video, we're gonna just choose first all in cash, so you see what the options are. No worries, when you click on Next, it doesn't do anything. It just shows you the preview. Okay, so you can here determine how much cash, how much cash how much Questrade can cash out for you, can liquidate for you, and then after determining. So this is the estimated values, no worries. Questrade will determine itself. So this is just the estimate. Okay, so for example, imagine you have, the stocks of Apple, and you know that they're worth $2,000. So you would put $2,000, but when Questrade sells, it might be even more. So no worries of that sort, it's just an estimate. And you also have to mention whether it is a Canadian dollar or US dollar, CAD or USD, okay? And then you're going to click on Next. So that's what it shows you. It's just a preview, as I said. So it's not gonna do anything before you click on Confirm. Okay. So it shows you the banking detail. It shows you the type, all in cash. It shows you how much, and it tells you the processing time, which takes 20 business days. Okay, so we're gonna just go back to the previous section and see if we choose all in kind, what's gonna happen. We're gonna see if we choose partial transfer, what's gonna happen. So in partial transfer, you can click on add asset. If you choose partial transfer, you can determine the type of securities to be transferred. We're gonna click on add asset. Things that you can transfer: cash, stock, mutual fund, options, and others. But remember that if you have ETFs in your other broker or your other account, you need to choose stock here, because Questrade does not give you an option for ETF. If you choose a stock, then it considers both for stock and ETF. Okay, so we choose cash, for example, just for the sake of this video, and then we put the amount and of course the type of the currency and click on save. And in the next section, it will ask you, like if you choose a stock, so okay, after you click on OK, it's going to give you the preview like before, and then if you confirm, everything will be done. So for the sake of this video, I just wanted to see what it will be doing if you choose a stock. If you choose a stock, what it asks you is, so it asks you how you want to transfer. If you choose in cash, it will liquidate all of your stocks or ETFs into cash and then transfer them. Or if you choose all in kind, as I said, it's gonna do as is. So whatever stocks you have, it will bring them here. And the symbol, you have to mention the ticker symbol. It's very important that you put it the right way, okay? In the description, you can put the description as you want, so it's not that important. But in ticker, it should be the exact ticker symbol, okay? Then in terms of quantity, for example, how many of the stocks you want to transfer. Let's say you have 100 stocks of Apple or Enbridge or whatever, and you want to transfer just 50. So here's here's the numbers that you can determine, okay? And also the currency, which is CAD, and then you're gonna click save, okay? After you click save, you can click, so in the next page, you can click on whatever stage you're in. It will ask you for your permission. So you can click on continue before submitting your request, okay? Because this sort of partial transfer requires you to give them signatures, okay? That's why. Sorry, after reading the form and see that everything is correct, you can then click on start. Okay. Now after doing so, whatever you choose, whether you choose all in kind, all in cash or partial transfer, you can see, you can go back to funding, and then you can go to request history to see your requests. Okay. So after you do this, what you need to do in the next section is you need to wait 30 days or a month for your statement. Okay, so you don't need to do anything in your bank's website, or you don't need to call them anything. So the Questrade will do everything for you, but all you have to do is to wait for your next statement from your other broker or bank. And after the statement is issued to you, you're gonna just go here and upload it to get that rebate, okay? And the process is very simple. You go to account management and then upload documents. Then you're gonna go to choose first your account in Questrade, the one that you want the rebate to be put on, okay? Then afterwards, you're going to go to document type and choose rebate, okay? And after that, you're going to click on browse and upload the statement from the other bank, okay? And then all you have to do is, after you click on browse and upload the document, all you have to do, you can choose a name for your file that you have, for your document that you have chosen, but it's up to you. You can give it a nickname, okay? And then if you click in upload, everything will be done, and you have to wait for, I think, I don't know, couple of business days. You have to wait, and then you'll be able to see it under your accounts, okay? The rebate will be posted under your account. Okay, so that's it for this section. In the next section, we're gonna see some of the stocks that are under my watch list. Of course, those are just for example, because my watch list is far more than that. I have just chosen 5 stocks for you to see, and the ticker symbols and how they are, and also the sources for this video, okay? This is going to be the last semi-live part of the video, because I have prepared these slides, and in the next series, in the next sections, we're going to see Questrade Live and Yahoo Finance Live, and the Stocks app, and also Questrade app, all live. So okay, here's a list of a few of the stocks that I have in my portfolio. But just so you know, I already have made a couple of videos, I think 3 videos with regards to some of the stocks in the Canadian market, which I'm going to put the links in the description of this video, so you can check them out. But just for the sake of this tutorial to be finished, I just want you to know how the name of companies are and how their ticker symbols are. Okay, so the very first one, the Very Good Food Company Inc., as you can see, the ticker symbols look like something like this. For example, very.cn means this stock is listed under Canadian Securities Exchange. .cn, usually if it is .cn, means it's listed under Canadian Securities Exchange, and this is for Canada. VERYYF, this is for US, so it's in the US market. Remember not to make mistakes between the two, because in Questrade or any other app, let's say for example you're with Wealth Simple, if you want to buy and put this very VERYYF and go ahead with the purchase, I think it can buy, but it's going to exchange your currency to US, and you're going to pay for that. So make sure, so the ticker symbol is very important. So for the Frankfurt or Germany stock market, it is OSI.F. If it has .F, it means that it's listed under Frankfurt Stock Exchange. So the company, basically what it does is plant-based foods such as sausages. Now the irony of the situation is I am not a vegetarian, and neither have I planned to be one, and I'm actually honestly against it theoretically, because according to the developmental science, if it wasn't because of meat, our brain would not grow this much. But because I looked at the sector and understood that this sector is growing, and kind of like liked what people said and what I read, so I decided to choose this one. And by the way, as I said, I learned about the company by putting some time and doing my diligence. Although I don't like vegetarianism, but because I feel it has the potential, I decided to go with it. Okay, there's also another reason. It is a competitor to an American plant-based company called what was that? I forgot the name. So it is basically going the route that company went. So it went from, I don't know, a couple of dollars and became a $150. The stock went up to $150. Oh, the name was Beyond Meat. Sorry, the name was Beyond Meat. Yeah, Beyond Meat went from just a few dollars to $150. So I think Very is doing better. I'm gonna make a separate video about it. So if you want, you can just subscribe. I'm just telling you so that you know how you can find companies and their ticker symbol, how it's important. Real estate, RioCan Real Estate Investment Trust, as you can see, the ticker symbol. Okay, it is listed in Canada, US, and Germany. and basically the name speaks for itself. It manages rental properties. Okay, it's good for it's a very solid dividend stock. Drone Delivery Canada, these days they talk about a lot about it. It is, I don't think if it is listed under Frankfurt Stock Exchange, but anyways, what it does is development of drones and related software. Okay, and it sells its software to other companies, and usually the drones is used between businesses, not for a domestic, not for usual people like me and you. So the good thing is it is between the businesses, but it might have a good potential as well. Well Health Technology, this company emerged in this coronavirus. What they do is telemedicine and physical. They have physical clinics, but their focus is on telemedicine. So because they have their own software, they're actually trying to develop their own software and environment. So there's also potential for these things too. Who knows, maybe 5 years from now, 10 years from now, everything becomes like through internet. So that's why. Another one, and of course, as I said, these are just a few. So if you want to know, you have to click on the link for the other videos I have, but much more stocks than these ones. Mind Medicine or MindMed Inc., a company that works in psychedelic medications. They have come up with some sort of a new medicine for depression, and there is potential for this as well, because their method is kind of newer than other companies that have just focused on SSRIs. Okay, so now let's see some of the sources I used for this video. Definitely Tangerine, which is the bank. Make sure that if you want to go to their website, here is the correct form of the website. Canada.ca, Revenue Agency, of course, CRA. This is CRA. So I got some information with regards to, you can get information with regards to your TFSA and contribution, but it is delayed, okay? Remember that there's I think 3 months delay, so don't just rely on them, okay? You can also go to your financial institution, whatever it is, or broker, and ask them for a statement. So that is more accurate. Yahoo Finance, which, because it's a global website, so from wherever you are, even if you're not in Canada, it will actually bring the website based on the country you are. Okay, so now that I'm in Canada, as you can see in the name, ca.finance.yahoo.com. So that's how it is. Very Good Butchers. Their name is Very Good Food, but it used to be Very Good Butchers. I think it's a just a name subsidiary. Okay, but their name was Very Good Butchers. This is a website that you can calculate your TFSA contribution limit, and as I said, it gives you the contribution limit for the next year, but it's not reliable. Just for the current year that you're in is reliable. So do not plan based on what the website, it just says something based on previous information. So always refer to the government in February, usually the end of February each year. You can during October, November each year, mid or end of November each year, you can refer to the government to see how much is the contribution limit for the next year's TFSA. Investopedia, of course. I got lots of definitions from this website. Okay, Wikipedia as well. I'm a Wikipedian myself, so I translate some articles from English into Persian. YouTube.com. So this is this is the Adrian's channel in YouTube. You can just take a look. So I actually opened my Questrade account using his code, so that's why I brought it here, and I also got some of the screenshots for this video from his videos. Okay. Hummel Trader. This is her YouTube channel. I also got some of the screenshots from, for this video from her video, so you can also take a look at her channel as well. It's Daniel's channel. I forgot his. I think there's a name. I don't know. I forgot his channel's name, but whatever. This is his channel. So he was one of the people, the very first people who actually I asked about, and he introduced me to Veri. I didn't know at the time. And then after I understood about it, I went ahead and did my due diligence and bought the shares. And of course, the last one, this is the official Questrade website. Okay, so that's it for now. In the next section, we're gonna go live to my account in Questrade and see how we can put large or small orders in Questrade without paying any ECN fees. Okay, so I think this section is one of the most important sections of the video. I'm going to go to Questrade directly and show you live how you can put large or small orders. So just because I already had it in my history, so I don't need to memorize the website. But as you can see, it's https://www.questrade.com. Okay. So what I'm going to do is to click on login because I already have an account. Then I'm going to enter my credentials. So just because I trust this computer, it's my own, so it doesn't ask for my for any sort of code or anything. But if it's your first time, it might ask you, it might send you a code and you have to enter it here. Okay, so here's the main page. This part you can see open P&L, so it shows you profit and loss from the very beginning that you started investing and in total all of your assets. Okay, I don't know why it shows in USD. I really don't have a clue, but and the percentage of your P&L from the very beginning, it shows you right here. And by the way, the color definitions in Questrade is, if it is green, it means the operation is successful or price increase. If it is red, it means the operation has failed or price decrease. And if it is yellow, it means there's a problem with regards to the operation and you need to solve it before it's done. I'm not going to go into the nitty-gritty details of the website, but there are a couple of things that I thought I have to mention before telling you how you can put an order. So first you need to go to when you open the website, the first thing that it shows you is, as you can see, balances. You need to go to executions, and just because I didn't have any executions, it doesn't show me anything for today or for any it has up to 1 week, 2 weeks, and 1 month. Up to 1 month it shows you, but I don't have any. So what I want you to do is as you can see, there is a library type of icon. You're going to click on that and you're going to go and as you can see, I have added ECN fees myself. It is not added by default, so let me just remove it. So you see it's not added by default, and you're going to find it and click on this plus sign to add it. When you add it, it shows you how much ECN fees Questrade is going to deduct from you. Okay, so that's it for this section. Also in settings, there are a couple of there's one thing in settings that I want you to be aware of. In general, sorry, show negative values in brackets. Make sure to uncheck it because you don't want to see negative values in brackets. I really don't get why it's there. Show commas in numbers. Make sure to check this because you don't want any mistakes. Okay, so for example, 10,000 shows you 10, comma 3 zeros. Okay. There's also another thing in under account, I think. So here I have decided to just check show all in CAD, and that's enough because it prevents me from any sort of confusion. Okay, but it's up to you. Show closed position, include cash percent in portfolios. If you choose include cash in portfolio, the percentage of how much cash you have is also gonna be included in your portfolio. I've checked this, but you can uncheck it. So okay, here as you can see, right now we're under the account tab, and as you can see under execution, if you click edit, it gives you the same options that we saw in the execution tab. So you make sure that you have that ECN fee is added before you start trading, okay? Because again, by default, it doesn't show you. So that's about it. We're not gonna, so let's go to the account. So there are two ways. Before that, let's click on this. If you see the top options that it gives you, stocks, options, ETF, the first thing is stocks, options, and ETFs. So I don't really care about the mutual funds, FX, fixed income, whatever, but about the IPOs, if you click on it, it will bring you to their IPO center, which you can see the companies that are first time going to go to the market, okay? The initial public offerings, okay? So here it says go to the IPO center, and you can see, if you scroll down, the one that says open are the ones that are going to go public or have gone public. So right now it doesn't have any open one. Closed is, as you can see, are the ones that have already been IPO'd, okay? So let's go back to Questrade. On top, if you click on trading, we don't care about the 5 options. All we care about is accounts and trading. So right now I'm going to go to accounts. Sorry. Okay. When you're inside this, again, I'm not going to go into the details, but there are a couple of things I want you to see. For example, when you hover your mouse on reports, you can see investment summary, investment return, account activity, statements, tax slips, etc. Under account management, okay, there are 2 things that are important. The first one is find forms. The other one is upload documents, okay? So let's go to find forms and see what we have there. So here you can see and find different forms. Anything that you haven't signed in the beginning is here. You can just find the forms and sign and upload it to Questrade, okay? So as you can see, authorization to remove, cease trade, letter of consent, all of the, as you can see. There is, okay, on the right, you can see there's dividend reinvestment plan authorization. Here is where you can, if you download this form, you can actually initiate a DRIP or dividend reinvestment plan, which, as I explained, is a plan that Questrade buys the same share of a company with your dividend money, okay? And the good thing about it is that you don't need to pay any commission for that trade. So what happens is a company like, for example, RioCan, that pays you dividend, you can ask Questrade to automatically buy the shares of RioCan with your dividends instead of just putting it in your account as cash, okay? So that's a good thing. Pre-authorized cash contribution or transfer authorization. So these are the forms, okay? Agreements and disclosures. Any form that you want, you can find it here. Again, we go to account management. And under account management, if you go to upload documents, here's where you can upload any document that you want. So depending on which document you can choose. So for example, if I click on document type, there are government issued photo ID. If I click this, for example, I can upload my ID to Questrade. There is I think direct deposit, let me see. Yeah, direct deposit form. This is what I highly recommend you do, although it doesn't ask you, but I highly recommend you get your direct deposit form from your bank. If it is Tangerine, you can easily get it under your checking account, and upload it here, because later, because it takes, any upload, it takes like probably 24 hours to be processed, because they are very busy. So that's why I want you to get that form from your bank and upload it here. And the other thing that, for example, dividend purchase plan authorization is the one that I just talked about, the DRIP, dividend reinvestment plan. After you fill it and sign it, you can upload it here. Something I forgot to mention is you can ask Questrade to do the DRIP for all of your dividend stocks, or for just one, depending on your preference. Okay, so let's see what other forms it has. Oh, okay, there's another form that pad cancellation. If you have any pre-authorized debits with Questrade, you can cancel it this way, pad cancellation. So let's go to rebate. Rebate is the one, if you remember, when we talked about account transfer, you need to get your statement from your bank, and here's where you can upload it in Questrade. You're going to choose rebate, and you're going to upload your statement from your bank, and Questrade will pay up to $150 of the transfer fees. Okay, so that's about this section. Let's go again to account. So account management, for example, refer a friend is the one that I talked about. If you click on refer a friend, sorry, here's where you can find your refer code. There is a button that you have to click. Right now I have clicked, so it gave me the code, and it's a permanent code. You can click, if it is your new account, you can click and it gives you your code, and you can share it with anyone who wants to open an account. So let's go to funding on top. So when you hover your mouse on funding, you can choose online banking to be, actually it will give you an option to be redirected to your bank's website for funding. You can do in-track online, pre-authorized deposit, transfer account to Questrade. Okay, so transfer account to Questrade is the one that we saw. If you want to transfer account from your broker or from another bank, here's where you can do it under funding and transfer account to Questrade. Okay. With the other ones, you can play around and request. For example, you can exchange funds, which I don't really care. Transfer funds, transfer investments, withdraw funds. About withdraw funds, you can withdraw. Okay, you can withdraw. Let me just choose CAD. I know that online transfer, which is electronic funds transfer, which is no fee, it has a limit. I think the limit is $20,000 or $25,000, $25,000. I'm not sure. You can always click on this chat with us button on and you can either text with them, or I will show you another way that you can chat with them as well. So if you choose electronic funds, so and remember that it should be less than your maintenance excess. You're going to see your maintenance excess, whatever it is, it should be either, so let's say your maintenance excess is, I don't know, you have $1,000, you can only withdraw 1,000, you cannot do 1,001. So it should be less than your maintenance excess. So let's put, I don't know, whatever, and electronic, you see, amount must be the total maintenance excess. So I would put, because I have only $6.25, I would put $5. So right now it's okay. So I'm going to choose electronic fund transfer, and then you can choose your bank account. Here is where I have already put my bank account. Okay, I already have put the information of my bank account, so it pre-populates. That is when I asked you, if you remember, I asked you to put your to get your direct deposit from your bank and upload it in the upload center, so that later when you want to withdraw money, it is easier. You don't need to be worried about that. Sorry. Okay. So, but as I said, remember that there's a limit for that. Okay, remember that there's a limit, and the limit is, I think, $20,000 or $25,000. So that's about it. That's for requests. Let's go back. Let's click on accounts and go to trading. Okay, there are two ways that you can bring the trading page. Either you can click on buy and sell. Okay, you can either click on buy and sell, or you can come here in this in this search bar, and you can type the ticker symbol of the stock that you're looking for. So for example, let's look for REI.UN.TO, which is RioCan. Okay, so as you can see, it shows you three information. First the ticker symbol, then the name of the company, and then it shows you where it's listed. TSX means Toronto Stock Exchange. Okay, but there's a difference between how you can find ticker symbol here and Yahoo. I think in Yahoo it is dash, so you should put REI-UN.TO, but it doesn't make any difference. It's not a big deal. Okay, so let's search for another thing. I just want to show you something here. Okay, so you see this, whatever company it is, I don't know what it is, but if you can take a look, it says PINX. PINX means it's a pink sheet stock. So remember that it is riskier. Okay, PINX means pink sheet, and usually it's in America. NASDAQ, also you know, NYSE, for example, New York Stock Exchange. So let's go to my own stock, very.cn, CNSX, or Canadian Securities Exchange. Sorry. So you can also, if it is not in your watch list, you can also click on this plus to add it to your watch list. But honestly, one of the reasons if you remember, I said there are shortcomings with anything in life. This is one of them. I really don't like how Questrade shows your watch list. Also, you cannot, there's no way that you can change the location of your stock. So let me show you. For example, here's my watch list. Okay, if I want to edit, all I have to do is click on this library type of thing. But as you can, this actually shows the criteria. For example, last price, bid, ask. So this is where you can determine which information to be shown to you first. Okay, average volume. Some of them I don't even understand. For example, theta, vega, these things, it's up to you to put them in the line or not. But let me show you something here. If you click on these three dots, you can manage watch list, or you can edit this watch list. When you click on edit this watch list, you can only add symbol. There's no way for you to change the location or the position of your watch list. Okay, so that's why I don't use Questrade's watch list. I have on my iPhone stocks app. That is one of the reasons, it's ridiculous. It doesn't allow you to move your stocks. Okay, so let's go back to account. So let's go and bring very.cn again. Okay, so putting large orders, whether large or not large, small, is very easy. There's no hidden fees per se. Okay, I have read in reviews that people say there are hidden fees and Questrade charge a lot of things. No, it doesn't charge anything. So we have types of order, which I'm going to explain to you right now. Remember that if you want to buy, you can directly click on bid price, which is the highest price that buyers are willing to pay, or if you want to sell, you can directly click on ask, which is the lowest price that someone is willing to accept to sell their stock. Okay, so right now, just because of the example of this video, I'm going to click on bid, because I want to show you how you can buy if you have if you want to put large orders. So the very first thing that's important for you to do is always remember this refresh button. Always click on it. You see, when I refresh, the prices are updated. Before putting your order, always click on this. This is very important. And also something I forgot to mention in the in here when we were in the search section, STK means stock, OPT means option. So remember to always keep it on STK. This is stock, unless you want to trade options. Okay. So the first thing, apart from the name of the company and bid price and ask price. Oh, okay. Remember that when it says bid SZ means bid size and ask SZ means ask size. But remember always to put 2 zeros in front of them. So right now, for example, let me refresh. So right now, 900 shares are in bid, and 30 plus 2 zeros, 3,000 shares are for ask. So people want to buy more than they want to sell more than they want to buy. Okay. So you can always click on the bid price. It will pre-populate in the limit price. Okay. So quantity is actually the lot of your order. Remember how I said that your lot, one of the conditions that you have to meet in order to waive ECN fees is that the lot of your order always must be a multiple of 100. And how you understand that? A very simple thing. If you take a look at the last 2 digits of the number, it should be zeros. Okay. And remember, you cannot put decimal, so you cannot buy a fraction of a share. Okay. So whatever your number is, let's say for example your number is, I don't know, 23,643. So whatever it is, the best bet for you is to actually take the last 2 digits and turn them into zeros. Okay. Sorry. So this is the first condition. The second condition that you have to meet in order to not pay any ECN fees or anything is this order type. Let's talk about order types. We have 4 different order types. The first one is market order. Market order, as you could see when I put market order, it doesn't let me choose the price, because market order will be executed on the price of the market and immediately. So as I mentioned, any order type that will execute immediately will remove liquidity from the queue, thus you would have to pay ECN fee on it. Okay, so we don't care about the market order. I really don't like this. I always put limit order because I'm a long investor, and I don't like day trading. So this is good for day traders or the ones that want their order to be filled right at the moment. But remember, if you put this, you're gonna pay ECN fees for sure. We don't care about all of these other things. I think I talked about them. We really don't care about them. But the next type is limit order, in which you can determine the price. As you can see, you can put the limit price. So let me just go ahead and click on bid, just because we're gonna buy. So this is the limit price. If you click on this $sign, you can say, for example, follow ask price or follow bid price. So it will follow the price for you, but I'm not gonna click it because I prefer to do everything manually. Okay. So I was talking about the types of order. As I said, market order is the one that executes immediately and on the price of the market. Limit order has 2 types: non-marketable limit order and marketable limit order. Marketable limit order is the one that may or may not execute immediately. This one right here, for example, if I place this order 594, if I place 100, so I say that I want to buy 100 shares of very good food at the price of 594, because it's on the bid price. No, it's not. Now you see it price increased, so always you have to refresh. So right now, if I click on buy, if I place this order, it might get executed immediately because it's on the price of the market right now. So what I have to do, if you remember, I said non-marketable limit order is the one for you. So what I have to do here is to actually reduce 2 to 5 cents from my order when I'm buying. Or if I was selling, I had to add 2 to 3 cents to the ask price. Okay. So now it's 596. If I wanted to put this order, I would put 595. Okay, because exactly after I place the order, my order will go to the line. So will go and remain in the line for a couple of seconds or even minutes before it gets executed. So thus, I won't be paying any sort of ECN fee. So remember that the order that we are looking for is a non-marketable limit order. And what is non-marketable limit order? The one that at the time of purchase, at the time of buying a stock, it is 2 to 5 cents less than the bid price, and at the time of buying, and at the time of selling, it is 2 to 5 cents more than the ask price. So I'm not going to put, so this is on the price market, so I'm not going to put this, although it is limit order, but it may get executed, so I'm not going to put this. So to calculate how many, okay, so let me just talk about the duration as well. And GTC, good till cancel. So if I put day, it means that the order is gonna remain there until the last hour of the day, okay, until the market closes for the day, okay. If I put GTC or good till cancelled, means that it will be there until the moment that it's filled or cancelled by me. But remember that it is not forever. It's for 90 days in Questrade, and in CIBC I know that it's just 30 days. Okay, so I always choose GTC. Good till date, you can mention a day, a date. You can specify a date, for example, say up to 1 week or a week and a half, whatever. So this is good till date. GTEM means good till extended market, which is not for Canadian market, it's for mainly for US market. And IOC, FOC. So I think immediate or cancel means immediately buy whatever you can, or if you can't, just cancel it. Okay, and FOK. So remember to pronounce this FOK, okay? So FOK means fill or kill. Fill or kill means you ask the system to buy either the whole amount of the order or none of them and cancel immediately, okay? So what happens is, so let me just tell you the difference between the two. So let's say I put IOC immediate or cancel, and I ask Questrade to buy 100 shares for me at the price of $5.96. So what happens is Questrade will try whatever Questrade will buy for you and then cancel. Let's say Questrade can only buy 20 stocks for you. It does it and then it will cancel immediately. Okay, so that's how it works. Sorry. But fill or kill, if I remember correctly, you can always Google if I'm making a mistake. So fill or kill means I'm asking Questrade to buy 100 shares for me. If Questrade can buy at 100 shares at the moment, it will. But if it doesn't, then it will cancel the whole order, so it doesn't fill it partially. That's the difference. But remember, never put it on fill or kill or anything. Just put it on GTC. Okay? So let's go and calculate how many shares we can buy. Let's say you have $100,000 in your as your buying power. So right now, I don't have that. I only have always look at your buying power. Sorry. Buying power means whatever you can spend, and maintenance excess, I think it is because Questrade will calculate some of the charges and post it there. So I think that means maintenance excess. I'm not sure about it. But anyway, so buying power, you always remember to see your buying power. That's important. Your buying power is the one that shows you how much you can spend. Okay. So now I have 6.25, but let's assume you have $100,000 and you want to invest all in Veri, okay, which is a very good idea. As you can see in my P&L, let me show you. So the P&L that shows 128,711 since the very beginning, since like 5 months ago. Now it is lower in comparison to now. The price of this stock reached nearly $10. So if I had sold at that time, I would be making around $300,000, but I didn't sell, and I have my own reasons for that. If you want to know, you can just subscribe and I will make a video on Very and explain why I didn't sell. Okay, so let's go back and see and calculate. So the first thing you want to do is to click on refresh. Always, you see the price changes. That's why you need to always click on refresh, even like before, even after you do all of your calculations. So let's go to another tab. Go to Google and calculator. Okay, let me just open multiple calculators just in case. Okay, that's enough. So so the first thing you want to do is to calculate the commission. As I mentioned, the commission is not waivable, so you have to pay for each trade you want to place. If you are buying one share up to 495, no matter how many shares you want to buy, you would still have to pay $4.95. From 495 up to 995 shares, if you want to know how much you're going to be paying for commissions, you have to divide the number by 100. Let's say you want to buy, for example, 700 shares of a company, so you divided 700 by 100, it's going to give you 7. So you're going to pay $7 in commission. So that's how you can calculate the commission. Anything above 995, you would still be paying that $9.95. So whether you want to buy 1,000 or a million shares, you would still be paying that $9.95. Okay? So that's for the commission. And the commission you have to, so that would be the very first thing you want to do. Okay? So let's go now. Now let's go and talk about the ECN fees. When you want to buy, if you remember the chart that I talked about, so I asked you to take a screenshot. The chart shows that if you want to buy a stock which is $1 or more, the ECN fee is 0.0035. If the stock price is 99 cents or less, it is 0.0008 for each stock, for every share, sorry. And if the stock is listed on their Canadian Securities Exchange, I mean there is like .cn at its ticker symbol, then and the price is 99 cents or less, then you're going to be paying 0.0012. Okay. Sorry. So for small amounts like, I don't know, 100, 500, that's not going to be a big issue. Up to 1,000, it's not a big deal. So it's going to be $2, I don't know, $3, whatever. So it's not a big deal. But if you want to buy a lot more, like what I did, 30,000 shares of a company, then it becomes an issue. It becomes like, I don't know, 150 or even more, 100, 150, whatever. So let me tell you how you can put large orders. So the very first thing we're going to want to do is to calculate the commission first. So 100, let's say you have $100,000. So very first thing is to deduct 995. So 99,990.05. So that's after deducting the commission. So now for calculating how much you can, how many shares you can buy with that amount, the thing you have to do first before anything is to click on this refresh button. So the price is right now $5.94, but I'm not going to calculate this because, as I said, if you buy on the stock on the market price, even though you're putting a limit order, which is not supposed to trigger ECN fees, but you are going to pay ECN fees for sure. Okay, so remember to always, all the time, reduce $2 to $5 when you're buying, and add 2 to 5 cents when you're selling. So right now we're trying to buy. So the price of Very Good Food is right now 5.94. So I'm gonna put, just to make sure, I'm I'm gonna calculate with 5.90. So 5.90. I'm gonna round it. I myself will always round it to 0. That's what I do. So let's just go there. So we're gonna divide. No, we're not gonna divide this. There's one step that we have to take. So we're gonna put 5.90, okay, plus to calculate how many ECN fees we're gonna be paying, okay. Plus, if you remember, I said the ECN fee for stocks $1 or up or over is 0.0035. So I'm gonna add 0.0035 equals 5.9035. As simple as that. So that is how you can calculate how many shares. So now this is the real share price. Okay, remember, always do this. Always, for calculating the share, for the ECN fee, you have to first see what is the price of the stock you're trying to buy. Whatever it is, you have to, depending on whether it is $1 or more, depending on whether it is 99 cents or less, or depending on whether it is listed on CSX or not, you're going to be adding that ECN fee to the price. Okay, so now we know that the main price that we have to calculate is not 5.90, it is 5.9035. So now we're going to go back to this tab. If you remember, we already calculated or deducted the commission. So now we're going to divide this by 5.9035. Okay, so it shows that by $100,000 sorry, you're going to be able to buy 16,937. So forget about whatever after the dot, because this is decimal and you cannot buy. So let's just copy this. And go to Questrade, and once again click on refresh. So hopefully the price didn't change that much, and paste it here. But I'm not going to click on buy. Why? Because as I said, this is the lot of your order. The quantity shows the lot of your order, and it should be multiple of 100. Okay, so what I'm going to do is to see the last two digits. It's 37. I'm going to omit them and put 2 zeros instead. So now this is a good order. So now it's 16,900. You can always round, you can always take the last two digits and put zeros instead, just to make sure that it is, if it is already 2 zeros or more, then that's fine. Okay, so right now it shows that we can buy 16,900 shares. Okay, so if you do all the steps that I told you, you're not going to pay any sort of hidden fees or ECN fees whatsoever. So let me just click on buy and show you how. Sorry. So here in this page, of course, as I said, the color yellow shows, or I don't know, orange or whatever you want to name it. It shows that there's a problem in the operation. So you have to solve the problem before being able to successfully do the operation. So in this case, the problem is lack of money. I don't have 100,000, so that's why it shows this dialog box. But remember this, so when you click on buy or sell, always this dialog box, it's just a preview. Always Questrade shows this before, so you have to confirm by send the order or do not send. Okay, so now you might be asking me, as you can see, it says commissions and fees. It shows all of them together. So $50, okay? Sorry, nearly $69, $70, okay? Now you might be asking me, okay, we did everything. As I said, we put a non-marketable limit order. Our order lot is a multiple of 100. our order is not gonna get executed immediately because we reduced 2 to 5 cents from the bid price. So how come it shows it here? So no worries, it just shows you the maximum potential price here in this page. Okay, it's not gonna deduct it from you. Okay, so always this amount is going to remain, whatever amount of the commission and fees are here is going to remain on your account if you have done all the steps I told you. So remember, it's not gonna deduct it from your account. It's just the maximum potential amount that might charge you. Actually, and honestly, this is the other problem, or I would say shortcoming, or whatever, disadvantage, or whatever, a bad thing that I don't like about Questrade, because the system is seeing that I am putting an order that is non-marketable limit order, that the lot is a multiple of 100, and yet it just shows the maximum potential. And I think they do it on purpose. They do it because they want you, they want a couple of hundreds remaining in your account, because whatever remaining in your account you would still want to do trade on, right? You get, that's what I'm thinking, maybe it's not right or whatever, but you get tempted, particularly if the trades that you do are very sweet to you, so you always want to do trading, and each trading you do, whether you buy, whether you waive ECN fees or not, you're going to pay commission to Questrade. So that's how they, that's one of the ways that they make money. Okay. I think I've talked about this. I'm going to also so I'm just gonna click on do not send. So that's how you can basically place your orders. I'm gonna talk about this once more when I am reviewing the app, but for now let me just close this. But for now let me just show you actually. Let me just tell you the steps so that you know how it is. The very first thing you're going to do is, if you want to buy, so click on this refresh button. Then if you want to buy, remember to always reduce 2 to 5 cents from your bid price. And if you want to sell, okay, remember to always add 2 to 5 cents to your ask price. Okay, that's the very first thing you're going to want to do. Okay, and then you can calculate, and then for calculating the for calculating how many shares you can buy, first thing you want to do is to and I'm repeating all these things once again. So the first thing you're going to want to do is to deduct 9.95. okay, and then the second thing is to calculate the price of the share price. Okay, always, all the time. If it is more than $1, let's say, I don't know, let's say the price is, for example, 0.345, because you may see some penny stocks like this. If it is like that, then all you have to do, because we know that it's less than, it's actually 30, if you round it, it's actually 35 cents. So it is less than 99, so we're gonna add 0.0008. So that's how you can calculate the price that you can, the main price. Then we're gonna, for example, take this number. Let's see if we can copy 34.58. So we already reduced or deducted the commission. So now we're gonna divide this and paste. See if it pastes. No, it doesn't paste. No, it doesn't paste. So let me just, okay, 0.3458. 0.3458. Okay, so it shows that by $100,000 we can buy this much amount. And remember to always forget about whatever after the dot is. Okay, forget about this. 289,155. So, but we're gonna, as I said, we're gonna just take those 55 and turn them into zeros, okay? So that's how you can place your order. So let me just talk about a couple of things here. Let me pull up RioCan. So very briefly, I want to talk about these things. So bid and ask. Bid is the highest price that buyers will pay. And by the way, the system will determine who has the highest. So the system will arrange the highest price itself, okay? And if you know, there's a very good economist called Adam Smith. So he talks about the hidden hands behind the market. Those, you can see them here. These prices are being determined by me and you, by the ones who are buying and selling the stock at the moment. There's no like external extraterrestrial power, you know what I mean? Okay, so if you want to refresh, you see it changes. Okay, so as I said, bid is the highest price that a buyer is willing to pay to buy the stock, and ask is the lowest price that a seller is willing to accept to sell the stock. Okay, bid SZ and ask SZ means bid size and ask size, which, as I said, you have to put 2 zeros in front of them each time. So 19 would be 1900. Okay, 1 would be 100. So it's not just 1 because the lot, the system shows the lots in a multiple of 100. Okay, that's why. Volume means the amount of shares being traded. Okay, 52-week high and 52-week low means the highest price during the last 52 weeks and the lowest price in the last 2 weeks. Please let me know in the comments why. I still don't understand why they say 52 week. Why don't they say 1 year? Because 52 weeks is 1 year, right? Last trade, it shows the date of the last trade. PE, price to earning ratio, shows the profitability of the company. I don't want to dig into that, right? Yield is the percentage of the dividend that they pay. Okay. So you see here it says yield and dividend 0.08. They're related, but the difference is they're actually the same, but the difference is that yield is basically the percentage of the dividends. Okay, this is actually how it's so, and how it is calculated. Let me show you how. So here for RioCan, for example, it is sorry, it is 5.04%. So the way you calculate it is very easy. You're going to bring up your calculator. Let's say you have $100,000. Okay, and you want to know how much you're going to be paid if you invest all of this in RioCan, for example. So you're going to click plus, then 5.04, and then you're going to click on percent sign. Okay. So it shows basically Apple does it better than this, because first Apple shows you how much percent, but right now it shows 5,000. As you can see, it shows so after 12 months your $100,000 becomes $105,040. So you're going to be given $5,040 for a year if you if you invest your $100,000 in their company. Okay, this is calculated, I think, yearly. And if you want to know how much monthly it is, you can take that 5,040. So let's take $5,040 and divide it by 12. As simple as that. So each month it's going to pay you $420 for your $100,000 investment. Okay, so that's how you can calculate dividend yield. For the dividend itself, all you have to do it's a little bit different. So this is DPS, dividend per share. So all you have to do is to take the price of the stock price. So right now it is, let's refresh. So right now it is 1931. Okay, right now it is 1931. You're going to go here, and so you had, if you remember, you had $100,000, right? In our example. So you're going to divide it by the stock price, which is 19.31. And this is just for an example because prices change, right? So it shows you that you can buy 5,178. Okay, we don't care about the rest because the rest is decimal. So 5,151.78. So 51.78. So 5,178 shares of RioCan. So from now it's very easy. If you want to calculate the DPS or the dividend, the dividend was 0.08. So you're going to multiply this by 0.08. Okay, so as you can see, it's very easy. It shows you the monthly amount that we just calculated together. It is a little bit different, but the prices should be kind of this, in the same range. So the other number that we calculated, I think it was 420. Okay, so this is 414, and that's because if you remember, we omitted the decimal the decimal at the after dot, the decimal part of the number, so that's why. But otherwise, if we calculated that, we would get that 420. So basically that's how much you get. 420, 410, that's how much you get per month for your $100,000. So that's how you can calculate dividend. Earnings date. So last Eastern, so it says Eastern time, based on Eastern. So 4th of May, they released their earnings. So it was their earnings date. This becomes important because if you can see here, X date is the date in which the company will determine when they are going to release their the yield amount for the month or for the quarter. Okay, so remember that if you buy the stock of the company on the X date or after, you won't be getting the dividends of that month or that quarter. Okay, so you always have to find out the X dividend date of a company and place your order before, 1 day before that X dividend date. Okay, 1 business day before the X dividend date. because if you don't do so, the yield that the company should pay to you is going to go back to the pocket of the company. But there's something interesting. Let's say, for example, so this is 25th of February. So let's say you bought your shares on 24th of February. So you'd still be getting the dividends, although you have just owned their stock for 1 day. Okay, for whatever, for a few days. So you would still be getting the yield for that month or quarter. So high and low, highest and lowest for the day. Remember, so this is highest price and lowest price for the day. Open and previous close. So open means when the market was opened, the price was the first trade that was done for this particular stock was 19.60, and previous close means the last time the market was closed, so yesterday. Okay, so sorry, not yesterday, because right now it's 4:04, 9th of March 2021. So the market's closed right now, so it shows for today because the market just closed. Okay, so market cap is the value of all the outstanding stocks of the company, which for the RioCan is 6.05 billion. Shares, it shows the amount of outstanding shares, Okay, 317.70 million. Average volume. Okay, if you remember about the volume, so it was the total volume. I think it was for 3 months, but this average volume is for. But again, I really don't know the difference between the two. So in terms of time interval, so I think this average volume is actually the average volume, and the volume shows for the last quarter, because usually it's for for the last 3 months, the volume, right? EPS, as I said, earnings per share. This also shows the profitability of the company. I really don't care about these numbers. My main goal is to so these are good for those who want to do technical analysis. These are good to know. I don't want to say that they are like not beneficial, but I really don't care about these things. All you have to care is to put time and search for a good company, not just based on numbers. So you see, for example, this EPS is negative for RioCan, but the company has been there for, I don't know, 20, 25 years, 30 years. And this is like a very strong company. And if it wasn't because of Corona, you wouldn't see this negative. So that's why I don't really, I'm not a fan of numbers. Security type, it shows the stock. Long MR and short MR, I think it shows how much people will borrow, which in most cases it's 30%. So I just don't have a clue of what this is, but I think that's how much people borrow the stock and keep it for themselves. And the borrow rate is 2.02, which, as I said, because I don't short, I don't understand these things. Okay, so again, like the stocks app on iPhone, if you in the chart, so always the lower this lower horizontal axis shows the time. Okay, so 1 day, 5 days, 15 days, 1 month, 3 months, 6 months. What year to date means Y to D, means year to date, means from the beginning of the year till now. 1 year, 3 years, 5 years, and max. Okay, so that's how you can see. And in the chart itself, depending on what you choose here, in the chart, if you can take a look at the horizontal axis, it shows the date, the lower axis, like the horizontal lower axis, it shows the date, and depending on which time interval you choose here, it just shows months or years or weeks. Okay, and this part that looks like a histogram graph shows the volume, of the stock, like how many shares have been, if the rectangle is green, it means there was an increase in the volume, and if it is red, it means there was a decrease in the volume. The vertical axis always shows the price, and remember when I hover the mouse, okay, you can see a couple of information: high, low, volume, okay, and the hour and the date. And this is all dependent on which settings you choose from this lower horizontal axis. Okay, if you click on chart, it's going to give you more information. You can add indicators. I don't know, you can add indicators, you can play around with the settings here. I honestly don't like chart at all, so that's why I don't touch it. Okay, I let it be. So I think that wraps it up for this section of the video. There's nothing that I can. So in this, the left vertical part of the window is where you can see your watch list. If you have any options, research, alerts, you can choose how it communicates with you. I really don't touch these things. Here is, for example, your last visited stock. You can just delete this if you want. It shows you another one. Okay, market data and the settings. Oh, and by the way, in this section, if you come down, if you scroll down, it shows the news and the reports of each company. So for example, let's go to very.cn. Whatever report of very.cn, whatever news, okay, you can see that underneath the chart and the reports as well, okay, the reports section. So if you click on your name, it shows profile settings, about feedback, accessibility, help. Help is the one that if you choose, sorry, you can click on this chat, you can email them, you can request a feature, which they would definitely send the feedback, they would definitely listen to you, and you can give them a call, okay? So that's how you can, that was the one that I talked about. So this is how you can just find their contact information. Remember that when your work is done, always, all the time, remember to click on this log out button, whether it's your own computer or whether it's another computer, which I highly recommend you use your own computer in your own network, not in a library or anywhere else. Okay, so that's it for this section. In the next section, we're going to see and take a look at the Questrade app. And I may repeat some of the stuff that I say, so I'm just letting you know. Okay, so in this section, we're going to take a look at Questrade app. I'm going to talk about things that now it's done. So you see how convenient it is. I just use my Face ID, and there's no reason for me to, want to like the old fashion of entering my password and everything like that. So I really don't use this app for placing orders, but I'm going to let you know how it is. I mostly have it because I just want to take a look at my account on the go and also receive the notification. So when I place an order, I want to see how much of it is filled and stuff. So I don't want to receive any email or text. I just want the app to give me the notification. So that's the two reasons I'm using the app. But it is a good one. There's no complaint about it. Okay. So basically, if you watch the previous section of the video or the longer version of the video, you know that the website and the app work exactly the same. This is actually the first page that you see when you open up the app. So balances, positions, and orders. It shows open P&L, which is the profit or losses that you've had since the very beginning, and for all of your assets, no matter how many stocks you have, it shows all in total. And again, I don't understand why it shows USD, because I don't have, even if it is zero, I don't want it to show, but it just shows. And the percentage of your P&L, which, as you can see, changed, right? The percentage, usually it's for day, okay? It's not since the beginning, it's for day, since the start of the day. Okay, so let me just scroll. When you scroll up, it shows here in profit and loss, open P&L, closed P&L shows all of, if you sell or as they say, realize your stocks, then it shows it here, how much you've lost or how much you've gained. So closed P&L means after you sell your stocks, it shows you. P&L day, as I said, means since the beginning, but here it shows you the amount. So it says since the beginning, my gain was $600. Okay. The percentage of P&L is 0.34. And by the way, as you can see in my portfolio, I just have very.cn or very good food in my portfolio. It's just one stock in my portfolio. And I have some reasons for doing that. So if you want to know why I did that, if you want to know why I didn't sell when it reached nearly $10, because if I sold at that time, my gains would be around $300,000. But I didn't sell, so I have my own reasons. If you want to know, you can subscribe and I will make a video on that for sure. Okay, open and closed. these are the orders, daily orders. Okay, so about the equity, it shows you the total amount of equity, including your cash, including your initial investment, everything you have, it shows in total equity. Cash means cash. Okay, market value means if I sell right now, how much I will gain. Okay, this shows the value of my stocks excluding the cash that I have. Maintenance excess, I think maintenance excess is if I am owing something to Questrade. I'm not sure what this is, but I think it is if there is something that I haven't paid to Questrade, it shows it here. And buying power is important because buying power shows you how much you can buy. Always take a look at the buying power. Okay, so that's for this section. Let me just go ahead and tell you how you can pull up a stock. It's very easy. This magnifier icon, if you touch it, it gives you a search option, so you can search for anything you want. Okay. Sorry, so let me just go ahead and search for. Okay, and as I explained in the website when I was talking about these things, it first shows you the ticker symbol, which let's say for example test.v. Okay, so it first shows you the ticker symbol. In this case, test.vn means TSX Venture. So this stock is listed under TSX Venture. The name of the company, in this case, Furotech, which is a company that produces marijuana-related devices, including a device that can detect marijuana in a matter of minutes, and it is portable. I'm not actually saying advertising for that. I'm just putting it up so you can see. And the last thing it shows you is, as I said, the name of the market. Okay, TSX. And if you remember, I said that we have two things at the top besides the search bar: STK and OPT. Remember to always keep it on STK. Do not choose OPT, because OPT means options, and we don't care about options actually. Stock is the one that we want. Okay, so let me just go ahead and show you another thing. So yeah, when we were trying to find this test.v, if you take a look at the third one, teeth or whatever it is, the ticker is teeth, but at the end you can see it says PINX. Remember that PINX means pink sheet, means this stock is listed under pink sheet, and so it is a little bit risky. So you know NYSE means New York Stock Exchange, NASDAQ also a stock market in America. So let's go and pull up my own stock, Veri.cn. As you can see, Veri.cn. CN.cn is usually for Canadian Securities Exchange. Means that the stock is listed in Canadian Securities Exchange, the very good food. And yeah. So basically the information it shows you is, okay, the ticker symbol, the name, there's a plus sign. If you want, you can just add it to your watch list. That way you can add it to your watch list. This P, which I forgot to mention in the website, this P means that I have a position in this. Okay, so remember this. Then it shows you the price. It shows you the dollar amount of gains or losses. If it is green, as I said, if it is green, it means that there's an increase or the operation was successful. If the price is red, it means that there's a decrease in price or the operation was failed. And if it is the color in any sort of pop-up window, if the color is yellow, means that there is a problem for the operation. So you have to solve the problem before the operation can be successful. That curved arrow is also the refresh. Let me just refresh it. You see, the price has changed, so you have to manually refresh. Okay, so let me just quickly, for this to, if I want to explain this, let me just quickly bring another Ryokan. No, let's bring BPY Brookfield. Yeah, Brookfield BPY.un.to. Let's just bring this, okay, for explaining the chart. Sorry, not the chart. The data that you can get here. Okay, so the very first thing, bid and ask. Bid is the highest. The very first thing is level 1. As you can see, level 1 means that this is a free plan that I have, so I have to manually refresh. But if you pay more, something per month, I don't know how much it is, the prices will be automatically refreshed, so you don't need to manually refresh, and also you get a couple of other options as well. Okay, we have to pay an extra monthly. So let's go to the information here. A bid means highest price that a buyer is willing to pay to buy a stock, and ask means the lowest price that someone is willing to accept to sell the stock. And it is determined, so let me just refresh. You see, when you refresh, prices change. And oh god, what was I talking about? And the system automatically arranges the queue. Okay, automatically finds the lowest for the ask price and the highest for the bid price. Okay, bid SZ and ask SZ means bid size and ask size, which, as I said, you have to put 2 zeros in front of them to know the real bid size and ask size. Open means the first trade that took place when the market was opened. Previous close means the last time the market closed. This shows the exact last trade value. Okay, volume I think means about the volume and the average volume. I'm still kind of like in doubt, because in some websites the time interval that shows for volume is daily, in some it is 3 months. Okay, but anyways, volume is the amount of shares being bought and sold. Okay, so this means volume, not all the shares that are kind of like being bought and sold, because there might be some shares that people buy and keep for themselves. So we're not talking about the whole amount of shares that a company has. I'm just talking about the shares that people buy and sell. Average volume means the average of those. So I am right now actually in doubt whether it is for 1 day or for 3 months, but I'm assuming it should be for 1 day. Okay, so again, please let me know if you know, but I think it's for 1 day. Okay, 52-week high, 52-week low means the highest price in the last 52 weeks or last 1 year, and the lowest price in the last 52 weeks or 1 year. Now also, please tell me in the comments why they say 52 weeks, because 52 weeks means a year, right? So why don't they say a year? That's what I don't understand myself. Okay, high and low means the highest price for the day and lowest price for the day. Okay, market cap means the value of all outstanding shares of the company. Okay, that means market. Shares means all the shares of the company that have been issued. PE, price to earning ratio, it is a actually indicator of the profitability of the company. It's like EPS, earnings per share. Both of them show the could show the profitability of the company, but this PE also shows the predictions, or maybe the assumptions that investors have for the future of the company. Okay, what they think it's going to happen for the company. This reflects here. Average volume, we talked about it. EPS, and as I said, EPS and PE are kind of like the same, but you see that, for example, it's now minus. EPS is minus, earnings per share, means how much the company earns per each share. How much is their gain per share? But like This Brookfield, what's the name? Let's see the name. Brookfield Properties, whatever. Okay, it doesn't show the whole name, but anyways, Brookfield Properties, whatever, has been around for a long time. Okay, so the fact that just because it shows minus or negative, you shouldn't think that this is a company that does bad. Okay, so it's because of Krona that it shows minus. But anyways, I really don't care about these things. I really don't care about the numbers. I am absolutely not a fan of technical analysis. I'm more of a fundamental analytic person in terms of stock market. I just see the environmental factors, the factors surrounding the environment of the company, then I decide about it. Okay, I put time and research and buy the stock and leave it there a couple of years, 1 year, 2 year, and then sell it. That's my strategy. And if you want to know more, you can go ahead and subscribe, so I will make videos about it. Dividends means the amount of, so this should be DPS, dividend per share, means the dividends, or I put it this way, the interest that this company pays for you if you have their stock. It's like paid in cash, okay? And yield is exactly the same thing, but the percentage. Now, these two things are very interesting, so I want you to please pay attention more. It's very easy to calculate how much you will gain. So let's first calculate yield. Here, the yield for Brookfield is 6%. Let's go to Safari. Okay. I have already I have already brought up like calculators, just because I cannot use multiple calculators in iOS, so that's why I'm using Safari. Anyways, 6%. Let's say you have $100,000 and you want to see how much dividends you get from this company if you buy its stock. All you have to do is to put $100,000 plus, sorry, this was minus, plus 6%, 6, then % sign, okay, then equals. Now, the good thing about Apple, the iPhone calculator is as soon as you click on the % sign, it will tell you how much %, but this doesn't. So, but we know that before we had 100,000, now it is 106,000. Okay, 106. So we now know if we deduct it by 100,000. Sorry. Okay, 6,000. So 6,000 is the amount that you can get for every 100,000 that you put, and this is yearly. Okay, they pay you yearly. Sorry, they don't pay yearly. They like the way it is calculated is like this. So if you want to know how much it is monthly, all you have to do is to divide this by 12. So every month you get $500, which is way better than any bank. Okay, way better than any bank. So $500. And let's go back to, oh, okay. It just refreshes everything. Yeah, let us refresh the price as well. Okay, so no change in the price anyways. Sorry. Okay, so that was for yield, and dividend per share, it is 0.3325. 0.3325. How to calculate that? It's very easy. All you have to do is to see how much each share costs. So in this case, it is 22.16. So what you need to do is to come here and delete this. $100,000. You have $100,000, and you're going to divide it by 22.16. The price of Brookfield shares. Okay, each share was $22.16. So now you have 4,512. Forget about anything that you see after the dot because we cannot buy decimals. Okay, so 400 and 4,512. So let's go here. 4,512. Okay, so multiplied by it was, I think, 33.12, right? Let's go see the dividend. Let's go see the dividend here. Okay, how much? Oh, okay, yeah, the dividend is 33.25. Okay, then we're gonna multiply it by 0.3325. Okay, it equals 1,500. Okay, so I think this is this is 3 months. Okay, usually when they give you the dividend, it should be the same as the yield, so it should be for 12 months, but in this case it's not. So let's just multiply it by 4. You see, 6,000. Yeah, as I said, it was for 3 months. Okay, so this shows that the company pays the dividend every 3 months, not every month. So I just don't understand why, because Brookfield Properties is a REIT, okay, real estate investment trust. So as far as I know, according to the Canadian government, REITs should pay dividends monthly. Okay, I just don't know why it pays. I don't know why it pays like quarterly. Okay, so that's how you calculate. I have a video on good stocks, stocks that pay good dividend. So if you want to know and you want to see how you can calculate, you can also watch that video. I'm going to put the link in the description. So let's go and see the rest. Okay, security type is a stock. Security type could be options, whatever. So that shows the security type. Here it is a stock. Long MR, short MR. Sorry, I think that long MR and short MR means the percentage of how much people borrow the shares to short sell it. Okay, that's what I understand from these two. And borrow rate also, it shows the percentage of how much of these shares are being borrowed. Okay, so that's what I understand. Long MR and short MR shows, for example, how long they keep the stock for themselves and then sell. Maybe that's it. I'm not sure about it. Okay, just because, as I said, I really don't care about the data that any chart or these information give me. Okay, these are very complicated and are good for those who are doing day trading. So for me, I just find, as I said, I just do my due diligence and find a company and invest on it. Okay, because I believe like 80% of people who come to the stock market are like me. They don't necessarily want to choose this as their own job, but if you want to become a pro in this, you definitely need to know all of these numbers, which I'm against it. Okay, anyways, earnings date. So in the website I made a mistake. This is EST, means I think estimate. Okay, so 3rd of May 2021. So earnings date is the date that the company releases the earnings. Okay, ex-dividend date is one business day before the date that the company determines the yield. And it's important to know, because if you buy the stock of this company on ex-dividend date or after, you won't get the dividends. No dividends being paid to you, and all of it goes to the pocket of the company. So you have to always, if you see, for example, X dividend date is 25th, you got to buy the stock 24th. But the good news is when you buy the stock on 24th, even though you have the stock for maybe 1 day, 2 days, yet they still pay you all the dividends as though you've had it since 1 month ago or a quarter ago, okay? So that's for this section. Let's go to the chart to explain a little bit about it. So the chart, the lower horizontal axis shows the time intervals, 1 day, 5 day, 3 months, 1 year, and you can also determine, YTD means year to date, means from the beginning of the year till now, 3 year, and max means all of it, okay? So let's just put 1 day, sorry, which is the start of from the beginning of the day. And notice how when you change this, the lower horizontal axis above it will change also, okay? Depending on how you choose. For example, if you choose 1 year, it shows you the months, okay? Depending on what you choose. And this histogram type of graph that you see underneath the chart shows the volume. So if the volume is good and high, it shows it green. If there's a drop, it shows in red, okay? The vertical axis on the right shows the price, okay? If I move I'm moving my hand, but it doesn't show anything. Doesn't show. Okay, so that's for the chart. You can click on it, you can touch it, and you can play around with it, but I don't really care about the charts. That's how it is. About the news, you can see the news and reports, any reports that have come from this company or any news, okay? So that's about it. Now let's go and talk about how you can place large orders without paying ECN fees. This is a question I've been getting, okay? People don't know how to do that. People think that there is hidden fees, which there's no. If you watch my video, you know that there's no hidden fees in Questrade. Everything is being told in their website in a clear fashion. And also, some people have concerns that are to me very simple. So for example, I heard people telling me that they cannot buy penny stocks in their TFSA. No, it's not like that. You can buy penny stocks or any type of stock in your TFSA. And the good news about Questrade is that most of the penny stocks, or like I would say all of them, anything that is listed in any stock market, Questrade has it. I myself actually haven't heard about someone saying that the stock they were looking for, they couldn't find it in Questrade. Unlike other stock markets such as, brokers, unlike other brokers such as Wealthsimple, which you cannot find famous penny stocks, such as mine, for example, Veri.cn, you cannot find it there. Sorry. So this is a good reason to just transfer to Questrade, okay? This is a good reason. Also the fact that it's not slow and that it's not, like for example, it's not down, it doesn't go down. I heard people telling me from RBC that it went down on them, so this is what you don't want, okay? So now let's go. So if you want to pull up the trading page, you have two options. Either you can click, so let me just bring my, .cn. Okay, so this is my own stock. So you have two options. You can either click on, if you want to buy, you can either click on touch bid, or if you want to sell, you can touch ask. So it will pre-populate for you, okay? Or you can click on the buy and sell button. So let me show you. Here's the buy and sell button. You can click on that as well. But here you have to just, put the name of the stock on your own. So it's already pre-populated, but anyway, you can put, okay? And here again, I'm going to click on refresh button. Refresh is very important. So bid, okay. Bid shows, actually if you want to buy, you're going to click on bid so that, or touch bid so that it pre-populates and you don't need to enter the amount yourself. Okay, so it is very easy and simple. All you have to do is to, there are 2 criteria that you have to meet. If you meet those criteria, you can easily waive ECN fees. Okay, so the first thing is the lot of your order or the quantity should be a multiple of 100. And how do you know that? If there is 2 zeros in front of your number. If it's not, just remove the 2 digits, the last 2 digits, and put 0 instead. Put 2 zeros instead, okay? So that's the first thing. The second thing is your order should not get executed immediately. So we have 4 different types of orders. Market order, which gets executed immediately. As you can see, I have chosen limit as my default, but you can do market. Market order is good in a way that it gets executed immediately, or and on the stock on the market price, but you're gonna pay ECN fees for sure. Okay, so that's why I don't like it. Let me just go ahead and put it on limit. I was talking about the types of orders. So market order we saw. Limit order is the one that you can determine the price and the number of shares. In market order, you can determine only the number of the shares, not the price. And limit order has 2 types. Either it is marketable limit order or non-marketable limit order, which the last one is the one I want you to learn. Non-marketable limit order if you want to waive ECN fees. So what is a marketable limit order? You see, sorry. If you remember, I said that any order that gets executed immediately, you have to pay ECN fees on, okay? So now, let me refresh. So when I refresh, you see the price changed. So 588 is now the bid price. If I click on it, and if I say I want to buy 100 shares of Very at the price of 5.88, because it's on this market price, it may get executed immediately without staying in the line. So it may cause me to pay ECN fees, okay? So I'm not going to do so. I'm actually not going to do so. What I'm going to do is to reduce, sorry for my dry coughs. What I'm going to do is to reduce 2 to 5 cents at the time of buying and add 2 to 5 cents at the time of selling my stock. Okay, so now I'm buying just for the sake of this video. So I'm going to put 585. Okay, I reduced 3. So now if I want to buy 100, I see that my lot of the order is a multiple of 100. I see that my price is 2 to 5 cents below the bid, so I have no worries at all, except on the fact that I don't have any money to buy. That's the only worry. So if I place this order, I won't be paying any sort of ECN fees whatsoever. Okay, so this is called non-marketable limit order. So about the duration, let me talk briefly about that. Day means till the end of the day. Either if it is filled, that's fine, but if it is not executed, just the system, you ask the system to cancel. So that's day order. GTC, good till canceled. GTC usually is the best option in my opinion, because it means either fill it or let it be until I cancel it myself. But the problem is it's just gonna stay there for 90 days. In Questrade it is 90 days. In CIBC I know it's 30 days. So after 90 days it automatically gets cancelled. GTD means good till date. Again, you can determine a date. Sorry. You can determine a date. For example, tell Questrade that you want to cancel it after a week or 2 weeks. It's up to you. Okay. GTEM, good till extended market, which Canadian stocks don't have, but US stocks have, means after market, okay? IOC means immediate or cancel, means the system will trigger the order immediately. Doesn't matter how much of it can fill, it will fill, and then cancel the order, okay? That's immediate or cancel. And FOK, which remember, pronounce it as FOK, means fill or kill. Means either buy the whole amount of the order or none of them. So the IOC, you can, the system will fill as much as it can and then cancel. But with FOK, it will try to buy either the whole amount or cancel the trade. Okay. So that's about the duration. Let's put it on GTC. So now let's see how you can calculate. Let's see how you can calculate the ECN fee and commissions. Okay. Let's say you have $100,000. Okay. So here's $100,000. The very first thing you're going to want to do is, because we have two types of charges that you have to pay. One of them is commission, which is not waivable, so you have to pay commission for sure. And let me explain once that if you want to buy from one share to 495, the system will charge you $495, no matter whether you buy 1, 2, whatever, up to 495, the system will charge you $495. From 495 shares to 995, the system will charge you based on how many shares you have. And for knowing how many, you have to divide it by 100. Let's say you want to buy 500 shares. So you divide it by 100. Then so 500 divided by 100 is 5. So you're going to pay $5. Okay. Let's say you want to buy 821. So you divide it by 100. It gives you $8.21. So your commission is $8.21. Okay. That's how it is calculated. Up to 995. So anything above 995, 1,000, a million, whatever, you're gonna still be paying that $995. So it doesn't go further. Okay. So that's how you can actually calculate the commission, and it is not waivable. So the very first thing we're gonna do is to deduct that $995, because we know that we're gonna buy more than 1,000 shares. Okay. 995. Okay, so we have $99,990.05. That's our buying power right now. Okay. So the second thing we're gonna do is to go here in Questrade. We should wait for it to okay. You see the prices change, so all the time you have to refresh. So as I said, we're going to put a non-marketable limit order. So for buying, we're going to reduce 2 to 5 cents. In this case, I'm gonna put it, I always round it to 5 or 0. So what I'm going to do is to put 5.85. Okay? 5.85. So 5.85 is the price, but we have to calculate ECN fee. Let's go. So it was 5.85. So let's go to here. If you remember, I showed you a chart of ECN fee. For stocks that are $1 or more, you're going to be paying 0.0035. For stocks 99 cents or less, you're going to be paying 0.0008. And for stocks that are listed on Canadian Securities Exchange.cn, actually, which the price is 99 cents or less, you're going to be paying 0.0012. So remember this, okay? So we know that this stock is listed under Canadian Securities Exchange, and the price is more than 99 cents. So we're going to be paying 0.0035. Okay, so the price was 5.85, if you remember, 5.85. Okay, plus 0.0035 equals 5.8535. Okay, so that is the actual price of the stock that we have to calculate. So let's go back. So remember this 5.8535. Okay, remember to always have a pen and paper handy. I don't have it right now, sorry. But so if you remember, we just deducted the commission. So right now we can easily divide this. This is our buying power. Divide this by 5.8535. Okay, it equals, sorry, 17,082. So forget about the decimal. Okay, forget about whatever that's after decimal. So now we can buy sorry, now we can buy 17,082 shares of Very. But we're not going to do so. Let's go back. Let me tell you why. Okay, so now I'm gonna click on refresh. Okay, you see, that's why I said always reduce 2 to 5 cents. You see, now it used to be 589, now it is 586. Any moment it changes. So 585 and the number 17,082. We're not gonna do that. Why? Because as soon as you click send the order, as soon as you click buy and then after that send the order, what happens is it will, okay, it will charge you ECN fee. Why? Because the lot of our order is not a multiple of 100. It doesn't have 2 zeros at the end. So all we have to do is to take this 82. That's it. So 17,000 rounded. So if I click on buy, it's going to give me, as I said, yellow, or how you want to name it, orange or whatever, is the color of a problem. So it shows that there is a problem. So the operation didn't fail, but there is a problem that if you solve, your operation is going to be successful, which the problem is lack of money here. Okay, so I just want to, you might be asking me, why then in this preview page it shows us as commission and fees $69 or $70? Is it going to charge me? I say no, it's not going to charge you. It just shows you the maximum potential amount that it can deduct from your account, that it can charge you. Okay, so if you have taken the steps that I told you, if you have done a non-marketable limit order in which your lot is a multiple of 100 and you put like 2 to 5 cents less than the bid price at the time of buying, or 2 to 5 cents more than the ask price at the time of selling, then no worries. You're not going to be paying any charges except on the commission, which is $9.95. Okay? Sorry. That's how simple it is. There's no hidden fees. As I said, there are a couple of things I don't like about it. One of them is this preview page. It shouldn't show that. The system already knows that I'm putting a non-marketable limit order, but it still shows you. And you would still have to have that amount, that 60, how much is that? The commission, 69.45. If you don't have that, you cannot buy anything. It's going to give you an error like this, okay? That's actually why I'm telling you that even if you want to buy, let's say 100 stocks, you would still need to calculate the ECN fees and put it in your calculations, okay? Because you want to know exactly how much it will, the system will do. So let's say you have $100 and you do your calculations without calculating ECN fees. It's going to give you the same error. It's going to show you this yellow page because you need to have that money, although it doesn't charge you, okay? Although it doesn't charge you, but you need to have that money because the system will not go through, okay? So I'm going to click on do not send. I think that wraps it up here. I think I've talked about how you can easily waive ECN fee. There's nothing else remaining here, but remember that when your work is done, you need to always log out. And for logging out on the cell phone, all you have to do, if it is Apple, is just swipe from the left, and that's it. Okay? So I hope it was useful for you, and in the next section, we're gonna be talking about Yahoo Finance. I think Yahoo Finance is, so let me just go ahead and put it in my history because I had it, so it pre-populates. I think Yahoo Finance is one of the best sources to monitor stock market. In any country you are, as soon as you search Yahoo Finance, it will bring up the stock market for your particular country. In Canada, for example, as you can see, it's cafinance.yahoo.com. If you're in Germany, it would be, I don't know, .de. Okay, so to find a stock, first of all, let me tell you that if you have a Yahoo account, it's going to be very beneficial because there are some features that requires you to sign in. So you can, if you don't have, you can just create one. The very first thing you want to do, if you want to search a company, you can go to the search bar and either search its name, like for example, my company, which is Very Good Food, Very Good Food. As you can see, it brings the company listed under different stock markets. So it shows, for example, VRYYF sorry, shows that it's listed under an American stock market. Very.cn shows that it's listed here in Canada under Canadian Securities Exchange, because .cn usually is associated with the Canadian Securities Exchange. And OSI.F shows that this company is listed in Frankfurt Stock Exchange. Okay, .F usually shows Frankfurt, and I think .L is London Stock Exchange. Okay, so that's how you understand where it is. Either you can, as I said, you can put the name of the company, or you can put the ticker symbol. For example, SRU-UN.TO, for example, Smart Center Real Estate. Okay, and when you click, it just shows you the summary of the stock page. So the very first thing that you see is the name and then the ticker symbol of the company, full name. And then you see where it is listed. It says Toronto, okay, because it's .to, so you know that it's listed under Toronto Stock Exchange. Sorry, I need to take some water. Okay. Then you see the price. Usually the big number is the price. After the price, it shows you the dollar amount of gain or loss, which in this case it is -16 loss, and the percentage of gain or loss, okay? And underneath it shows you the date. So right now it is 3/29. Okay, so there is a little bit of delay. I don't know how much it is, but a couple of seconds or minutes. But so always, if you want to just make sure, you can always look at your broker's website as well as this one. But it's pretty much accurate, okay? And it says market's still open, yeah, because right now I'm in Toronto and markets close at 4. Okay, so let me very quickly go ahead and explain the page that you see in summary. So previous close means the last trade for the last time when the market was closed, which means yesterday. Today's Thursday, so yesterday was Wednesday. So it shows the last trade. Open means the last time that the market was open, which was today. The first trade was done at 26.55. So that is that. And bid and ask are actually, bid is the highest amount that a person is willing to pay for buying a stock, and ask is the lowest price that someone is willing to accept to sell the stock. Okay, that's the bid and ask. And as you can see, it doesn't show the size. Okay, that X sign that you see, 26.17x0, Yahoo doesn't show the bid size and ask size because it's not, as I said, it's not like up to date. Okay, it has a little bit of delay, I don't know, a minute or two, whatever. Okay, days range, it shows the highest and the lowest of the day, you know. Sorry. 52-week range, it shows the highest and the lowest price of the last 52 weeks. And by the way, again, I'm repeating, so if you know, please let me know in the comments why they say 52 weeks. Why don't they say 1 year? It's really a question for me. Okay, because 52 weeks is a year. Volume means the amount of shares being bought and sold, not the amount of shares that the company has issued. The amount of shares being bought and sold, and it has an interval. I think it should be for logically it should be for 1 day, like for example today. Okay, but I think there is an average of maybe 1 month or 3 months. Again, I'm not sure, but whatever it is, it shows the amount of share being bought and sold. Average volume is the average of, they take an average, they just add up everything and take an average and show it to you here. The average of shares being bought and sold. And I think it's during 1 day, okay? Market cap is the value of all outstanding shares of this company. Beta shows the risk of this particular stock against the whole market, okay? And as you can see, it says 5-year monthly, so it calculates it 5-year monthly. And very quickly, beta has 5 categories. If it is more than 1, it means that this stock's movement is more than the movement of the market, and it is called aggressive stock. If it is 1, okay, it means that the stock moves with the market. So if market goes up 1%, this stock goes up 1%, okay? If it is from 1 to 0, or let's say from 0 to 1, it means that the stock is defensive because the movement of the market, its movement is less than the movement of the market. If market goes up, I don't know, 1%, this might go up, for example, 0.45%, you know, that's how it is. If it is 0, if the beta is 0, then it means that the stock doesn't follow the market's movement, okay? Doesn't care about the market's movement. For example, if the market goes down, it might go up. If the market goes up, it might go up again, you know? And the last category is if the beta is negative, if it is sub-zero, which means that, the movement of the stock is exactly the opposite of the market. So let's say the market goes up by 2%, this stock particularly goes down 2%. So that is the opposite. That's what beta is. But again, just because I'm not a technical analyst and I don't really care about these numbers, which I'm going to explain in my future videos, I just really, I know what they are, but I don't really care about them, okay? PE ratio. PE ratio means price to earning ratio, means it is actually a sign of, like EPS, for example. EPS also, earnings per share, means the amount of earnings that the interest that the company gains for every share. So these two show the profitability of the company, and they also could also represent the predictions or expectations of the investors about the company, okay, what they think. But remember that this, for example, about the EPS, it could be minus. If the company, particularly if the company is new or there has been a market crash. So if it is minus, you shouldn't think that the company is doing bad. Okay, one of the reasons I really don't care about these numbers is exactly because of this. You see, for example, in some IPOs, initial public offerings, or new companies, you see that their EPS is negative. So then you think that, okay, this is doing bad. But it's not like that. It's totally normal for a new company or a company that is surviving from or recovering from a market crash. So that's about P ratio and EPS. Earning state, which in this case it's not clear, means a date that the company releases its earnings report. Forward dividend and yield. Okay, this is really kind of like interesting subject, because it's good for those people who want to create an income portfolio. So sorry. So forward dividend means that, and this shows the dividend that the company may pay in the future. But remember, the dividend is something that the company determines. Okay, so they can reduce or increase it at any time. So here it is. It says, so the dividend that it pays is 1.85, and I think usually it is calculated yearly. So it means that for every share of the company that you buy, they pay you $1.85 per year. Okay, so and the yield is also the same thing, but the percentage of how much you can gain. Okay, they calculate it as a whole, and I'm gonna let you know how you can calculate. But before that, to find out whether the company pays monthly or quarterly, let's go to in the upper section, let's go to historical data. Here, if you click on forget about time period and everything else, frequency daily, if you click on show historical data, you can see that it gives you two options: dividends only, stock splits. And by the way, stock split means when the company for example multiples the amount of shares. Let's say, for example, Apple understands that its shares have reached $2,000. So $2,000 is not something that me and you or average buyers can buy. Okay, so what they do is to divide that by, for example, 500. Then a person who has one share of Apple, $2,000, if you divide it by 500, it's going to give you 4 shares. So the person will still have 4 shares, valuing total of 2,000, but the stock has been split to 4. Okay, which means that now the stock price is, instead of $2,000, the stock price is $500. So this could be more affordable to many people. So many more people can buy the Apple stock. Okay. So what was the topic? Okay, about the dividends. So to know whether it is monthly or quarterly, all you have to do is to click on dividends only and click on apply. So now you see that the date, it says 25th of February, and the other one is January. So you understand that it is monthly. Okay, because February, January, so sorry, as you can see, it was paid on the last time was paid on August, the other one September, October, November. So this way you understand that it's paid monthly, and it shows the dividend. Usually here you can see the amount but it says 0.154. This shows that every month for each share that you buy from the company, you're gonna get $0.154. Okay, so that's how it is calculated. But let me go back to the summary. In the summary, if you take a look at forward dividend yield, it shows $1.85. Okay, so now that we know that it is paid monthly, all we have to do is to divide this $1.85 by divided by 12. Okay, so let me just bring calculator. Bring a couple of calculators. Okay, so now we say 1.85 divided by 12. So you see, you will reach, so we're gonna round it. So you're gonna reach the exact same number that we saw when we were doing the historical data, 154. Okay, so every month you will be given $1.154. Now remember that for calculating the dividend, for the first thing you're going to want to do is to understand whether it's paid monthly or quarterly, and I showed you how you can understand. Okay, now We want to know, for example, if you have $100,000, how much dividends you can get from this company. So all we have to do is to take the price of the stock, 26.15, and then we're going to go back here to the calculator. $100,000, okay, divided by how much was that? 26.15 divided by 26.15 sorry, equals, forget about the what's after the dot, we're gonna just omit that, 3,824 shares. You can get 3,824 shares. Okay, now what we can do is to take this 3,824, and remember when we calculated this number to be 0.154, so we're gonna multiply this to 0.154, so we're gonna reach 588.89 or 0.90 cents. So for each, so if you have basically if you have $100,000 and you buy the shares of the company, every month you will be given $588. That's how you can calculate. There's also another way that you can calculate. But remember, if you can also calculate it with this 185, which is for the 12 months. But whatever you do, you have to just divide it by the time interval. If the time interval is monthly, you're going to divide the whole number by 12. If the time interval is quarterly, you're going to divide it by 4. So let me show you how it is. So now it is 185. So the price is 26.14. Now it's changed. So let's go and put like 100,000 divided by 26.14 equals 38.25. Okay, 38.25 multiplied by 1.85 equals, okay, $7,076, which again you're gonna divide it by 12 months. You see, 588 or 89. Okay, that's as simple as that. Okay, and if you see a little bit of fraction of difference, that's okay. Okay, it's not accurate, but that's the number that you get. So let's go and see how you can calculate the yield. The yield is exactly the same thing, but the calculation is a little bit different. So it's the percentage, 7.02%. So the way you calculate is easy. All you have to do is to go to your calculator, put $100,000 plus, you're gonna click on plus sign, sorry, plus 7.02, then you're gonna click on percent sign. Okay, if it was Apple iPhone, it would show you the percentage, but this doesn't, so you have to then click on equal sign. It shows you after a year your $100,000 becomes 107,020. So it shows you that it will pay you 7,020. So basically 7,020 is your, because if we were gonna, so right now we can deduct your initial investment. So you see 7,020. You can divide it then by 12 because it pays monthly. Okay, you see, as I said, it's not 588 per se, but you have to give it a 5 to 10 digits of margin of error. That is the margin of error that we have, but basically you're going to be given around $590 per month. So that's how you can calculate. Very easy. Okay, so that was about the forward dividend yield. Ex-dividend date is the date, one business day before the company determines the amount of yield that the shareholders can get. That's as simple as that. But there's something very important. If you buy the stock of the company on or after X dividend date, sorry, no dividend is going to be paid to you, okay? And the dividend is going to go back to the pockets of the company. So if you want to get the dividend, you must first find this X dividend date and then buy all of your stocks before this date. Even if you buy all of your stocks, let's say it is February 25, if you bought it, for example, February 24th, you would still be entitled to get the yield, to get the dividend, although you just hold the stock for a day or 2 days, I don't know, okay? So that's how X dividend date is. 1 year target estimate, the last one. 1 year target estimate is actually done by the computer, so they analyze the market and the stock and say, for example, an estimate of how much it's going to be. Again, it's not accurate, but it's a good thing to have. And about the chart, as I said, I'm actually not a fan of technical analysis whatsoever. I really don't like it. It's a bloody stock. Let's go to my own stock. Let's see what it. Let's see. Yeah, you see. Hopefully, it is green today. It went up by 3 cents. And by the way, I highly recommend you take a look at this stock. It's the only stock that I have in my portfolio, which you're going to see. And I have my own reasons for that. So I highly recommend you because I think this company is going to explode within the next 1 to 2 years. Okay. Anyway, so let's go back to the chart. In the horizontal axis above the chart, you can see the time interval: 1 day, 5 day, 1 month, 6 months. YTD means year to date, means from the beginning of the year till now. Okay. 1 year, 5 years, and max. Okay. And if you click on this, I'm not going to click, but this is a little bit, so it can give you kind of settings about the chart, but because again, I'm not a fan of these things, I'm not going to click on this. If you hover around by the mouse, you can see that it shows the time, depending on which setting you choose from the upper axis. Upper horizontal axis. If you choose, for example, 6 months, you see that it shows days. But if you 5 years, because this company is new, so usually it's so new. It's like I think it's 6 months or 7 months ago it went public. Anyways, but if you choose 5, depending on the time interval, it's going to show you months. As you can see underneath here in the lower axis, it shows month by month. If you choose, for example, 5 year. If you choose, for example, 6 months, it shows you day by day, okay? So it will change, basically. All I'm trying to say is it will change based on what you choose from the upper axis. And the vertical axis to the right always shows the price, okay? And also there is, as you can see, there's a histogram type of graph underneath that shows the volume, which this is normal. I think this is very normal. It's a very good thing. The volume, it is flat, but there were days that it was not that flat. And volume means the amount of shares being bought and sold. Okay, so that's for the summary about the chart. If you click on the chart, as you can see, it gives you some options. You can add indicators, whatever, but I'm not going to go into that. Okay, the other section is conversation. This conversation is my favorite section because every stock has this conversation forum, and people come in, and those who have bought the company's shares or those who are willing to become an investor, they come here and talk about the company and share their information. So this is very great. As you can see, you can, for example, and it gives you some options. You can, if you click on this, you can arrange by top reactions. So Yahoo itself will find the top reactions based on how many likes they received. Newest reactions, it will show you the latest reactions. For example, Kevin has posted something 4 minutes ago. Recently discussed means the name speaks for itself, means I think it is. It's kind of like the top reaction kind of thing. Okay, most discussed. Recently discussed is based on the date, but the one that also has more likes. Most discussed means something that is mostly discussed. I don't know their Yahoo criteria based on which it shows this. It shows this, but oldest reaction, as the name suggests, shows the oldest comment that a person has had, which the oldest comment is from Jordan 9 months ago. Okay, so I always choose the newest reactions. Now here you can put your comment. For example, I will comment search green day today. Okay, and let me give some hope to the kids here. Okay, and if you choose GIF, you can also put I don't know, whatever you want. So I put green. Okay, let me choose. My favorite one is this one. So if I click on this, it will post, but I don't know why there were some option Yahoo I think has taken it away from me, or I don't know. You could say whether you feel bearish or bullish or neutral on the stock. But now I'm just gonna click on post, and so that's how your post is actually done. Okay, and people can react. People can either dislike or like or reply. Okay, it's very simple. So this is about the conversation. Statistics, it shows you the statistics, the nitty-gritty details of any stocks. Okay, which again I don't really am into these things. Historical data we talked about. What's important is in historical data is if you want to know the company pays dividends monthly or yearly, it shows you here dividends, and you have to click on apply. So this company Very Good Food or Very.cn does not pay dividends. That's why you don't see anything. Let's go to stock split. We didn't have any stock split, but if you go for Apple, for example, you can see a couple of stock splits. Okay. Profile here is a very, very beneficial page. You can get information about the company. As you can see, their address, their phone number, sector, the sector that they work, consumer defensive, I don't know, industry, packed foods, full-time. You can see information, and if you scroll down, you can see key people in them. Mr. Michel Scott, which is the co-founder and CEO and director. Mr. James Davison, a co-founder, chief R&D officer and director. Okay, so, and here's the map about the company and a description about the company. Okay, so that's for the profile. Financials, if there's any financial report or whatever, you can see them here. Balance sheets, I don't think if it shows balance sheet, but you can go to their website, cash flow and stuff. Sorry, let me take some water. Apologize me for these dry coughs. Analysis doesn't show anything, but as the name suggests, it should give you some analysis about it. Options I'm not a fan of. So I really don't care. Options and warrants I'm not a fan of. I'm just a fan of stock, buying stock, and I'm a long holder. Okay, holders, it shows main holders, major holders. So for example, it says 28.61% of shares of this company, Very.cn, is held by all insiders. 0.05% held by institutions. Percent of float held by institutions. I think float means the one that they buy and sell. I mean the percentage of the stock that institutions buy and sell. One number of institutions holding shares. Okay, just one institution holds. And there's a mutual funds that holds this, Global Investors Fund. I don't know what it is. Okay. And sustainability, I think it's related to the environmental information about the company, but I'm not sure. Okay, so that's about it. That's about this whole section. Here's a question. Why it is 0? It shouldn't be 0. I mean, let me just refresh the page because I'm not understanding why it's 0. It's still like 5 minutes to 4, but Yahoo doesn't show. maybe my internet, there's a problem in my internet, I'm not sure. Okay, but anyways, seems that the market's closing. Okay, so the other things about, let's go to the upper section. We don't care about finance home news. You can get news about the company. Okay, and also if you scroll down, when you're on the summary page, you can see all the news and press releases of the company here. Okay, sorry, all of them are released here. Okay, so let's go again to the top. So finance home, news, video, watch lists. If you click on, it doesn't show anything. I just don't understand. This is not working. This is actually not working. If you want to add your watch list, you have to go to your portfolio. Here's where you can add your watch lists. Okay, when I click on my watch list, you can see my gains and losses. So it says from the very beginning, and it includes your initial investment as well. So all of my assets is right now, and I said I have only one stock, which is Veri.cn, is 176,100. Okay, it shows my day gain. So my day gain has been $299, nearly $300, and the percentage plus 17%. Total gain, here's where you can see your gross total gain without your initial investment. So total gain for me was 126,611, which is less. Oh, okay. So the market is why is it showing this way? I just don't understand. Okay, it changed. And anyways, it shows the percentage also, maybe because of the market closure, but it is still, my watch shows me 3:57 p.m. So why it's doing this? Let's refresh the page. Yeah, let's refresh the page and go to summary. No, go back to, if you want to go back to the stock, all you have to do is come here and click on this sign. So no, hopefully the market hasn't closed. If you see, usually Yahoo tracks up to 3:59. It doesn't show 4. I have never seen it show 4. As of 3:59 will be the last thing. But anyways, let's go back to my portfolio, my watch list, to show you how you can create watch list. Sorry, again. So by the way, as you can see, this stock, if you go to the summary of this stock, you can see that there was a time, I think 2 months ago or whatever, that it reached nearly 9.5. Now it is, now let's go to the summary. Now it is 5.87. I bought, my average is 165, so I bought when it was 165. I bought 30k share of it. So if I were to sell my stock when it was 9.5, I could make I don't know, nearly 220, 230 in gains, including my own initial investment. It would be around 300, around, if I want to round it. But I didn't do it because I have my own reasons. So if you want to know, you can subscribe, and I will make a video about very good food and why I didn't sell. Okay, anyway, let's go back again to my watch list. Okay, if you want to add, here you have to do it manually because it doesn't follow. It's not like you're a broker, so you have to click on add symbol, and here you can, for example, let's say add in something. Let's say I like Ryokan, dash un.to. Okay, so right now I have added this. So I can, what I can do is to, for example, how can I, okay, so I have added this. If I go to my holding, you see that it doesn't show anything. Okay, I can now edit this, but how? Add lot. Yeah, here's where you can easily tell Yahoo how much you bought of the company. So first, what you have to do, so let me just go ahead and let me go ahead in the summary and delete this. Okay, delete symbol, confirm. Just to show you once again, all you can do, I think, yeah, you can do this in any page that you are, whether in summary or my holdings. So let's go click on add symbol. Let's add it again. Okay, REI dash. Okay, so we've now added. Let's go to my holdings now and click on add lot. So when you click on add lot, let's say for example today, which is March 11th, let's say today I bought how many shares? Let's say for example, I don't know, 1,000 shares. 1,000 shares cost, how much was it? Let's say I bought it for $20. Okay, so these are the numbers that you can give Yahoo and it will calculate your gains based on that. Okay, so it says your market value, it says your gain and everything. So you don't necessarily care about annualized gains and stuff like that. All you have to do, do not touch this. So in the notes you can put the notes you want, but do not touch high limit and low limit, whatever. Okay, it gives me an error. Why? Let's go find out. REI, open and see. Oh, ring energy. No, I don't want this. So no, let me just go ahead and remove this. So I go to summary, and I remove this. Okay, so I click on REI and then I remove. So what I'm going to do is to delete symbol, and after I click on confirm, it's going to be deleted. Okay, so now I'm going to add REOCAN. I just wanted to add REOCAN, REI-UN.TO. That's what I wanted to add. Okay, 19.23. Okay, so let's go to my holdings. Let's go to add lot. Here's where you can add lot. Let's put the date for today. Number of shares 1,000. Cost per share 19.23. 19.23. Okay. So based on what you, and I can put notes, and I don't really touch anything else. Okay. So that's how it is. That's as easy as that. You can just add how much, but why it doesn't calculate? So that's a question. Daily gain, total gain. Because I put the date for today. Let's go and change the date. Let's say I bought it in February 2020. Okay. Let's say I bought it 2020, whatever date. So now it calculates, right? Now it tells me how much my gains was. So that's how you can easily add or remove. Let me go to summary again to remove this, because I don't want it to be. Okay, confirm. Okay, so now as you can see, let me just explain a little bit about what you see here. The last price of the last price, depending on the time that you look at the market. If it is after markets, you're going to see the last price when the market closed. But if it is during the market hours, you're going to see just the last price. Change, as you can see, changes. Okay, the percentage of change, like how much gain or loss you had. Currency CAD, which means Canadian. Market time, it shows the time right now. Volume, it shows the amount of the volume per day. Here it shows per day. Okay, the amount of shares of this company being bought and sold. Shares, it shows the amount of shares that I have. Okay, it says 30K. Average volume, again, the average volume, as you can see, it says 3 months. It just shows you for the past 3 months. Okay, so for the past 3 months, the average volume of very good food has been 423,714. Day range, highest and lowest of the day, and 52-week range means the highest and lowest for the last year, which I don't understand why they say 52 weeks. Please let me know, because 52 weeks means 1 year. Day chart, it shows you a mini chart, and market cap. So market cap, as I said, is the value of all the shares, of all outstanding shares of a company. Okay? So based on your portfolio, just because I have one stock in my portfolio, it shows the news about the portfolio, about your portfolio. Just because I have, it shows only about the very good food company. But if I had more stocks, it would be showing news from other companies as well. Okay? Now, I told you how you can add. That's how you can add. So if you go to my holdings, for example, now you can see when I added and how much I bought. Okay, so very first one was 15th of September. I bought like 27,866 shares, and by the way, it was my first time. Sorry. So as you can see, the lot of my order was 27,866. So I didn't know that I had to put like, you know, the lot of the order should be something multiple of 100. Okay, so that's, you know, it may incur a lot of ECN fee. Cost per share was 1.65. But anyways, I think I did it. I think I bought like 27,800 in that same day, and I also bought another 66 in the same day. So I didn't put it together. Hopefully this was something I knew, because they told me before that the lot of my order should be a multiple of 100 in Questrade to waive ECN fees. Okay, as you can see, the cost was 1.65, market value, whatever, day gain, total gain. It just shows for this particular lot. Okay, and the high and low, I didn't touch anything. So the second time I bought this, I actually did an average down, which means when the price decreased to 150, I bought another 2,000 shares. Okay, 30th of September. Okay, so for this lot, the market value is 11,000 something, and then it shows the day gain and total gain. And as you can see, the last lot that I had, I bought 134 on 12th of November 2020, and the price was 3.8. Okay, so it shows how much I gained for that last lot. This is a very, very handy feature of Yahoo Finance. I actually like it more than Questrade itself. Anyways, so that's how you can add, and by clicking on this arrow type of thing, you can just bring this and see it. Okay. Fundamentals, I really don't know what they are. Market cap, average volume, EPS, forward P, dividends, forward annual rate, forward dividends. So these are the fundamentals. These are some of the statistics you can see. Okay, I'm not gonna go and talk about them. Create new view. If you click on create new view, you can, for example, select to show you symbol, exchange, percentage of change, average volume for 3 months. So these are the things that you can play with and learn yourself. Okay, I don't think if there's anything remaining here that I can talk. As you can see in the top right, you can do create another portfolio. You can print this, you can import portfolio or export portfolio, and you can go to the settings. If you want to play with settings, it's very easy. So let's go back to see if there's any. So in the top part, S&P is the one that I talked about. So it's basically S&P TSX is the one that they take, for example, I don't know, 500 of the top companies, and they index their losses and gains. S&P 500 is for the United States. DOW, Dow Jones, CAD, USD, the difference between of these two currencies. Crude oil, as you can see, Bitcoin. Wow, Bitcoin is 72,000. It used to be, when I arrived in Canada, it used to be, I think, 500 or something. Only if I had bought, but who knows? The stock market is all about not knowing the future. The beauty and the sweetness of the stock market is you don't know anything about the future. Who would have thought that, you know, a cryptocurrency like this could reach $72,000? Anyways, and you can click on this arrow to get anything. But remember that now it says, you see, Canada market's closed, so it tells you that it's closed. What else? My portfolio. Oh, my screeners. Okay, in this section, if you go to my screeners, equity screener, here if you go to equity screener, here's where you can, for example, imagine you want to find all the stocks under $1 in Canada, all of them. Okay, here's for you. You go to my screeners and equity screener. Okay, mutual funds, you can find mutual funds. ETF, you can find ETFs. Okay, so equity screeners, region is United States. Region is chosen automatically. I mean, the default is United States, so you're gonna go type Canada. So we're gonna type Canada. That's it. And you have some criteria. For example, you can arrange them by market cap, small cap, mid cap, large cap, whatever. You can also determine the price. You can, if you click on the price, you can say less than greater than an amount. So for example, you can say all the stocks above $1. Less than means all the stocks, for example, is below that particular number. Let's say below $1. Equals means only show me the stocks that equal $1, nothing more, nothing less. And between, you can say, for example, stocks from $1 to $5. Okay, so let's go, for example, to choose less than $1. You can add sector if you want. You can add industry if you want. You can add another filter. If you click on add another filter, it gives you a lot of more options based on average volume, based on beta, based on 52-week price, high, low. Okay, these are things that you need to play with them so you learn. Sorry. So now if I click on find stocks, it should show me stocks that all of them are under $1, as you can see, under $1. Okay, let's see how many it found. 1,914. Okay, and you can click on each, and you can, for example, check each of them, and you can add to portfolio easily. After clicking on each one of them that you want, you can just come here and add to portfolio, which I'm not going to add. Okay. You can also see the heat map. Heat map is also showing you all of them like this. Okay, so let's go back to now. So let's go back to the amount and choose equals $1. Let's see what it gives us. So it shows you all the stocks in Canada that equal $1. That's how you can find stocks. If you are looking for example, penny stocks under 5 cents, here's for you. Okay, let's say, for example, under, let's say greater than, less than, for example, 5 cents, 0.05. Okay, these are the stocks under 5 cents. That's how easy you can find. Okay, so let's go to the upper menu section. There's nothing that I see. Market data, calendar, stocks, losers, stocks, most winners, market data, industry news, currency converter. Let's go to currency converter. So in currency converter, does it show us? Okay. So how come it doesn't show anything? I really don't know. It should show you basically. I clicked on currency converter, it doesn't show. Okay, here it is. So for example, you can convert, let's see how much 1,000 Canadian dollar to US. 1,000 Canadian dollar equals 798.70 US dollars. That's how you can use this currency converter, and also you can see the chart. I mostly use Google for converting, currency. Anyways, and when you go to the home, when you go to finance home, it shows you the news, the latest news, actually, definitely. In the right part, it shows you your recently viewed stocks, cryptocurrencies, the differences of currencies, trending tickers, the ones that people, that have, that people buy and sell a lot, okay? Stocks most actives, the ones that have been most active, as it says, gainers that were all green, losers, all of them were red, mutual funds, futures is future trades, okay? So again, this one is for very, very professional people. I don't really care about all these things, but just so you know, okay? So that's about it. In the next section, we're going to be taking a look at the iPhone Stocks app, which exactly shows you the same information from Yahoo Finance. Okay, so this is the last section of the video in which I'm going to talk about the Stocks app. Okay, the very first thing that you see in the Stocks app is your watch list and a curtain type of slider, which if I take it and move it up, as you can see, it shows you all the news related to the stocks you have in your watch list. And if I move it down, you can see your watch list. So this is your watch list here. Underneath, if you take a look, it says from Apple News and Yahoo Finance, which means that the news that it shows is from Apple News, but the financial data is from Yahoo Finance. And on top, it just shows the date, and you can see a search bar. If you touch it, you can just go ahead and search for any ticker symbol or the name of the company. So let's say, for example, we're going to take a look for Apple. So here it is. The first one shows Apple, okay? So if I want to add it, all I have to do is to just touch it once and touch add to watch list. But I'm just going to show you something else here. So I'm just go ahead and cancel. There's an edit button right on top to the right. So I click it, and then if you go further down to the right, you can see a plus button, which if I touch it again, it's going to give me the same search bar. So okay, so now I'm going to touch Apple, and just for the sake of this video, I'm just going to add it to my watch list. When you add a new stock, it just goes to the last it just goes to the last to the bottom of the list. So if you want to take it up, you have to scroll down. As you can see, it is in the last option. So you're going to touch edit. And when you touch edit, you can remove any stock. As you can see, if I click, if I touch that minus button, so it gives me the option to remove. And but I don't want to remove, so I'm just going to touch it again. And as you can see, there are 3 bars besides each stock. So you can easily touch that and hold it and move the stock you want to wherever you want, okay? So now I'm gonna just remove Apple. So, because I don't want to have it. Okay. So let's just talk about the things that you can see in this watch list. Usually it shows the ticker symbol. So first it shows the ticker symbol, then it shows you a mini chart, then it's gonna show you the price, the current price of the stock, and underneath it, as you can see, there is a rectangle that if you touch it, it's gonna give you 3 types of information, okay? As you can see, when I touch, it changes, right? Okay. So the one with the percentage shows you the percentage of gains and losses, okay? If it is green, as you can see, it means if it is green, it shows with plus, which obviously means that there's 0.57% increase in the price since the last time. And the other one, doc.v, for example, if you take a look, it shows minus 2.34%, which means there was a decrease, so it shows in red. So that's the first information it gives you. If I touch it again, it shows the dollar amount of decrease or increase. Okay, so here it shows that since the last time. Okay, I forgot to mention that today is Sunday, so Saturdays and Sundays are weekends, and thus the market is closed. So it shows the price for Friday till 4 o'clock, because as I said, 4 o'clock is when the markets close in Canada, okay, Toronto time. So okay, and yeah, as I said, the second type of information that it shows you is the dollar amount for increase. And if you touch it once again, it's going to show you the market cap of the company. And market cap is actually the value of all the outstanding shares of that company in the market. Okay, so I just want to leave it the percentage. And notice that when you change this, if I touch the stock, so, and by the way, this Veri.cn is my own stock and I highly recommend it. So this, as you can see so it just, when you touch basically when you touch any stock, the information it gives you on the top, the stocks that you see are moving. Those are the ones that are in your watch list. Underneath, it gives you the ticker symbol and the full name of the company. And a little bit further, it gives you the price. And if you take a look, it shows you the percentage of increase and decrease. So let me just go back and touch this rectangle once again so that it shows me the dollar amount. And let me touch the stock itself. Okay, now you see that when you do that, besides the price of the stock, the data also changes to the dollar amount. So it now shows the dollar amount. Before it used to be percentage. And let me just go ahead and touch that rectangle once again. So let me touch the stock again. So yeah, as you can see, this can change what information you see here as well. Okay, so let me just go ahead and turn it back to percentage. Okay, so it's basically a very simple and nice UI when you want to take a look at your stock. So the chart, the vertical axis, as you can see, shows the time interval: 1 day, 1 week, 1 month, 3 months, 6 months, 1 year, 2 years, and if you just pull it to the left, 5 years, 10 years, and all. Okay, so that's the interval. And the horizontal this was the horizontal axis. So the vertical axis, this was the horizontal top axis. The vertical axis to the right shows the price, as you can tell. And the vertical axis to the bottom, depending on which setting you choose from the top axis, changes. For example, if you choose 1 day, it shows you the time intervals, like the hours, okay? 10, 11, 12, 1, 2, 3, okay? And if you choose 1 week, it's gonna change to days of the week, okay? And if you change it to, for example, 1 month, again, it's gonna change to the weeks of the month, or the time interval extends this way, kind of like expands, let me say. Okay, now notice that when I choose 3 months, it shows months. Okay, if I choose from the top, if I choose 10 years, the lower horizontal axis shows the years. Okay, and as you can see, there is a histogram type of graph which shows the volume, or the average amount of shares being traded. Okay, so let me just go ahead and put it to 1 day. Okay, and the chart itself, as you can see, the chart itself is green when there's an increase of the price and when there's decrease, it shows in red. You can, if I put my finger on it and move, as you can see, it shows the date and time and the price, okay? And it also is dependent on what setting you choose, what time interval you choose from the upper horizontal axis. So let me just go ahead and choose, for example, 3 months. Now you can see that when I put my hand and move it to the right or left, you can see that it shows days, okay? It changes day by day. And if I, let's say, choose, I don't know, let's say 1 year, just because this is a very new stock, it shows days, but usually it will change month by month, okay? So now you can also put 2 of your fingers. You can also put 2 of your fingers and compare the prices to each other, okay? That's how it works. You see, it shows the differences between the two and the time also. And something else to mention here is if you want to go to the previous or next stock, you can always slide to the left. Let me just slide to the left or slide to the right, okay? That's as simple as that. So to talk about the data that you see underneath the chart, let me go ahead and bring up Ryokan because it has more information. Okay, sorry. So now let's talk about this data arrangement that you see underneath the chart. So the very first thing you see is open, which means the price when the last time that the market was opened. So this is that price, okay? The very first trade that was done was, for example, for this particular stock, Ryokan, which is a real estate investment trust, was 1909, okay? High means the highest price. The highest price that it went last time, okay? Because as I said, today is actually Sunday. So tomorrow when the market's open, it shows the last price basically, based on the last, price. So this was high, and the low is also the lowest price that it was based on the last day of trading. Volume, as I said, means the number of shares traded on a particular day. So we have average volume as well. Volume, actually, this volume shows the whole amount of outstanding shares being traded, because we have average volume as well. Average volume usually, I think this volume is, the interval is 3 months. I'm not sure exactly, but that's how it is. And the average volume shows the day, during the day. So how many shares, for example, on average were bought and sold during the day. That's a very good indicator of how healthy the stock could be. It means that if you buy the stock, you can easily sell it, right? Liquidity. PE, price to earning ratio, shows the profitability of the company. Usually I really don't care about these things because I don't know why it doesn't show it for this particular stock, but let's go to a new company. Let's go to, for example, my company and see. It doesn't show. I don't know why it doesn't show, but anyways, the higher it is, they say it's better, but I don't really care about these things because sometimes new companies have even negative, or IPOs have sometimes negative PE, and you cannot just say that because it's negative, so it's risky and it's not a good type of investment. So I'm just telling you so that you know what it is, okay? Not necessarily that it's an important thing. I just want you to get familiar with it. Market cap means the value of all outstanding shares of this particular company. So let's just pull it to the left. 52-week high means the highest price for the last 52 weeks. Please let me know in the comments if you know why 52 weeks equals 1 year. So why don't they say 1 year high? You know what I mean? I just don't get it. So 52-week high, as I said, the highest price during the last year. 52-week low, the lowest price during the last year. Average volume, as I said, average volume, I think average volume, not sure though, but I think average volume is calculated on a, I don't know, daily basis, or maybe every 3 months, but that's what it is. You can also get more information if you want in Yahoo Finance, okay? So, but that's basically, there's an interval, so it's not like, it's not, I think when it said volume, because, you know, as you can see, both of them are kind of in the same range. This one is 1.5 million, and the other one is 2.008 million, which means, like, you know, so there should be a time interval, but basically average volume means the average of traded stocks of the company. So yield is actually the kind of like cash, I would say, or I would put it that way, the interest that the company pays for your money. And how it is calculated is very easy. If you see, so this is the dividend yield, actually, the dividends that the company pays. So how it is calculated is very easy. So you need to know how much money you want to invest in this particular company. Let's say you want to invest $100,000, okay? This company pays 5.04%, and I think it is here calculated for the 12 months, okay, for the next 12 months. So it's not like per month. The time interval is yearly here. It shows yearly. So all you have to do is, let's go and bring calculator. Sorry. So let's say you have $100,000 and you want to know how much this company pays you as a dividend yield. So all you have to do is to add, as I said, 5.04%. So you can see that it pays you $5,040 per year for your $100,000, okay? And if you want to know how much it is monthly, because, you know, as I said in the previous sections, usually REITs or real estate investment trusts are mandated to pay dividends monthly, okay? So if you want to know how much it is monthly, all you have to do is take this $5,040 and divide it by 12. So every month you're going to be receiving $420, okay? So for every $100,000 that you put, okay? So let me just go ahead here. Okay, the next thing, okay, let me just mention here something. For calculating dividend, there's also another type of measurement that this app doesn't show, which is called DPS, dividend per share, which I think I covered it in Yahoo Finance. Dividend per share is exactly the same, you know, calculated the same, but based on the amount of shares that you can buy, not the percentage. Based on the amount of shares. For example, usually they say, for example, DPS for this company is $1.47, which means that for every shares that you buy of this company, they're going to pay you $1.47 per year. Okay? So that's how it is calculated. So beta is actually a value that shows the risk, the overall the risk of this company in comparison to the overall market, and it has 5 categories. Okay, so if beta is more than 1, for example, I don't know, 1.47, 2, or anything above that, the stock is considered to be aggressive, because it's the risk, the movement, whether decreasing or increasing in the price, is more than the movement of the market. So that's why they call it aggressive. If it is equal to 1, it means that the movement is exactly the same as the market. So if the market, like for example, goes up 2%, this stock also goes up 2%. So that's one. If it is from 1 to 0, or actually let me say from 0 to 1, then the stock is called defensive, which means that the movement of the price of this stock is less than the market. If the market, for example, I don't know, increases by 1%, this might increase, I don't know, based on the beta, it might increase 0.47, for example, 0.50, whatever, okay? And the fourth one is if the beta is 0. So if beta is 0, it means that the stock movement does not follow the market's movement. So it goes its own way. It may, for example, if the whole stock market goes up, this particular stock may go down or may go up, okay? And if it is, the fifth category is that if it is sub-zero or if it is negative, in that case, the movement is going to be exactly the opposite of the stock market. So let's say the stock market goes up, this stock goes down. If the stock market goes down, this stock goes up. So, sorry, for this particular stock, we see that it's minus 20. So it goes against the market. Sorry, it's, apologize. So it's 1.17, which is a little bit riskier than the whole market, okay? And the last one, earnings per share. Earnings per share is like price to earnings ratio. It also shows the profitability, as I said. These two things, the price to earning ratio and earnings per share, show the profitability of a company and also the expectations that the investors have. Okay, and as I said, it might be a negative value. So this might deter you from like thinking that, okay, this is going to be, this particular stock, Ryokan, has been around for nearly, 20, 25 years. So it's a very solid company. And yet you see that earnings per share is minus. I think it's because of the corona and the market crash that we saw started from March 2020, okay? So that's for this section. Underneath, you can see it says more data from Yahoo Finance. If you if you touch, it's going to bring you to Yahoo Finance website, which is exactly the same information. It gives you exactly the same information as we saw on the website, but in mobile, okay? It opens in Safari. Okay, now let's just scroll this up. Let's go to my own stockveri.cn. Let's scroll this up. As you can see here, when you're in the page or in the page of the particular stock you're looking at, when you scroll it up, what happens is it shows you all the news about that particular company. Okay, all the news about this particular company is listed here. And in between, you might see ads, of course, because this is Apple. Okay, so as you can see, it's all about very good food, all the news, and everything that they released since the beginning. Okay, so let me just, for example, go ahead and see what was the last news that we had. The Very Good Food Company completes acquisition of the cultured nut, which is a very good thing. It's a good news. And by the way, I also heard that they're trying to list in Toronto Stock TSX Venture, Toronto Stock Exchange Venture, so which gives them more spotlight or visibility. And as I said, I highly recommend this to you. I just, if you have some time, you can just go ahead and search this company. I'm going to also make a video about it, so if you stay tuned, you're going to see why I bought like 30K shares of this. So I think this wraps up this section and also the video. I don't think if there's anything remaining. I really wish it was useful for you.